Alright guys, sorry about all that. There was a lot I had to do with the stream this morning. Let's go right into it. ADP, private payrolls, rose by 140,000. Good thing I saw that. Good thing I saw that. Making sure I spell it right. Making sure I spell it right. I hope you guys are doing well. I'm Justin. Leave your comments down below. Hit that like button. Subscribe, gang. What are you watching today? I want to know. Throw that right in chat. And we're gonna finish this week off strong. Alrighty. The S&Ps are pulling back off 510. We mentioned that yesterday. I am looking. Look, like I said, 510, guys, 507. We've already made it support. There was resistance yesterday. I think this is all going to set up. It's going to be hilarious if this all sets up at 507 when Powell starts to take the stand. I, again, think you're going to get a lot of theatrics because it is politics. And that's what they're going to do. That's exactly what they're going to do. They're going to lean on unemployment, and they're not going to do their jobs. So, you know, that's that. You guys know how it is. Shit, I spilled coffee on my phone. Give me 1 second. I do apologize. I gotta get better at this. Okay, let's get right into it. So, 510, we talked about that yesterday. I wish I knew why this was doing this. And I really wish I knew that when I bought this mouse, I'd have a really hateful relationship with it. Anyway, you know, we want to watch this level here. And you can even see 509. We've already cleared it. We've cleared it. We don't have anything stopping us to get back up to 511, back up to those highs. So I'm not sure if you're going to get that 507 test. I think you're going to get a lot of strength, and this market's going higher. I think they just wanted to tilt everybody, put everybody on tilt, and make everybody wonder what's going on. Look at this. This is kind of a cup and handle. Kinda a cup and handle. The only thing I don't like is, you know, you want increase in volume there. And I wouldn't consider it really a cup and handle, but, you know, I don't know. Maybe, who knows? I'm not going to try and figure it out like the Da Vinci Code. All right, Q. So, anyway, 557. If we can't break through 510 on the SPY, if we cannot break through 510 on the SPY, you guys, look for, if you can't break through 510, which is up here, where are we at? Right here, 510. That's that pivot high. All right, you guys see that? That pivot high right there? We got to get through 510, and we got to hold it. If we get through that, we got a gap. You have your gap fill. So if we do get through there, just know we are headed up to this gap here. And what I'm going to do, all right, I'm going to throw that right there. Let's do it. All right, that's the SPY. They're talking about bank term lending right now. Huge gap, huge upside. We said that yesterday for the Qs. 439, we're above it. We're 539.50. You do have that pivot high, though, right here. That's at 440. I'm going to put a dotted line there. You know, I don't think it's going to be much to stop us right there at that point. But I'm going to put it up there anyway. Okay, and we're going to cover some of the news. I just want to go over the over indexes. So if the overall indexes are going higher, we think we can get up to that gap fill, right? 440 gap fill. Um, I mean, honestly, I think you got to more so worry about um, the up top, that little double top that you have up there. And how I would do this is, like, this is going to tell me here, yeah, we've kind of pretty much made it. And I got to remember, you guys can't see that much. You have some minor levels here on the cues that I would pay attention to. But .440. 440 would be a very nice level to pull into for support, guys. For anybody that sees that, I'm not sure if there's even anybody here, but if anybody looks at 440, that's a really nice level. All right, but let's get into it. We'll go see what we have here for market movers. We'll put that up. But we're looking to get up into that gap fill. It's pretty simple. Pretty simple. Dude. Oh, Palantir's on the move, guys. Palantir's on the move. CrowdStrike, we know about CrowdStrike, up 23%. We're going to cover that. Palantir rallied 7.5 off the news. Palantir received a contract from the U.S. Army. Nice. This is going to be a sick trade. Everybody's going to be looking at, like, there's so much to look at. ChargePoint shares dropped. The charger station provider disappointance on guidance as well as revenue. JD.com posted quarterly revenue increase and launched a new $3 billion share repurchase program. So JD.com. All right. Raw stores, not worried about that. Coinbase. Coinbase shares of the crypto exchange jumped 5% on both Bitcoin shares higher Wednesday. I knew it. I knew this was going to happen. So we're going to look for that. And I'll cover this again. Box stock added 2.9%. All right. Powell reinforces positions that the Fed is not ready to start cutting rates. Yes, we know. Okay, you're going to be late, just like you are on everything. We get it. All right. This is crazy because come on. All right. Okay, so the cues, guys. I am looking for, really that pivot high up there. This is the cues, right? Yes. Why? Because it looked different. Oh, the 5-minute part up there. That's what I was wanting to show you guys. Was this level here? I feel like this level here is more. Man, it's tough. I'm going to show you guys what I'm talking about. Because I think I don't want to have too many lines on my chart, but I feel like there is a significance there. Look at this wick, right? These wicks, especially on a 5-minute chart, I just want you to pay attention to them. So don't be surprised today. I know it takes a while, but look, right? Resistance, support, resistance, resistance. You break it, support. Obviously, 441 is an area that is nice, and I do have that there. Okay, I can live with this. I can live with that at 440.40. All right, I can live with that. The reason why is because, look, it lines right up with this shit. Not really, because I think it's higher. But still, you know what I mean. The wicks go down in there. All right, so let's go into the names. We'll start with semiconductors. We will start with semiconductors. I don't know why my phone's being crazy. Randomly putting out noise when it shouldn't. Okay. Why does it feel like it's struggling here? I personally don't like using Thinkorswim. I mean, it kind of has its down points. I like it, but I don't know. I have to see where this goes to. And look, it goes right to that point. This is telling me, guys, that this is where we need to put it. We got to put it right at 440. You know, you can always make it for that whole area, but I'm doing that. That's where it's at, 440. It's a psychological 440 level. If you want to, like, throw a box up there to cover, like, you know, this up to 441, I would watch that. I would watch that whole area between today and tomorrow of 440 and 441. You know, I'm going to put this there, and then I'm going to make it dark. Man, I think that's our resistance level. It's a nice level. All right. I'm not going to do that. Scratch that. So 440. If we break above it, we got a little bit of resistance up above us at 442. All right. I'm going to keep it at that. You can see here support, resistance. You know, if this is this our lower high, it could be. I don't think it is, but you know, I would like to see a pullback. We had a down day. What do we look for? We look for a pullback to 437. You know, maybe you start testing yesterday's close, depending on where we open up at. So that's a pivot high there. Market's going to start pulling back from where we are right now. That is, damn, that's 0.8%. All right, let's keep it moving. I do apologize. AMD. So let's go to the daily chart. You can see it kind of went up there and got pulled back. Looks like it could be putting in an island reversal. I take that back. I would not consider that an island reversal. I want to know why my charts are doing this to me. Because this should not be doing that. It shouldn't be doing that. Month, week. Maybe that'll help. Okay, AMD. AMD, you're right back up there. You can see you're starting to get a little bit of resistance up at your high at 211. So watch 211. Okay. I would like to see a pullback into yesterday's close. Okay. This is more of a significant level here at the base at the base here at like 207. 207, 20, what is that? Yeah, 206. So 206, 207. I would say 206 because it's got a double bottom there from Tuesday. And you can see here, you made it resistant support. Let's see what happens. If we think the market's getting ready to pull off of that level, then hey, you know, we're going to get that pullback. I don't like that I have two different levels on there. I mean, that was the pivot high, and that was support there. So,
this maybe opens the way for the two main candidates, Roe, but there's still talk about a third party, as you know. So, I don't know.
Let's see what happens. We'll see what happens with it. All right? Let's see what happens with it. It's up at all-time highs. It's up at all-time highs. So I also want to look at, we're going to be looking at CrowdStrike in Palo Alto, see where they are. So you can see here, this is where I wanted like a pullback to. You got to watch this level as well, man. I don't, I kind of wouldn't consider it a level, but I would. Okay, I would. You have, I don't know. I'm gonna let AMD do what it wants to do. I'm just gonna watch SMCI. So what we could do is take SMCI, and Jesus Christ.
But if 40% of voters said that Trump's policies helped them personally, and that's double the number of people that said President Biden's policies helped. 43% say Biden's policies did the opposite and didn't help. Why? When you see GDP and the jobs numbers and the stock market, why are people still...
All right, SMCI. So SMCI is up here holding that level from Tuesday, that upper support level. Looks like AMD is lacking it, right? So it's up there. Actually, it's not. So, yeah, 207, 207. SMCI, that level is going to be SMCI, $1,118 for the long, gang. $1,118. All right. So. All right, I need to make some money, so if we could get some comments going. What are you watching today? It's a struggle out here, bro. It's a struggle. For real, it's a struggle.
The other thing, Congressman, that I think is just, we hear about it again and again, and that is the number of people that worry about, even right now, there's some question as to whether the president has lost a step from a couple of years ago. And then you think about what it would be like next year, year after that, really 4 years down the road. And I know you saw the other poll that even Democrats, people that voted for him last time, 61% now feel that he's too old to do the job. How do you counter that?
All right, FSLR coming back up in 2.
No candidate's perfect. I mean, you're not a 49ers fan. I mean, if you were at the top of the ticket, do I admit that age is an issue? Of course. I mean,
161.50. 161.50. All right, we'll have to see what this sector does. Again, I told you guys the other day, I'm going to let this sector tell me what it wants to do. All right, I'm going to let it. You got a nice gap there between the 50 and 200 day. If I see it making higher closes, I'm going to get the long. I'm going to look for the pullbacks, get the long. I think, FSLR, that 160 level is where it would be that I would look to get long if I decided to get long. Again, if I decided to get long. So
nothing that the government did with inflation, that it's price guide. I know we're going to hear that tomorrow night. It's good. We did it in the last State of the Union. All the blame is always pushed off
on someone else. That's exactly right.
For raising prices and gouging. And I think that's part of why the public just finally rolls their eyes at no one. The border. What do you tell me about the border, Ro? Are you going to tell me that it's Republicans' fault for not supporting that bill that would have let 5,000 people in? That wasn't really, an effective, probably not as effective as some part people would want for the border. But for 3 years, there's been no attention paid to the border.
Yo, Joe Kernan's going off right now, guys. My boy's going off.
I saw your exchange with Secretary Buttigieg, who I like and respect.
Like, seriously, he's telling the truth. And the reason I bring this up is because he's right. If there's price gouging, then
it's Republicans' fault for
then all that means, if there's price gouging, then all that means is there's plenty of room for competition for someone in there to sweep them up.
An effective, probably not as effective.
Yo,
as
my
some
boy's
hard people
was
would
going
want
off on him.
for the
Watch.
port. But for 3 years, there's been no attention paid to the border by the
Oh,
Biden
he's already passed
administration.
it. Anyway.
You know, I saw your exchange with Secretary Buttigieg, who I like and respect. Here's what I'm going to say: people are sick of parties blaming each other. I don't think.
Oh, here we go. We're gonna go. We're just gonna agree. We're gonna go with the agree route. All right. Palo Alto. Obviously, CrowdStrike. We're gonna be watching CrowdStrike and those cybersecurity names like we should have been doing a long time ago. Okay, a long time ago. These things have been ripping for years. This is their time to sell. So, be cautious, my friends. Be cautious. All right, you have a really nice like wedge forming here. Now we want to see the reversal. Where's that wedge going to take place at? That's what we want to know. Oh, come on. All right, I want to touch into some banks too.
Do you have an optimistic viewpoint that you can share with me, so I can look forward to that instead of red?
I do, because we're still the greatest country in the world. Look, we've had Donald Trump and Joe Biden, and this country managed to have a better economic record than any other country in the world. It managed.
That's true.
The polarized situation.
The thing is he just said it right there that with Donald Trump and Biden, but it really is because Biden just hasn't undone a lot of the regulation that was undone from Obama and crew, so it's really easy to sit here and say we have this and that, but what if you would have taken over with Obama? You would have just kept that regulation. You would have just continued to raise capital gains, all that stuff, and look, it's working, and they're going to take the blame. They're going to take the award for it. They're going to take the award for it. So, Palo Alto, she did not have a good earnings. Okay, she did not have a good earnings. So what I will watch is I'm going to watch the yesterday's low and yesterday's close, guys, for an opportunity for the long side. First, I got to go see what crowd's doing real quick. All right. I just can't. I know. Look, I cannot get over that Microsoft trade yesterday. I know. I can't get over that Microsoft trade yesterday. It happened so fast I couldn't even get in. I know. Shit was crazy, bro. Look at that. That was one of our top plays. Coinbase, Microsoft, Tesla, Apple wasn't on my list. Obviously, it was there to look at. But this was the top name that we had that rejection the day before. We got up there. We opened below it. You look to go in to like tap that area and see if you're going to break it. And it couldn't. Right? It closed below it. And then bang, that's it. That was your sign. It was 2 days ago. What was that, Monday? Monday told you, hey, we're not going back up there. We know this because we've been trading Microsoft. We know this from that. You went right up in there like everything was good, and then bang, you got rejected. So this was a sick trade. I think that was a sick trade. I'm upset that I wasn't able to take part in it. I can't watch everything at once, and today I am going to fix that because today I do have a setup where I'm going to be watching a few different names today. All right, but let's stick with the news. So CrowdStrike, CRWD, you can watch Microsoft. It's, you play the long, you play the short, all for the bottom and the low there. All right, CrowdStrike's just hanging out. CrowdStrike's just hanging out, not moving. Expected. So that's a bummer. PLTR. Let me do something real quick. Look at Palantir ripping and roaring, gang. All right. Let's go here. Boom, boom, boom. And Norwegian Cruise Lines as well. CSLA cuts NEO to outperform after Q4 report. They reported earnings yesterday, if you guys do not know that. So let me look and see if that had any bearing. NEO. Okay, it's pulling back. Okay. There was news yesterday with Disney. I'm kind of curious what we're going to get here with 113. 113 on Disney. Really, it's not 113, but I would say 113.50. 113 and 113.50 on Disney. I want to see if this strength is going to continue. All right, I think it has a little more room to the upside. All right, so what this could be is a pullback. All right, this actually has room up to 120. I'm thinking about a swing trade on it. If the markets give it to us, I might take a swing trade on Disney. Um, you know, I wouldn't consider this a cup and handle just yet. Um, but this is a nice flat top resistance here that you guys can see here. Um, I kind of wish there was like a 20-day moving average 90 MA up there, which it will once we open. I think I do want to look for a long off of 112. Really, we're up above there, so we're at 113.10. Um, let's see, we're right here. Look for a pullback into yesterday's close and see if we can't try. I don't like this. That's a long tail. All right, there was news yesterday that came out on Disney. I don't remember what it was. I came in late at the end of the day and was like, I heard Marvel something. So I don't know. It obviously didn't mean much because it didn't close down or up like crazy. It kind of just stayed with the flow. You had that pop and then it just took you right back. You have a little bit of a double bottom there. Um, you know, I wonder if we get an entry up here at 112. I'm not sure if we will. 112, 111. So it's about $1 wide. Those are the two entries. Yeah, I don't know if we're going to get it. All right. The thing is you got to watch up there at 114. But I think we have room, guys. I do. I honestly do. I think we have room on Disney. Because it's got, if you look on the daily chart, this thing is grinding up to that previous support level. Right? Don't fight the trend. It can keep going. The market's going higher. Like, we're in a bull market right now. All right? Things are going higher. So if I take you to the daily chart one more time, this is an idea. I'm going to get right into Palantir. Okay, let me take rid of this. Okay. See, we already got up through there. That's what this is exactly where I'm saying 118. All right, I think it has room because you have support here. Right? Support there. Oh, here we are. What am I thinking? Right here. And look, we just pulled into this area. You guys see this area right there? Right? Right here? Look. Resistance. Support. All in that area right there at 112.50. 112.50, and we pulled right into it yesterday. So I'm going to look to be long at that 112.50 area if it gives it to me. And then I'm looking, I think the real level that we could get to is up at 122.50. But, you got to respect these pivot highs up at 117. 117.50. All right, so that level right there, as you can see, all right, I already have a line there, which is right there, and we pulled right into it. All right, right there. For anybody that can't see it, right there. And look, there's the gap fill at 120, 121. All right, anyway, let's keep it moving. You got that pullback yesterday. Look, we're looking for a few points higher. If the market's strong, stick with the names that are strong. Stick with the names that are strong. I'm sorry that this is so boring. Let's go to this one. All right. Yeah, I'm going to look for a long and look at it taking that level. I'm telling you guys, look at that level there. Once you start trying to break out here you get through 114, it's on. All right. Let's look at these, and I'm going to go to... I got to hurry up because I'm making my watch list right now. Even though I already have it. AMD. Okay, let's see here. So AMD is trying to break out and hold. And we gotta watch because we have Powell. All right, things aren't cool right now. Everything is not gravy. All right, we're getting ready to have this meeting, and just be prepared. All right, so TSM has a little bit of resistance up here. We'll see what happens. We'll see what happens with it. It looked like a good setup, but look, it gapped up so damn much. They're taking the trade away. 134 to 137. Like, that's insane. That's insane. So, you know, that's up to you guys. You know, I think it's gapped up too much. They're taking the trade from us. Them as in whoever got in that gap. All right.
Yeah, well, true. And most of the seven have been, not all. We'll get to
All right. Google is trying to make a reversal here. You can see it's a little bit of a reversal setup. I like this this level here at the 200-day moving average at 134. All right, so 134. It's already pulled back in there. I'm trying to make room.
jingoism. He doesn't want the Danes to have to rely on an American ecosystem. So
and what did we say yesterday? This is the line we drew. We said, let's see if we can get above there and get a bounce last night on the live stream. All right, this is your level. Your level's up there at 138, 137, 98, 138. Okay. Is that 137.50? Pivot low. So that's your resistance level. It's at 140. I'm sorry, guys. So if you look at it like this, right, the market pulls back. All right, you pull back right here. Bang, resistance. Breaks it. Are you going to turn this level, 137.50, into resistance? Or are we going to go back up and test the 100-day, that support, that resistance level? You break it on some volume. You bounce into it. It breaks down. You hold 137.50. It bounces back to 139.97, so 140, and then it breaks, or pulls back. You come in with a gap down. It just wicks right into the low of that day, and then pulls back to the 200-day gap down. So there's some weakness there. See if there's some dip buyers that come in with the market, okay, with the overall market bouncing, okay. Let's go to an hourly chart. I think we know what we got to do, guys. Now we just got to find our entry. We know we want to try to get to 140 and 137. All right. 140 is the final, but you have that 100-day up there at 139.33. So I would be more concerned with the 100-day. I want to look for an entry if we get it at 134.50. All right, 134.50 is where I'd like to get the entry. All right, right here. Or the 200-day, whichever. All right, whichever. Okay. So it already pulled into 133.98, 134. It's already pulled back in there. So we can't expect it to, like, once again pull back in there. Because if it does, it is making a lower high, but you can see here, what do you have? A pullback and then an even deeper pullback. So, but you've regained the majority of that move there. So we need to start holding 134.50. We can use the 15-minute chart depending on where we open up, right? What I would look for is on the 15-minute chart, the 9 EMA. When we open up here at 134 area, unless we start rejecting, all right, look for the 9 EMA to be support. Look for the 9 EMA to be support on the 15-minute. So 200-day, 134.50, I'm sorry. There we go. So now we do have a line there. We do have a line there now. I'm not sure what they're going to do with this. I really don't. Let's see what happens. You know, I'm not going to... If the 200-day holds, if we pull back into it, is what I'm saying, on the daily chart. So you can pull up your daily chart and look to see, does Google start to hold that 200-day moving average? Because we're above it. Do we hold yesterday's close? All right, so don't get scared. If we get a pullback and you pull it right down into 133.59, 133.50, okay, 133.60, whatever it is, okay, don't be scared. Double bottom, you pull it back, you get that bounce off of 133, bang, and that's where, this is where it starts, right off of that area there, 133.60, 133.50, and let's see if, you know, 133 itself has a lot of support as well. I'm going to watch Google. I'm going to keep Google on watch. Let it pull back. And if it pulls into support, it pulls into support. Tesla. If we could, get those, if we could, hit the like button, subscribe if you haven't already done so. Let's, fuck, I need to hurry up. I need to hurry up. All right, that doesn't look like a trend reversal just yet. I'm still looking for bounce backs to get short on Tesla. I'm shorting bounce backs. I want to see if we can break this level, y'all. I want to break 176. I'm telling you guys right now. I'm telling y'all right now. So even if we get like a bounce back to like 182, wherever, let it rally a day. Then that very next day, right? If it rallies, consolidates, I'm gonna look for the short. I'm gonna hang on the short until we get this thing down into the low hundreds. That's what I'm doing. All right, that is my plan. This would be nice. Another test of that level. Look how weak Tesla is today. Tesla's very weak. All right, Tesla's very weak.
Maybe that's why, as the Times reports, Elon met with Mr. Trump.
Now, how about that? Wasn't that interesting? I'm trying to figure out who else would be.
Let's see, 178.77. Got your pivot low, pivot high there. So, again, I'm going to wait for 176. I'm not waiting for 176 to break. Mother, I am taking them bounce back shorts. All right? We know where we're going. We know it. We got a gap fill down here. We have a move to move. The move is measuring it. So don't fight it. Don't fight it. And look at the weakness this morning. All right. You know, where's our entry? Can we get it up at yesterday's close? Can we get a 182 entry since we didn't get it yesterday? You know, but if it bounces back to whatever level, I don't care where it's at. Right? Right here. That's probably going to have to be it. We'll see if that's it. All right, we'll see if that's it. Let's see here. Man, I still wish I was able to get that 187. I just don't think we're going to. Watch for a regain of 178, guys. If anybody's playing Tesla right now, watch for 178 to hold. Watch for Tesla to pull right back down into this area and try to hold it and let it grind higher. I'm going to let this thing grind higher. I'm going to make this a dotted line. So just in case it does get up there and we start to sense some weakness, that's going to be 179. The level that I'm watching is like 179. All right. It's not that clear, but it's whatever. Oh, come on, man. I still got to go over pounds here. Coinbase. I got to hurry up. Okay, so you have some support here. Can we break? Can we break this pivot high up there at 235? I just want to look and see if there's any. So real quick, I can tell you right now. Robinhood 1650 rejection. I'm gonna tell you that right now. 1650. Man, I kind of like that.
Definitely going further out, reportedly telling
1650 on Robinhood. I need to get this a little bit clearer. But anyway, if you do get a bounce, look for this 1650 area right here. 1650. That's your monthly value area. That's the midpoint there too. And then look for a possible breakdown. Watch Bitcoin. Gotta watch Bitcoin. 1650 on Robinhood. 1650 is your short. Look to take it down to 1560. I'm sorry, what am I saying? 1650. Yeah, so 1650. Look for a dollar move to the bottom of the range. Play the range, guys. Unless there's some strength, right? You start walking it up, and you turn this double top, right? Double top up here at 1620. You start... Look, I'm clicking and it's not doing anything. You start getting above it. You hold it. It pulls back. It hits it again. Right? And then you get that higher low. That is your key. Right there is your entry. All right? You hit that level, Okay, you can take it and make this level your stop. Or let it show you that it's going to bounce off of it. And then when it pulls back off of the bounce off of that level, okay, like it rallies, double bottom, right up top of that double top. It starts to rally, wait for that pullback, bang. And your entry and stop loss is going to be just under that area there. All right? It's just a trade idea. You can play it however you want. You don't have to do it like that. There's many different ways to trading, not one specific way. Just manage your risk. Manage your risk, dog. Manage your risk. Manage your risk. All right. Let's go to Coinbase. All right, Coinbase. I gotta clean these charts up. I just really upset with myself. So you gotta pull back down into 212, 213. I mean, hold on. What the? Yeah, 212.50. I'm gonna call it 212.50. 212.50. Dude, it's crazy how these numbers are all over the place. It really is.
There are some things that work better together. Like your workplace
So you got a break. There's a nice support level down here at 214, 215.50. It's crazy how this is. This is a nice hold here. I'd like to see us start to rally. You got to get through 230. Coinbase has got to get through 230. Coinbase has got to get through 230. It can't do it. Wow. You got a little bit of weakness there. Unless you're going to get... Unless it's going to give you that 222 entry. I think... You know, I'm going to let Coinbase kind of do what it wants to do. If we get a shot at 219.85, 220, I'd look for that 220 long. Okay? So...
And everyday hours disappear for everyone, except Pam. Hey, Pam. Because Pam uses Grammarly's AI to write in a few clicks, not a few hours. It's one seamless experience everywhere.
Let me see something real quick. I hate, this is why I have to come in so early. Like, look at all that. That's ridiculous. Look at all those damn levels. Like, I don't need this. I don't need that. I could use... This is ridiculous. Like, really. It really is. I'm gonna just keep it at that. I'm gonna keep it a buck. We're gonna see if yesterday was a pullback. Alright, we're gonna see if yesterday was a pullback. Alright, where are we headed to? I still think it's got room to 260 and nothing's changed. I'm not changing my thesis on that. I think we still have room to 260. Alright. Still have room to 260. You know, if you do get long and you do, for whatever reason, you are able to catch that long at yesterday's close around that area down here at 220, 218, 220, look for the long up to that 239 area. That's what I'm doing. You have to watch, and I think we'll get a pullback off the bell. And that makes me feel a little bit better about this. You know, it makes me feel a little bit more confident. Unless we're going to start another downtrend, and this is going to be our level. All right, down there at 207.50, but I don't think so. I'm not sure. It all depends on Bitcoin. It's all on Bitcoin, and I think it'll also be on Powell. So, let's see, Apple. Let's look at Amazon too. It's a nice hold on Apple. You could look for Apple to walk it up. You could look for a long on Apple. Look for it to pull back. I'd look for a pullback in the 171. I think you get a little bit more of a pullback than 171, but that's just my opinion. Let's see. I want to find something good. Alright, so yesterday we said we tried to break out on Amazon. You tried to break out on Amazon. Okay, so is that the level then? This looks like the level. That looks like the level there. 174. I know this is awful, so you just have to give me a second. I know it's rough. I know it's rough skiing, guys. I know it is. I apologize. That's the level. That's it. That's it. Alright. Let's see. It's holding. Let's see if Amazon... I'm going to write Amazon down. I like... Let me go to the daily chart first. Weekly parts moving down. It's oversold.
Numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges while creating future opportunities.
What's that, 171?
Balance.
171. Support.
CPAs, consultants, and wealth advisors. We'll get you there.
keep your cargo and your secrets safe.
All right. See if 176 becomes resistance on Amazon, and you cannot like break and hold above it, you know. And this is kind of like what the markets are doing. All right, you're pulling up into that area. You're gonna find out, does it hold or does it not hold? We got 10 minutes till this bell rings. You gotta be kidding me. All right, 176. I'm writing this one down. This is an idea of mine. We need to find 176. Do we break or hold? Can we break and hold it? All right. If we don't, then I think Amazon has more room back down to 172, and that's a solid trade, guys, in my opinion. All right. Let's see here. Yeah, let me take this. Damn, that's really the level. 171. All right, so I'm looking to see if we can't. You know, I had some nice volume in today. You know, you got to break through 176, in my opinion. Who thinks this goes higher? Who thinks Amazon goes higher?
Normally goes after Microsoft, but this was a direct dagger because Nikesh talked about the platformization.
Yeah. So we're either gonna be long. I'm gonna be long at 175. 175.
Shots at Palo Alto, in part because Palo Alto, changed its model, and he's saying they changed the model because, frankly, they don't have the horses. It was a combative call. George is usually not as funny as that, but he came out on top. The stock's up $65.
And going to have a huge gain today on the back of these numbers, and the fact that they've guided to 28 to 31% year-over-year revenue.
Sorry, I'm here. I just
Heading into print now. But when everybody steps back, Jim, they make the point that we're making here, which
look at it pulling back. I knew it.
right after Palo Alto.
Yes, which
His
is
tone
the number one
is
rival.
poo-pooing of platformization. I'm reading another note here about it as well. Chippy is certainly one way to describe the rhetoric on the call last night. And the question now is, how does Palo Alto respond if they choose to as well?
I think that Nikesh.
Dude, I need this thing to pull, like, not Amazon, but I need this 15-minute chart to do better. Like,
There's mutual respect there. I thought this line.
I need to be able to see this thing.
Palo Alto is very important. An 8-figure multi-year win in a Fortune 100 business where the Falcon platform is
75. Watch 175, guys. Okay, may hold here. You have a gap fill above you. I don't know. I feel like Amazon's got some meat on the bone. I do. I think Amazon has some meat on the bone. I'm getting ready to do this.
The last night was all about Nikesh. We wait for Nikesh to come back.
Yeah. He'll come back. All right. And we'll see George on Mad Monday tonight. We got an opening bell. Red.
So you can see the resistance levels up at 180. All right, we'll see what happens here on Amazon. You know, that's my opinion. If you can get a pullback to 175, 174.50, really, I would, more importantly, like to see a pullback and be a buyer of pullbacks. And look to see if you can get to like 178, and then you get to 178. If you can break through 178, you got room to 180. I'm not sure what she wants to do. I don't know if there's any news or anything. All right, PLTR, real quick. It's running and gunning. Carvana. Okay, Carvana did not hold that level. It pulled back yesterday. You could look for a 77.90. Like a 70. No, what is that? 77. No, we're in the middle. I wouldn't even worry about Carvana. Let's see here. Look at Microsoft. What's going on with Microsoft? Dude, there's some serious weakness. Serious weakness with Microsoft, guys. Look at that rejection off of that level. Something's going on there. Is the overall markets pulling back?
Consumer Cellular's fast and reliable coverage. It's easy to win.
Hey Siri, text back.
Susie says ha ha ha.
Nope, the SPY
Race in
is still going.
$10 off when you combine iPhone 15
Okay, the SPY is still going. Yesterday we were watching some energy names too. See where they're at today.
What do you know about rock stars? I mean, where's the skin tight leather?
Let's use that. You know, you could get, this is going to tell us today if when we open up, I think it's going to pull back personally, but alright, Oxy, we went through Disney. Okay, we went through Disney. Semiconductors have been strong. Wait for Bitcoin to show you that it's going to be strong to get long. But Coinbase, if Bitcoin is going to continue to do what it does.
finding opportunities across asset classes.
So right now you can see you're in a consolidation.
Sustained growth ahead of the unknown. That's
Alright, Google's pulling back. All the big cap tech is pulling back, guys. They pulled right into those areas. Good luck today. Good luck today. AI might have some resistance up there at 33.92, 34. I feel like I'm missing something. I do. Look how mega cap tech pulled back, and then here goes Tesla bouncing right up to that level. I would watch 181, 182. I'm sorry that the watch list wasn't that great today, and I wasn't clear today. You guys, I was doing a lot of work last night. Woke up a little late. I myself, I will let you guys know what it is that I decide to go with, if I do anything today. All right. Good luck. If you have questions, just throw them in the chat. All you have to do is ask. I want to see a pullback on Palantir. We have a flat top resistance here. Let's see if we pull it back. I'm looking for that area right there to be a buyer of Palantir. I don't know why I'm talking like that. No, I do know why. So, 25.50. 25.50. They have a deal with the U.S. Army. All right. Abercrombie's up. Everything is gravy. People are buying clothes. Nobody's poor. Look for 27 on the daily chart on Palantir. You have a flat top resistance level up here. You know what? Yeah, 27.50. That's what I'm going for. 27.50. Gap fill right there. 27.50. Bro, what just happened? Alright, it pulled right into that area, gang. Ah, shit! Alright, did you guys, did anybody get that? Look at that quick reversal! I told you. I tried to tell them. Gotta break through this high. You gotta break through that high. What the fuck is going on here? Whoa. What a gap up. Whoa. Alright. Let's see here. Okay, guys, I'm going to change that. 24.50. 24.50. But if we hold this level, you know, you got to, you know, keep your eye on the prize. 24.50. All right. And then what else are we watching? Google. Look, it's trying to hold again. Just watch for the volume. All right. Watch the volume.
Yeah, that's a 52-week high.
See, I don't have VWAP on here, and that's what I don't like. Look for that pullback right there. Google pulled back into that area. Watch the SPY. All right, guys, hit that like button. Subscribe.
Even though we had volumes down 1.
I almost lost this.
I think our class is uniquely set up for this moment. Rayo's deal.
If semiconductors pull back, you guys know which ones are weak.
On the bariatric surgery, that's what's being
You do, don't you?
that's what's down. Klaus is going to come out of this, and I think people are going to want to that stock. Remember, he doesn't have cocoa. Cocoa is the big problem. Wait, cocoa is just prices are up so much. Yeah, and that's why Hershey's been squeezed. Oh, this guy is so good. He's so good. But anyway, I was glad to see Mark.
All right, so I want to see if Palantir can pull itself back.
Has been instrumental in hiring vets. Always got to point who's doing that because you want to see those companies do well, and I'm very proud of him because he's been struggling, and this was a breakout quarter for him.
You guys were mentioning CrowdStrike earlier. Nice halo effect on Sentinel-1.
I want to see Google hold 134. You have support down there at 133 as well. 134 and 133. Long.
You know what? The Mets have a lineup of Fugazis, and the Knicks lineup is a little more Fugazi-like than I thought.
Is Palantir going to break? I'm not sure. I don't think Palantir is going to break, y'all. It might. Okay, it is breaking. It is breaking. Nice, 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 nice. This is support, possible support level though. Right down in here at 25. Nope, that'd be your support level. Shit. Yeah, that's a low volume pullback. All right, we made that area resistance on Tesla. What did I say with that dotted line? Look, you just broke the dotted line. You're wicking. You're wicking. Is that your level to take? Shit, what do I do? What am I gonna take? What am I gonna take? What's the volume like? Big volume. All right, guys. I think I'm gonna ride on the short on Palantir here. All right. I'm gonna look for, and again, the level I'm looking to get down to is like 2450. 2450 level. All right, let's do it. Oh shit. Let's see here. Oh my god, why do I have so many up? Dude, this is taking me too long to get in. All right, I'm getting a 20. I'm in a 25 puts, guys. Shit. Take that back. I'm not in. God damn it. I hate missing trades. I do. If there's one thing I hate missing trades.
It's like, well, what's going to happen if you can't give people stock anymore? You have to give them cash. That said, Jim, it never seems to rise enough to become the issue that
So we made that resistance. That's probably an entry there.
I don't know. Mark Benioff. Really?
Yeah, his buyback is really to be sure that that doesn't occur, which is why his stocks declined 20 points since headquarters was taken.
Well taken, which is a lot of the buybacks are
All right, right there, guys. I think.
shares that are given
All right.
to employees. Shares that obviously represent oftentimes a significant part of their compensation, but it's not.
I don't think I should have taken that. I knew it. I knew it. It's going to pop. Fuck.
Tell people at home that it's a joke.
Damn it. It's recovering that level, guys. I want to be patient. I need to get out of this thing. I think I made a mistake.
I used to enjoy a good game of Hearts. It's been a long time. Yeah, his net worth is declining and continues to do so. That is Elon Musk.
All right, I'm going to take a little piece off there. Fuck.
What about Apple, Jim? You know, I know
I was too slow.
buy it, don't trade it. Own it, don't trade it. Let what go?
Well, I'm just looking to catch this tweet.
Wait, no. Don't get distracted. Don't get distracted.
Okay,
on Apple. I'm
so
asking you about
Apple
Fuck me, man. I was not able to get profit off of that. I wasn't able to get profit off. All right. Come on, baby, please.
They already had a read about China, and it was nowhere near as negative as that. At the same time, I think anyone who has China, whether it be Nike, whether it be Starbucks, is just or Tesla is stunned. Last night I had a group called Inspire Brands. Now that's actually that's a private company. Yeah, 36,000 stores. I mean, they own Dunkin', Baskin Robbins,
All right, so the spy's pulling back here. I didn't know what the news was, even though they got a new contract. There we go, baby.
Yeah. That said, how many Starbucks are there in Shanghai?
Come on, bring the bits up.
I mean, the numbers are enormous.
All right, I took a piece off right there on that break, guys. I got to lighten the load up. I want to see what happens here. If the spy ends up coming into... Look, there's the rejection right there. I got to wait. I might get a better entry, guys. I don't like how... Let's see here. Am I just looking at this wrong? This is a bear flag, kind of. There it goes. Now the weakness is coming in. You know, it's just a shame because I wanted this up here at 2570 something. So, you know, I'm glad yeah, let's. All right, watch VWAP. Okay, watch VWAP. That's a low volume bounce so far. It's a nice pullback and hold. We were initially long this name. That's why.
Where he talks about Apple's decision to cancel the car, and he thinks that's going to spur other companies to pull the plug on robo-taxis. He thinks long-term it's going to be humanoid robots that might beat robo-taxi investments.
Let's see if it puts in a double top here. I want to be patient. You know, again, I am kind of leaning long, but and if the market's going to go higher and this has strength, and they're awarded. All right, let's change the thesis. But here's the thing, like, you know, you're going to have to sit through a consolidation. We see this all the time, right? 15-minute chart. You try to use the 90 MA and such, and what happens is it just carries it up. But I need to see volume. It's got to show me what side of this trade it wants. So... Okay, the SPY is at 510 right now, catching a bounce. You got a little bit of resistance there at 510.50. All right. Let's see here. What do we got going on? That's some nice volume. I'm still waiting to see if you put in a double top on this, guys. I'm still waiting to see if it's going to try and put in a double top up there. We're going to find out, though. All right, that is off the bell. This is, you know, look at that sell volume there. That break, man, you regained it. See if you start to regain 25 cents. Look, they're getting squeezed now. Look. See if we put in a double top, baby. I think we can. I'm just curious if we can't get through this level up here. I'm sorry, I need to bring up level 2 for you guys. All right, sorry about that. Very nice. Very nice breakout. There you go. Damn. Oh. All right, pull it back. Pull it back. We look for a dip buy. So what happened with Microsoft? Am I missing something here? All right, Google pulled back into the 200-day moving average. It looks like it's trying to make, looks like she's trying to hold, or let's see, because you got to watch that You gotta watch the look, are we gonna put in a double top? Is it gonna hold the 200 day? Tesla still weak, guys. Tesla is still weak. I need to change the volume to like red and green.
No, and it's, listen, I mean, Adobe, very different approach, right? Firefly only uses copyrighted material.
And it is so.
And so we'll indemnify you.
Did you see?
We'll indemnify you, in fact.
We're able to see some of the things that people are doing on Firefly. You can't just distinguish between LVMH and your own. It's like the highest end.
That said, since I think it was Sora, since the image generator came out from
Fuck.
ChatGPT.
I'm wasting too much time with this. I can't waste my time with this. We gotta make this money, gang. Let's get this money, y'all. Let's get this money, y'all. Let's get this money with Palantir. Let's go. I think we got room. I think we have room. All right, look for that pullback. 26. Dude, why did it fill me that? Yo, it told me that it filled me at Palantir. Hold up. I know it's just a price. Wow. What an asshole.
That's me. It's what I go by usually in the house. People, they don't call me Dad. They call me Oppenheimer. Yeah. Good for you. I thought that was the name of your dog. No, Scoop. Yeah, Scoop.
Let's go, baby.
Actually, your dog's not named Nvidia.
Fuck. Give me a pullback. Give me a pullback. Please. Give me the pullback.
Nvidia is up over 3% today.
Let's make sure we did our due diligence here. Got a nice flat top resistance there. Alright, and I think Palantir still has room to 27. I'm looking for 27.
Let it go, let it snow. My reference to Frozen.
Now swell, now witty, Chief.
Way past you.
Do you know who wrote that?
That's Roger Smart.
Looking for 27.
No, I don't know. Nelson Peltz with Peltz wrote that.
It's already up 10%. So,
Talked about Iger's extreme
look, it pulled right into 38.2 fib, guys. Pulled right in there.
profit note today.
Yes. Now, I mean, yesterday came out, the stock jumped a quarter on the fact that the fourth quarter's going to be good. Well,
It's just really hard, man. It's really hard. Even though this thing's up 10%, I'm not too sure how I want to play this. Or if I should look for something different.
Talking about their use in
Uh,
terms of the parts performance, and then even talking and raising, free cash flow guidance as well. That was important. Stock, though, well, it was during the trading day yesterday, I think. But, yeah, it was. It was on 1.
Do you sense, David,
Eastern.
that-
But he also talked about Netflix getting their technology up at Disney Plus to a level.
make sure everything is running correctly.
Netflix is able to, in terms of therefore being able to cut marketing spend because you can keep it easily because they just have better tech.
That addresses the last 20 pages of the Magical Mystery Tour of Nelson. Did you read bring the match back? The last 20 pages are this is how bad this company is.
I know.
Appearance.
Some interesting things about the presentation from them. Obviously, it was an interesting read, the white paper I'm talking about. Some are noticing that it was very similar in style and scope to Elliot's white papers, so to speak. Did you notice that? Come to think of it, look at that. Come to think of it, yes. Look at that. Isn't that interesting? Maybe we can show people.
All right, Google's breaking down, y'all.
Elliot, there's the.
Google's breaking down.
One is Elliot's NRG slide, and the other is the slide from.
You know, it has a little bit of support down there at 133.
And then this exactly, and then this is Elliot Arcana.
What's the overall markets doing?
And that is high-end Disney.
It's the number of days that you bought you would
Remember, we have Powell. We got to go watch Powell here in 15 minutes.
They end up being similar, of course they are. They're fight letters, or fight decks is what you call them, or white papers. But it was noted by a number of people that there was significant similarity in terms of presentation.
I think, you know what? What I'm going to do is
BIAF, bioaffinity shares halted.
I might just do 2 here.
Shares at the low.
Okay.
Their private placement announcement, BIAF.
like casino, that is on that Avon board.
Avon is
Avon
not
was
a name
not
I've heard in a long time.
Wait,
Who was the lady who ran Avon for all those years?
Young.
Are
Yeah, that was a suboptimal period of it. A long-standing company that kind of disappeared. By the way, Elf is on fire. If you went wine music.
So's JD.com on fire.
Well, they're doing a buyback.
Oh my gosh.
The government lets them do buybacks there. That's like, you can't do sell back. You know?
Yes, JD.com is on fire. We talked about that.
Well, I just think that we're running out of time. I just think if you're a seller right now, I've got to send me an invitation to your long-term confinement in a very beautiful prison, perhaps near where the Hooters are.
Powell just around the corner, coming up in the next hour.
Julie Delta shares at the highs now 25.
All right, Pound's here pulling back.
Starting to report up
So what I was thinking about is making this,
to about the 8th of February, and we're back above 5100 S&P.
making that. All right, so there's the pullback there, guys. See, I like how that is colored, and it's close to one another. All right,
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
what do we have here? 5 minutes. Let's do a 3-minute chart.
It's like they have an invisible built-in shoehorn, so your foot slides into place without bending down or touching your shoes. Then the heel pillow technology.
Okay, Coinbase is holding up pretty well there. All right, Coinbase is holding up pretty well right there. I think you need to have a pullback. I think Coinbase 227.50.
We have Dorper sheep and we have beef cattle for the sole purpose of going
227.50 you could look for, and look, pounds here just.
what we do and why we do it.
Yup, I think that's it. I don't know, man. See, this is why it was a little difficult with pounds here. It just.
GLP-1 drugs used in weight loss treatments stand out as the biggest global blockbuster, but these treatments require cumbersome injections. With Luxuria's patented oral delivery technology, early studies suggest a better way. Luxuria.
I wonder if we can catch that 220.
We have investor relationships in 35 countries.
If we can get a rejection.
Industry verticals. All to
Look, it's holding this level here. If we can get a rejection, guys, I think we could take Coinbase down to 220. If Bitcoin starts to pull back, you could take. I don't see why we wouldn't be able to take this back down to 220.
earlier it announced the installation of its AI-driven safety system in a national railway line that's the RBSN.
Yeah, I would look for 220. You're getting a lot of let's see here.
It's a new day, one where our shared values propel us towards a more secure future. Through AUKUS, a partnership built upon cutting-edge American, Australian, and British technologies, we'll develop
Let's see here. Appearance.
and build something stronger together, securing decades of peace and prosperity for America and our allies.
Okay, apply. Okay, cool. And then we have the SPY.
Job seekers have spoken. CNBC make its new career boosting
And that's a 5-minute. We'll look for
exactly what hiring managers are looking for. And
like a 3-minute there as well.
competition. Register now at cnbcmakeit.com/courses.
/courses. Fucking CNBC. Alright, so we look like we have a gap. Pulling it back.
Falling out of the 10 largest market caps, now behind Visa. Dow's up 125. Stock
I'm just trying to get everything set up, gang.
This thing, it's making me get an ice bath again.
What do you mean? Strengths are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery. And you are? I'm an investor in Invesco QQQ.
See, it looks weird because it made such a big move.
100 innovations like
Look at that pivot area right there, guys, at 510, 511. I would watch that level. Let me pull up a 15-minute.
I'm Jay Jackson. For almost 20 years,
Even though I have the SPY. I don't really need the SPY. Because I already have it. Are we going to get a nice rejection up there? At 511? I wouldn't be surprised if we do. Remember on the SPY, we're 5R7 is our guy. So we're just hanging out 510 right now. I need to go make a cup of coffee. I'm going to get Powell up in 1 second. Alright, 510. They just made it resistance there on the S&Ps. Alright, what do we want to put over here? Tesla? Microsoft? What do you guys want? What do you guys want over here? Look, it finally broke.
You can make money the hard way as a bullfighter or a human cannonball, or save money the easy way with Xfinity Mobile. Existing
Come on.
get a free line of our most popular unlimited plan for a year. Not only will you save hundreds, but you'll also be joining millions who have connected.
It's hard when it makes moves like this. When they make big moves, it just doesn't look right. Alright, so we'll do this. Settings, equities. I don't have VWAP there, so I'll have to look at it on another chart. I'm gonna go grab coffee real quick. I'm gonna grab some coffee real quick.
We belong to the National Association of Jewelry Appraisers and know your jewelry's true value.
There can be thousands of dollars just sitting in your jewelry safe deposit box.
I'm Craig Whitten, and I help people find new homes for their unwanted jewelry and watches.
Let's get to Jim and stop trading.
Okay, this is really important, Carl. I've been saying that the so-called browns in liquor, which are whiskey, are doing really poorly. I did not know they were doing this horribly. Jack Daniels, of course,
I don't know, man. I kind of liked it the way I had it before. I went ahead and fucked it up. God damn it. Alright, Palantir. That's a nice short. I would just be patient with it. It may not be a trade for me because it looks like it could. Look at the volume. It's like, you know what I mean?
I thought you were going to throw cannabis in there as well, and this phrase California sober, Jim, is all over my post.
I should have. I guess I'm more focused on how that one particularly be down because whiskey is really being obliterated by the taste is, people tell me, look, you just as soon have Gatorade, But what's amazing to me, Carl, is that this is the first one that's really happening very quickly, GLP-1, and cannabis is such that people get a better buzz. They have to bring down the price, and that's what the bourbons raise price. Good luck. If I were a pal, and they ask me like, what are you doing? I would say, did you see Jack Daniels? Have you seen the price Jack Daniels?
Wireless services and bourbon.
But it's rather remarkable. I would not touch that thing with a.
See if 232 holds.
Piece on the GLP-1s on today's show this morning. How about tonight?
Okay, so tonight I have CrowdStrike.
It's kind of flat. Let's look at AMD. I'm gonna go catch a cup of coffee real quick. All right.
People.
I'll be right back.
You just as soon have Gatorade, But what's amazing to me, Carl, is that this is the first one that's really happening very quickly, GLP-1, and cannabis is such that people get a better buzz. They have to bring down the price, and that's the bourbons raise price. Good luck. If I were a pal, and they ask me like, what are you doing? I would say, did you see Jack Daniels? Have you seen the price Jack Daniels?
Wireless services and bourbon.
But it's rather.
Oh, look at Disney. Look at Disney, y'all.
Yeah, big piece on the GLP-1s on today's show this morning. How about tonight?
Okay, so tonight I have CrowdStrike. Let's just continue this fugazi spat. Get it really going here. Look, I
told y'all. Let's go. Let's go. Let's go. Break 112. I'm looking for 111 on Disney.
Fantastic spokesperson for an industry that is really under siege because the bad guys are using generative AI, just like David predicted.
Fuck. I missed it. Did any?
Better, I hate to tell you.
There you go. Well, Mr. Brightside. Isn't that they have a song about him, don't they?
Yeah. Sorry.
Unbelievable, bro. Unbelievable.
No, I'm talking about it. There's more.
Unbelievable.
You wouldn't understand.
I wouldn't understand. There's nothing I
How about Steal My Heart? You know that one? You know, like.
So I gotta wait for a bounce back on Disney.
How wide can you go?
I thought Sylvia Plath was deep.
He thinks Milton's Milton Berle.
No, I kind of know so.
Jim, we'll see you tonight. Busy session setting up with Powell on the Hill, Q&A with House Financial Services. We'll get that going in a minute.
Well, that's up to you guys. You know, you might have room to 111. I personally need a bounce back. Looking for 2450 on Palantir. Good morning.
Private sector jobs report comes ahead of Friday's big government
You guys can't hear it? Oh, shit. Well, Powell's not on right now. You guys can't hear me? Okay, I got you. Hold on. No sound. Oh, okay. Yeah, it's not on right now. So, as soon as it comes up, we should be good. I thank you guys for that because you don't know if I was talking or not. I'm grabbing a cup of coffee real quick. I just wanted to set this up. But thank you guys. Thank you. I do appreciate that. That's a really good look. Yeah, I was just quiet because I was trying to set this up. And I'm gonna grab a cup of coffee real quick, and I kind of just wanted to get it up. I know it's so small. Wait, that did not sound right. Oh snap. I was talking about I was trying to get Coinbase up here. I gotta figure out. I might have to squish some of this stuff here. Okay, there's a break on Coinbase. I'd like to get a 230, 229, whatchamacallit, rejection there. Shit. I'm gonna put this on the corner. I'm trying to find out where everything is. I gotta make that smaller. I gotta make that sidebar smaller. Shit. Excuse my language. Look for the bounce and the rejection there on Coinbase. Palantir pulling back, guys. Palantir is pulling back. Not sure if anybody took that with me. Bang. Bang. Almost 100%. Let's go. I only have half of this on right now. I still have half of that on. I'm going to take it. Powell's coming up.
Committee will come to order without objection.
I'm out of here, guys. I'm not leaving. I'm out of Palantir.
Hearing is
titled
the Federal Reserve's semi-annual monetary policy.
I still
report.
think it gets to 2450. Look for a rejection at 25.
Without
Bang.
objection, all members
Okay.
will have 5 legislative days within which
Beautiful.
to submit
Beautifully
materials
executed.
to the chair for inclusion in the record. I will note at the outset that this hearing has a hard stop at 1
We took half
p.m.,
off
which
through
will be
here, off of
strictly
that quick
observed.
rejection. I wanted to watch, see if it put in that double top.
I see Chairman Powell smile. It's just 3 hours. I'll now recognize myself for 4 minutes.
That's what helps you guys when you take half of the position
Since you
off.
last appeared before the committee in June of 2023, the conversation in Washington surrounding inflation has shifted
That was
significantly.
a 39 cent
It's not
entry,
because
by the way.
inflationary fire has been extinguished. From the most recent data available, food costs are
Tesla,
up
Disney,
21%.
and
since
Tesla are your
President Biden
weak
took
names.
office. Energy costs are up nearly 32%.
What I tell you
Shelter
guys,
costs
this
are
is
up more
this
than
guys. I'm telling you guys
19%.
right now, this is
And,
only going to
you'll
be
pay
a
37%
political show.
more
I promise.
for a dozen
They're not going to
eggs
do what they
in
should
America
do.
today. As
And that's
you stated
work,
in January,
and
people are still
focus
paying
on
more
economics.
for the basics of life, and the prices they're paying are still high. Families aren't happy about it, as you know, and as our colleagues know. But according to the Biden administration, many of my Democrat colleagues, they should be thrilled. In an attempt to score political points, many in Washington have decided the best strategy is to tell people what they're feeling isn't actually accurate. They claim Bidenomics has brought down costs, and their partisan so-called American Rescue Plan put our economy back on the right track. Of course, we know the opposite is true, since inflation skyrocketed soon after the American Rescue Plan was enacted, which was predicted by several former Obama administration economic officials. Instead of working to solve the underlying issues causing high prices, the administration has played the blame game, citing corporate greed and so-called shrinkflation. Some Democrats have even trained fire on you, Chair Powell, blaming interest rate hikes, which were necessitated by Democrat spending, for the high cost and brazenly calling you to make cuts prematurely. It's highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation. As I have always said, you're a steady hand, and I believe you are committed to the Federal Reserve's independence, as am I. Just as you have rejected the outside pressures of politically motivated agendas, I hope you will be just as attuned to the threats of politicization when the calling is coming from inside the House. Vice Chairman Michael Barr's so-called holistic review of capital requirements and the fatally flawed Basel III endgame proposal represent a concerning trend of partisan proposals taking priority over supervision. This has real-world impacts, as we saw 1 year ago this month when the supervision and regulation arm of the Fed was late catching up to the effects of the acceleration of interest rates on the banking system. Americans were understandably shaken by last year's banking turbulence. As we continue to monitor potential instability in bank exposure to commercial real estate, it's critical that the Fed keep its eye on the ball. This does not include enacting new, far-reaching, and ultimately harmful regulatory policy, though. As you know, members on both sides of the aisle, on this committee and in Congress, have made clear that the Basel III endgame proposal would be catastrophic for families, communities, and small businesses. Regulators
There's 100% on Palantir.
Withdraw
I told you guys. I
and
was
start
going
over.
to
I think
kill
that's
it.
the proper course
Told
with
you
something
guys.
as deeply flawed as the current proposal. Additionally, given that other significant proposals would have to fit holistically together, regulators cannot simply proceed with them as separate modules or using a cut and paste approach. Most importantly, as the Basel III endgame proposal is discarded or altered, I strongly urge you and other regulators not to finalize the long-term debt proposal. Instead, Chairman Powell, I would encourage you to stick to the task at hand and follow the data. The stakes are way too high to put politics over sound policy. With that, I yield back, and I'll now recognize the ranking member of the full committee.
Thank you very much, Mr. Chairman. Good morning, everyone. Welcome back, Chair Powell. While I am
It's been a
pleased
while
by
since
the
we've seen them
progress
all together.
the Fed and
Doesn't
the
it feel
Biden
like it since we
administration
watched
have made to tackle
a financial
inflation? We're not
committee,
out of the
the
woods
financial
yet.
committee?
In fact, even though my Republican colleagues refuse to
She
acknowledge
looking good with
this
all that
fact,
new Sam Bankman-Fried
housing
money.
is still the #1 driver of inflation. Based on the latest data, housing costs continue to make up nearly 70% of overall price increases, outpacing modest wage gains. This means that until we address the underlying housing supply shortage, Americans will continue to pay an increasing share of their income on housing. The affordability crisis will worsen and inflation will remain too high. With that said, it's hard to understand why Republicans feign concern about the economy when they're unwilling to address the key driver of inflation, housing. In fact, Republicans have only put forward legislation that makes things worse for millions of Americans, including moving legislation to slash funding for federal housing programs, including in rural America, where homelessness is rising. This abysmal record on housing is par for the course for Republicans. Since they have been in the majority, they have convened only 6 hearings on housing, on top of launching baseless impeachment efforts, censoring members, and pushing our government to the brink of multiple government shutdowns. It's clear that Republicans are too focused on drama and chaos to deliver anything for the American people. That's not how Democrats roll. When I was chair of the committee during the 116th and 117th Congress, not only did we hold 55 hearings on housing, but I and my fellow Democrats enacted 12
See what I mean?
critical
It
housing
felt like I
bills
haven't
into law in the
seen the
last
financial
Congress
committee in a
alone
while.
that helped stymie a tsunami of evictions, foreclosures,
Look,
and
see
homelessness.
if Disney tries to
With
hold
millions
here. It
of
may
people
not. This is a
safely
sell trigger,
housed
guys.
during
She's
and after
down.
the pandemic. Unlike Republicans, we don't just talk about the issue. Democrats make law. As House Republicans continue to disappoint, committee Democrats are offering evidence-based solutions to keep a fair and affordable housing agenda at the top priority in Congress. That's why I and my Democratic colleagues reintroduced 3 groundbreaking bills to address the housing crisis and bring down inflation once and for all. This includes Housing Crisis Response Act, the Ending Homelessness Act, and the Down Payment Toward Equity Act. Together, these bills would create nearly 1.4 million affordable, accessible, and resilient homes, reduce housing costs in homelessness, and revive the American dream of home ownership for all. So, when my Republican
I so desperately
colleagues
want to
are
take
ready
a Disney
to get
trade right
serious
now.
about our nation's economy and inflation, Democrats are ready to work with you to pass the bills into law. In fact, tomorrow at noon, I, committee Democrats, and more than 30 housing advocates will join together at a press conference to share just how important ending the affordable housing crisis is to the state of our union. And so I invite all of my Republican colleagues who say they care about this issue to come on and join us. I look forward to discussing this critical issue with Chair Powell today. And, Mr. Chairman, I yield back my time.
The chair recognizes Mr. Barr, Chairman of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
Welcome, Chairman Powell. Runaway inflation and increased interest rates still have Americans reeling. And while the rate of price increases have come down thanks to monetary tightening, the overall level of prices remain high. The toothpaste is out of the tube, and Americans, the average American family, still is paying about $15,000 more for the same goods and services that they were purchasing just 3 years ago before the Biden administration. So Americans have suffered years of eroding
that level
purchasing
there,
power in their paychecks.
111.
And while I'm pleased the Fed is resolved in getting inflation back under control, I'm not pleased by the numerous recent unjustified, politicized, and underanalyzed regulatory proposals. The Fed needs to withdraw and repropose the
And I hope everyone is
irredeemably
doing.
flawed
I hope
Basel
everyone is
III
doing
endgame
well today.
proposal, especially given that 97% of public comments across the ideological spectrum expressed disapproval of the proposal. Chair Powell, I urge you to listen to the American people, withdraw the
Look at
Basel
that
III
level
endgame
there
proposal,
at
and tell us
111 on
today
Disney.
what the Fed's plans are moving forward.
1095.
The chair now recognizes the ranking member
You
of
gotta
the
understand,
Subcommittee on
it's already
Financial
down
Institutions and Monetary Policy, Mr.
a
Foster,
good
for
amount.
1 minute.
So
Thank you, Chair Powell, for
you're not
being here
doing
today.
what you should be
I
doing.
had a chance to actually read the monetary policy report from cover to cover, thanks to an exceptionally
let's
long
just give it a
airport
second,
delay.
see if it can reject
going
it.
back home last weekend. And the feeling I got again and again is that things are fairly well recovered from COVID and getting back to normal. That we're in the range where ordinary monetary policy and fiscal policy will allow us to satisfy your dual mandate. Today, unemployment remains near historic lows. Core PCE inflation is down to 2.8% year over year compared to a peak of 5.6% in 2022. And the major stock indices are hovering around record highs. GDP growth continues to beat expectations, and the U.S. economy has added more than 14 million jobs since President Biden took office. The GDP itself is pretty much back on the trajectory that it would have been pre-COVID. U.S. manufacturers alone have added
literally
nearly
went straight
800,000
down.
jobs, employing more workers now than any point since 2008. And so my lesson from that is that the fiscal response that we engaged in was appropriately tailored, and the soft landing is within sight. So thank you. I yield back.
Gentleman yields back. Today, we welcome the testimony of Jerome Powell, Chair of the Federal Reserve's Board of Governors. As you know, you'll be recognized for 5 minutes for a summary of an oral presentation of your testimony. Without objection, your written testimony will be made a part of the record. Chair Powell, we're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving in a better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of
Disney's
last year,
rejecting
payroll
111
job
now.
gains have averaged
Watch the volume.
239,000 jobs per month, and the unemployment rate has remained near historical lows.
It's
at
not
3.7%.
smart, but that could be a little bear flag.
Strong job creation has been
Continuation.
accompanied by an
This is what I
increase in
tell
the
you guys
supply
to
of
look for
workers,
all the time.
particularly
These are
among
the
individuals
easy money
aged
traits.
25 to 54, and a
It's
continued
already done it
strong
within the
pace of
first
immigration.
hour.
Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers.
I'm not taking
Strong
it.
labor market
I'm
over
not
the past
taking
2
it yet.
years has also helped to narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices
It's
rose
going good, H. How are you
2.8%,
today?
a notable
Sorry, I didn't
slowing
see your
from
comment.
2022 that was widespread across both goods and services prices. Long-term inflation expectations
It was a late night,
appear
so
to have remained well
you know, I
anchored,
was working on the
as reflected
stream.
by a broad range of surveys
And,
of households, businesses, and forecasters.
Yeah, I was working on the
as well
stream,
as
so I
measures
didn't
from
really get
financial
much
markets.
done
After
as far as the
significantly
watch
tightening the
list.
stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as
All right,
expected,
sorry, the
it
thing
will
is off.
likely be appropriate
I'm
to
going to watch
begin dialing
Coinbase at
back
this
policy
level. If it
restraint
bounces
at some
and
point
turns
this year.
230,
But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen.
I
in
think
inflation,
Coinbase could be a
and
short.
ultimately require
Look at
even tighter
Disney.
policy
Disney's going to
get
give you that
inflation
extension, I
back to
think.
2%.
The volume's just getting
At the
lighter
same
on
time,
it, so I'm not
reducing
going to
policy
take that.
restraint too late or too little could unduly weaken economic activity and employment.
Good, that's good.
In considering any adjustments to the
great.
target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
And I should have noted this at the outset, but this is your 25th testimony before. There's a lot of debate about the past 3 years of high inflation and the impact on American families. And now that inflation is receding,
I'm asking for
very much appreciated.
I'm trying
I'll now
to
recognize myself for 5 minutes for purposes
find
of questions.
the
Let's begin
quicker
with
one.
what's top of mind. We have 2 issues that are top of mind with the Fed. rates. Some say that it's going to be a lot of rate cutting this year. Some say none. What say you?
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to, and do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, and released for comment, the general concern of a lack of economic justification for these actions, but also on the substance. The proposal goes much further than the Basel III committee recommended on capital requirements, putting us at a great disadvantage internationally, potentially. So my first question is on substance. Is the Fed listening to these comments that have been nearly unanimous in opposition to this rule? Is the Fed listening to these comments on the impact the rule will have on everyday Americans? And what is the status on rulemaking, and what is the plan moving forward?
So you're right, we've received voluminous and very substantive comments, as well as the quantitative impact study that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world. As far as process is concerned, we're really not at the stage of making decisions about that. That's down the road at least a bit. I will say the question we get is reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You won't rule that out? You would not rule that out at this stage of the game, reproposal?
Not at all. No, I think it's a very plausible option. It will depend on how things lie at the time when we reach that point.
Okay. And there's a lot of concern about the interplay between different parts of the rule. And if you change one, what does economic analysis look like for the new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
That is right. I said this would be a thoughtful, deliberative process. It's more important that we get this right than that we do it fast. We understand that. This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, recognized for 5 minutes.
Houses out there.
Thank you very much, Mr. Chairman. Chair Powell, I want to talk to you about housing, but before I get there, let me address the issue of mergers. Last week, I led a letter along with 15 committee Democrats to you as well as DOJ, OCC, and FDIC, expressing my strong concern about the lack of progress you have made in updating your bank merger review procedures. This is critical now that we just learned of another mega merger involving Capital One and Discover, which would create the sixth largest U.S. commercial bank with a major role in the credit card market. For far too long, experts have raised alarm that there is a rubber stamping process of bank mergers where virtually all applications are approved. All the while, unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your updates to the merger review process? And does the Fed plan to convene public hearings on the Capital One and Discover merger?
So I think, I believe we're in regular contact with the Justice Department on what's going on with their review of merger practices. We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application, so there's really not much to say yet. It's early days. When we do get that application, though, we're going to evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your bank merger procedures are ready to do the work that's necessary when you evaluate this possible merger?
I do.
And are you supportive of organizing community hearings on this merger?
I haven't talked about that with anybody. I will say this: we've done that in many large mergers, but that's not a conversation we've had yet. We literally don't even have an application for the merger yet.
Thank you. We'll stay in touch with you on that.
Point, guys.
So turning to the national affordable housing and homelessness crisis, where we've seen steady increases year after year in home prices and rent costs, which are a symptom of the chronic undersupply of affordable housing. Indeed, more renters and homeowners are now spending more of their income than ever on housing costs. And as you know, housing costs continue to be a primary driver of inflation. Do you think the Fed has sufficiently emphasized the role that housing costs play in keeping us from your 2% inflation goal? Do you think it's reasonable to believe that monetary policy can accomplish this goal without a fiscal policy response? And if you do, how long will it take to get there?
Right, we're holding up
housing
bounce,
services inflation is one of the three components that we look at that make up the core PCE and, index, and it has been coming down from its heights of a couple years back. It's part of the story. I think the overall story is that goods price inflation has turned negative. Goods prices are actually coming down a bit. Housing services inflation, you can see from currently entered into leases that as leases turn over, the increases are going to be smaller. So in our forecast and in everyone's forecast, housing services inflation comes down.
It's been reported that the methodology used to assess housing costs as an indicator of inflation is imperfect, namely because it considers costs based on both new and old rent, including for owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address these imperfections in the housing cost indicators, the Bureau of Labor Statistics and Cleveland Fed created an improved methodology based solely on new lease rents, which is referred to as new tenant repeat rent index. Has the Fed incorporated this new indicator into its economic assessment? If not, why not? And so what changes has it had on the level of housing inflation observed by the Fed?
So we're well aware of that, and we do incorporate it into our thinking. As I was starting to mention, that is the reason, the fact that market rents are moving up at a much slower pace is the reason why forecasts are for housing services inflation to come down, and that absolutely plays a role in our thinking.
Thank you, and I yield back.
Gentlelady yields back. The Vice Chair, Mr. Barr, I'm sorry.
Wrong vice chair.
Wrong vice chair. The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is recognized for 5 minutes.
Thank you, Chairman. I want to welcome you, Chairman Powell, to the committee. We're glad to have you back and your expertise. And I want to pick up where Chairman McHenry left off on his conversation about Basel. I want to talk to you about is that the FOMC announced in August of 2020 this flexible average inflation targeting framework right in the middle of the pandemic, which many of us didn't understand why the Fed would take that decision then, but it would give you flexibility on the 2%, saying the Fed could allow inflation to rise above 2% and stay there above that level for some time because the Fed had such challenges in getting the price level to 2%. That was a major shift in the Fed's approach. Do you think, in retrospect of now what we've witnessed over the past 4 years, that that was a mistake in hindsight to change that framework, and is it under review?
So we said we would do a review on a 5-year basis, and that means we'll be starting that review toward the end of this year. So we really haven't started. I do think that the question you raised will be one of the questions we look at, but the bigger question really is that change in the approach was really based on the fact that we'd had very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound, so there wasn't any firepower for central banks. And so it was a way to keep inflation expectations anchored at 2% and not have them slide down. Now we have entered a different period. The pandemic really may have changed that in a sustained way. We don't know that yet, but that's the big question we'll be asking ourselves is the effective lower bound to be thought of in a different way now? And if it were, that would have ramifications for our framework. But we haven't begun the review yet. It'll begin at the end of this year and probably end late the next year.
Thank you. Yield back, Mr. Chairman.
Gentleman yields back. We'll now go to the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I think I want to pick up a little bit right where we are. 2019, 2020, the entire world was
the
under
good.
the unprecedented
bad.
pandemic with
A lot of
COVID.
people
Is
lost
that
their
correct?
Their life. But
Yes,
I will
at the time.
say,
And that changed a lot
a-
of things with reference because not just for the United States, but for the entire world. And it affected
of people.
the economies of countries just about on the planet. That's not also correct?
Yes.
And supply chains was disrupted. In fact, I can remember many Americans and people around the world could not get toilet paper or paper towels and some of the basics. And so the prices,
were way
because
off
of
the
the,
grid.
you know,
I never had
of
that
supply
issue.
demand
My butt was clean the whole
skyrocketed,
time.
causing the inflation, not only in the United States, but basically all over the world. Is that correct?
Yes.
And so therefore, the Fed had to do certain things because of what we were in at that particular time. We couldn't just go back and act like the pandemic wasn't there. We had to do something to try to make sure that we were able to get through the pandemic. Is that not correct?
Yes.
And now we're at that point where we're about to get through this pandemic. And we can look at the rest of the world, what they did or didn't do at that time, but what we did at that time. And as a result of that, 3 years post the pandemic, when you look around the world, I think that you were correct with what you stated, that by most accounts, our economy is doing well. In fact, I would say our economy is doing better than most of the other countries in the world. Would you say that's correct?
I would.
And so, you know, I would say then that some of the other countries of the world maybe should have looked at the policies that we put in place thereafter so that they could get out of it, so that they could be have a labor market that is strong, where the unemployment rate is near a 50-year low. And as you've stated, inflation is also now coming down faster than any place else on the planet just about. Is that not correct?
I think that's right, yeah.
And I think that you also recognize a mismatch between the strength of the economy, that's what we're talking about, in the field. And I think that Ranking Member Waters touched on one of those big issues of housing, of which is now, you know, we're still trying to get that under control. And I think the Ranking Member has some ideas on how we can do that, and that may be something that you need to consider so that we can further get down the inflation rate. And the other would be the commodity markets, because the cost of food is too high in people. So that's something else that we need to get in control. Is that not correct?
Yes.
And let me just ask this. Can you say that there's a connection, for example, between conflicts in other areas of the world, like Russia's war against Ukraine and or the turmoil in the Middle East and the economic pressures that the United States feels? Does that not also go into the reason why the cost of commodities can be still
China
higher? Is there a connection therein?
For X amount of time, Foxconn?
Chairman?
Certainly the
I
war
would
in
disagree
Ukraine
with that.
caused commodity prices to move up sharply.
So could you tell you what is the, you know, what would the connection lead you to believe that there is an urgent need for us, I would think, for, you know, when we're running out of time, for us to do everything that is in our power in Congress to support Ukraine so that we can make sure that that and other strategic partners, that we can help the commodities market, and that would help lower the cost of some of the commodities, bringing food prices down. If we would just be able to pass certain things that's going to help Ukraine right here in the United States Congress. Is that correct?
Here's where it gets outside of our jurisdiction. So I wouldn't have an opinion on Ukraine funding.
But if we had more grain that was going through, it wasn't blocked by Russia, things of that nature, that generally just, well, you know, says that helps bring the cost down. Cost is higher because of the disruption in the Black Sea that's happened because of this war. So that would help bring the cost down. That is not necessarily the policies just here in the United States, but that's the policy because of what's going on in Russia, and we need to make sure that we do something to prevent that if we really are serious about bringing inflation down. Is that not correct?
I think it's correct that a full supply of grain would help with commodity prices.
And so, you know, instead of us playing politics with this and acting like it is your fault or anyone else's fault that we had to go and do what we did because of the unprecedented pandemic, what we did was save the economy then, knowing we got some problems that we had now, and now we are recovering quicker and better than any other country on this planet as a result of your policies and the policies of Joe Biden.
I hope you guys.
The gentleman from Oklahoma, Mr. Lucas, now recognized for 5 minutes.
Thank you, Mr. Chairman.
I'm sorry.
And Chairman Powell, thank you for testifying today.
Wait. What just
When you were
happened
before
here?
this committee a year ago, I cautioned against raising capital requirements on commodity derivatives that our agricultural and energy producers use back home to keep prices of food and power stable for consumers. At the time, you said that was a very specific concern and you weren't sure the proposal would even address commodity derivatives. And in fairness, that was before the Boswell proposal was officially published. Unfortunately, we now know that the proposal does impact commodity derivatives, and in fact, they are among the most penalized financial products that banks offer. And I would note for just a moment, I very much appreciate your comments and responses to Chairman McHenry about the nature of the overall proposal. Congress wanted end users to be able to secure their hedges without posting margin to keep the derivatives markets affordable. But I've seen estimates that some of these types of transactions for end users could face 10 times the capital requirement. Chairman Powell, make me feel a little better. Ease my concerns here. Will you and the Fed work to fix this?
It needs volume.
Let me start by saying I want to echo the fact that our commodity markets and our capital markets are a huge national asset, and we need them to be functioning well and with as little friction as possible. I now understand that what you're referring to is the things that were done to increase capital requirements for various kinds of derivative activities. And I'll just say that's an area we're aware of the concerns, and it's an area that we're taking a very close look at.
I appreciate that. I was a member of the Dodd-Frank Conference Committee, where there was bipartisan support to not disadvantage end users, farmers, ranchers, small businesses. This had broad bipartisan support then and still does today. Unfortunately, the Fed could undermine this longstanding work done by Congress. I'd like to enter a few letters into the record, Mr. Chairman, that discuss the detrimental impact to end users. First, a joint Agricultural Trade Association letter from the American Farm Bureau Federation, the National Cattlemen's Beef Association, among 7 others. Next, a joint Energy Trade Association letter from the American Gas Association and 4 others. And lastly, a letter from the American Public Power Association and the National Rural Electric Cooperative Association.
Without objection.
Thank you, Mr. Chairman. Chairman Powell, I'd now like to focus on how the proposal is set to significantly disincentivize banks from offering clearing services. In Dodd-Frank, Congress mandated central clearing as a way to reduce risk in the system. The number of banks that can clear derivatives for end users has reduced over time, making it harder for end users to find a bank to offer this service. There are some estimates that the Fed's proposal will increase capital for this activity by 80%. I'm worried that this will make it even harder for end users to find a bank to clear their hedges. This also comes at a time when the SEC, our friends at the Securities and Exchange Commission, has just finalized a rule in December that will increase clearing in cost in Treasury markets. This will have a real impact on market access and liquidity, not just in commodities, but the $26 trillion Treasury market that plays a critical role in the world economy. Will you work with the CFTC to address this problem?
Again, I'll say that we're aware of those concerns, and we're prepared to work with other agencies and also to make sure that our capital proposal appropriately addresses them.
The strength of central clearing is entirely dependent on banks' willingness to participate, and problems with the Boswell endgame warrant a full reproposal to give us time to appreciate their consequences. And there are real consequences, as you and I both know, Mr. Chairman. And with that, Mr. Chairman, I yield back the balance of my time.
Gentleman yields back. The gentleman from Texas, Mr. Green, is recognized for 5 minutes.
This guy's a nut.
Thank you, Mr. Chairman, and welcome again, Mr. Powell. It's an honor to have you before us today.
Seriously.
I always
yes.
enjoy
Some of the
hearing
stuff,
your commentary.
If you've heard some of the things he said in the past.
As you know,
make you think about
recession and inflation, these are buzzwords, and they are used in some circumstances to
All right, we're
cast
listening to Fed Chairman Jerome Powell as he testifies before the U.S. House Financial Services Committee in Washington, D.C. Let's get back to it.
to end some of these troubling circumstances we're dealing with. Are you now at a point where you believe that there will not be a recession? There was much talk about recession, and many people worried that we would find ourselves having to negotiate our way out of a recession. What is your position currently on a recession?
So U.S. growth last year was in excess of 3%. What we're seeing so far this year is continued solid growth. My expectation and that of other forecasters and of my colleagues is that we'll see continued growth at a solid pace. I will say so there's no evidence or no reason to think that the U.S. economy is in or in some kind of short-term risk of falling into recession. Having said that, though, there's always a possibility, a meaningful possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Thank you. I appreciate your saying this because we want to, at some point, eliminate the great deal of fear associated with just the term recession. Next point, the December FOMC projections showcase a slightly lower unemployment rate than last June's projections and slightly higher GDP, suggesting a soft landing remains likely. Are you of the opinion that we're headed to a soft landing, Mr. Powell?
I'll just say that what we've seen so far is an economy that's growing at a solid pace. We're seeing a labor market that is still tight, still strong. Wages are moving up, but the labor market's coming into better balance between supply and demand. And inflation has come down sharply, really, since the middle of last year. So those are the conditions we see. They're very attractive conditions, and we're trying to use our policies to keep that growth going and to keep that labor market strong while also achieving further progress on inflation. That's our goal. And do I think there's a possibility we can achieve all of that while keeping the labor market strong and the economy growing? Yes, I think there is a possibility. Indeed, that is what we're trying to achieve.
A soft landing can be difficult to identify. We could possibly have a soft landing and miss the point at which the landing took place. How do you define the soft landing such that a member of the public, a layperson, would understand that we have indeed had a soft landing?
So we really think about it in the terms I just discussed, which is we want to keep the economy growing, we want the labor market to remain strong. 3.7% unemployment is pretty near 50-year historical lows. And we want inflation to continue to move down closer and closer to that 2% objective. And we've made quite good progress on that over just the past year. So we want to continue those conditions. And I don't want to put the label on it. Other people can do that. But I would just say we're using our tools to keep a strong labor market and strong growth while making further progress on getting inflation down to 2% for the benefit of the public. That's the economy that we're trying to achieve, and I think there's we're on a good path so far to be able to get there.
Well, I concur, but I would ask this as my last question. Will there be some announcement at some point that we've had a soft landing? Because we have people who are continually indicating that we're not having a soft landing, there's a possibility of a recession. So will there ever be some official
What kind of question
statement
is that? You know,
that would
that's
give
not,
people some
like, this is
comfort?
what I mean. He's a nut.
I don't
It's
think
over.
by
We
us, no.
landed.
I think
We're
we're just
good.
going to
We
keep our
landed.
heads down and do our jobs
Bro,
and try to
come on.
deliver what the public is
Get
expecting
these
from us. We
dumbasses
wouldn't
out
be,
of them
you know,
seats,
declaring
please.
victory like that,
I
but
beg you.
The gentleman's time has expired.
Thank you, Mr. Chair.
Thank
The
you.
gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman, welcome back. I think we enjoy this. I hope you do too. I know there's some bit of trepidation about all the things that are available to us and you to answer. You know, I learned a long time ago on a campaign trail, every problem can be solved on a campaign. Reality's a little bit different. Welcome back despite all that. Looking at the Monetary Policy Report, March 1st, 2024. And as I review this, I would like to focus on the term that I would say high prices are here to stay. Because what I've heard you say today in this report really go to is you got everything under control, but we're going to keep the high prices. And I think the high prices really take a toll on the American people, as you're hearing from our colleagues, no matter whether they be Republican or Democrat. Page 7 of your report, you don't have to go focus on it, says, while current services, core service price inflation has been slowing, but remains elevated. It does. Labor costs, as you know, and energy costs are a driver to your monetary policy. The question that I have is, because you began referencing policy, 2 weeks ago or so, the president announced that he was going to slow down the gifting of opportunities in Texas for natural gas to be able to continue the exploration. And this in Texas is $1 trillion problem to us, because if we do not constantly go find through these new finds, but also through the permitting process, we're in trouble. But we're also putting in trouble our contracts that we have with Germany and a lot of other countries. This is going to mean also that business in America continues to have high prices because, as you know, wages are already high and now energy is high. There's no resiliency to continue this and see the American people win. You talked about policy, so what's your advice to policy about energy and what this administration is doing on a policy perspective?
We have, you know, broad, significant, important responsibilities, but we're really not responsible for energy policy, and we try to avoid commenting on.
But it has a huge impact on this report. It arbitrarily keeps prices high. It arbitrarily means that business is not, while they're making money, and while households, people do buy that, it's diminishing their long-term advantages to make progress. So you're just going to leave that alone?
Really not appropriate for us to comment. On if I'm commenting on energy policy, I should comment on everything. You know, we have a mandate which is maximum employment and price stability. We take decisions by the legislature and by the administration as a given. We're not in charge of second guessing them. It's just not our job.
Okay, well, all right, let's say we're not going to second guess them. I will. I believe that the energy policies that this president and the Democratic Party have supported are causing a huge boom in prices staying high. They will not come down. A boom in attacking the energy industry, jobs that are associated with it, our foreign policy as it relates to contracts that we have signed with foreign countries, giving up the natural gas market almost entirely on a world market to Qatar. It has a huge impact on whether we are going to keep prices high or control these prices. It has a how many jobs get filled, whether we have jobs in place, whether we continue to have more jobs available than workers that are there, because over-regulation is having a lot to do with the nervousness, not only on this panel, but also by the American people. It would be my hope that you would pass some sort of a memo and tell them you have no opinion, but you want them to see what the impact is. I want to thank you for being here. Thank you, Mr. Chairman. I yield back my time.
Gentleman yields back. The gentleman from Connecticut, Mr. Himes, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thanks for being with us today. I have a question, but I want to start by acknowledging, not celebrating, but acknowledging what has been a really remarkable soft landing in our economy. And I'm not celebrating because the American people, consumers, are still feeling the effects of high prices. Wages haven't caught up with prices in some instances. But I think that it would be fair to say that observers would never have predicted the conduct of this economy. You yourself said it in the final press conference of 2023 when you said a very high proportion of forecasters predicted very weak growth or a recession. Not only did that not happen, we actually had a very strong year. So I want to acknowledge that and acknowledge your commitment to independent monetary policy. And because I'm still burdened with this idea that truth and facts matter, I want to point out, especially having listened to my good friend Mr. Sessions talk about the energy market, truth and facts matter. We are producing more oil and natural gas today than any other country on the planet. We are the world's #1 energy producer. I could spend my entire 5 minutes sort of pointing out facts. The fact I want to point out here, and this comes right out of the report, is that the premise that inflation is Joe Biden's fault, is fiscal policy's fault, first is faulty because half the fiscal stimulus that occurred in the face of the pandemic happened under the previous president, Donald Trump, and it has faded. And this report makes the case. Core, and I quote from it, core goods prices have been declining as supply bottlenecks ease and import price inflation falls. So, Mr. Chairman, I don't want you to comment on that because it gets a little bit political, but I do think it's important that we keep some foot on the plane of facts. I do want to ask you a question, though, Mr. Chairman, because I always worry about risks that we see and risks that we don't see. And I want to use the remainder of my time to talk about a risk you're very conscious of, which is the overhang in the commercial real estate market. As you know, the Financial Stability Oversight Council identified commercial real estate as perhaps the most salient risk to the financial system, $6 trillion roughly in loans, half of that on bank balance sheets. In a 60 Minutes interview a few weeks ago, you characterized distress in the commercial real estate market as sizable but manageable. Do you still feel like that risk is manageable? Do you feel like you've got the visibility and the transparency and the tools to address it? It makes me nervous because this has echoes of 2008, 2009, when vacancy rates were declined relatively rapidly. We're not seeing that right now. So how do you feel? Does that risk continue to be manageable, and do you have the tools to manage it?
Yeah, I would say yes to that. I think it is manageable, and we've been working hard to management for some time now, really. And what it really is it's a lot of downtown real estate where there's too much office supply because of work from home, and also the kind of downtown retail that is no longer as profitable, and things like that are really at the heart of it. So what we've done is we've looked at banks that have significant concentrations, and we've been in touch with them to make sure that they have a plan to deal with that. There will be losses by some banks. It isn't really the big banks. It's really medium and small-sized banks that have these higher concentrations. It's going to be with us as a problem we'll be working through, I think, for several years. And the idea is you've got to have enough capital, enough liquidity, and a plan to take the losses that you're probably going to take. And so that's what we're doing. We're very active in this space with small, medium-sized
So let me ask you about that. Sorry to interrupt, but let me ask you about that. Silicon Valley Bank, wild irresponsibility inside the bank, egregious irresponsibility on the part of corporate treasurers who put so much on deposit. The Fed also had some self-examination to do because the examiners and the supervisors of the bank, quite frankly, were not doing what they should have been. So we might be forgiven for being a bit skeptical of claims of being on this. What has changed in the context of Silicon Valley Bank that gives you the confidence that the supervisors and the examiners will be on top of this?
I see it with my own eyes, but you know, I mean, frankly, there's a risk that we would overreact to something as significant as that. It's not like we wouldn't have reacted very, very strongly to what happened with Silicon Valley Bank, and we have. So I know that our supervisors are out there, and we're hearing back from media reports that we have been engaged with medium and small size banks principally on this. So I am confident that we're doing the right things there.
Small caps.
And I do believe it's a manageable problem. If that changes, then I'll say so.
Thank you. Thank you, Mr. Chairman. You're back.
Gentleman from Missouri, Mr. Lukemeier, is recognized for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Powell, for being here today. I'd like to associate my remarks, myself with Mr. Hill's remarks earlier with regards to FDIC proposed long-term debt requirements that are based on risk weighting of assets. I think it's an ill-thought-out proposal, and hopefully your position on FSOC, you'll be able to advise them and hopefully guide them that this is going to be
where you have
held up until we actually get a Basel III rule.
A day like this.
In October 2023, the board issued a proposal to update the debit interchange fee cap and regulation II.
Support at 357.
This is very concerning, given the data from both the GAO and Fed's own studies show that Reg II has significantly harmed access to free checking and other banking services for the country's forced citizens. Yesterday, I introduced the Secure Payments Act, which would prohibit a final rulemaking until the Fed, among other things, studies the impact of the board's proposed rule, completes a quantitative impact analysis specifically as it relates to affordable banking services for low-income Americans, and reports those findings to Congress. I understand the Fed acted here because you feel you're facing litigation, but I urge the board to proceed with extreme caution with any type of price control proposals, especially since the first iteration was so clearly harmful.
In order to break through that, you're going to need to match the volume.
Knowing of the hardship caused by this policy on low-income consumers, does it give you any pause to continue down this road?
What I would say is, let me give you exactly what I think.
As you know, this rule is out for comment. We extended the comment period to May 12th, so we don't have all the comments yet. We'll evaluate them carefully.
I would look for a bit. This thing might sell off, bro.
Make an assessment. I mean, the law does assign us
a
specific job, which is to assess whether an interchange fee received by a large debit issuer for processing a debit card transaction is reasonable and proportional to issuer costs. This is the obligation that Congress has bestowed upon us, not something we thought we sought. But that's our obligation under the law, and we don't know what else to do than to keep doing it for as long as that's our assignment. That's all we think we're doing. But I think that the concerns that have been raised will be things that we.
Well, hopefully you'll study this and understand that from the previous types of rules along this line, they were very detrimental to a lot of low-income, middle-income folks. As you know, the price reductions that were promised during the Durbin Amendment, for instance, the added profits actually went to the largest retailers rather than go to the consumers, as they were talked about. 98% was one of the studies that showed that the retailers kept all the money instead of lowering prices as they were telling us they were going to happen. So
I think you're going to get some sellers that are going to step in there at 420 to 426.
So what's the legal basis for updating your regulation? You've talked about it a little bit. You believe that there is something in the law that says that you need to be doing this updating all the time, or should you be studying it before you actually propose a rule and make all these things more appropriate?
Well, again, I think our reading of the law is that it's not something you do once and leave it there. It's supposed to be reasonable and proportional to certain identified issuer costs. The implication being that if those costs change, then this should change. So that's our reading. I think we do a lot of work. We waited a long time to change it. It's been many years since we did change it, but we do quite a bit of work to make this assessment. And we'll review the comments and the data that we get very
soon. One of the things I hope that you consider is the fact that even though it's supposed to be on $10 billion and up, stuff all rolls downhill. And as the last study showed, the smaller banks, the community banks, are also feeling effects of this. So be sure to consider that when you start talking and thinking about this. I appreciate that.
See if it starts us a pullback.
You know,
right
one of the
here.
things yesterday I had two different foreign banker CEOs in my office, and they brought it. One of them brought up the subject to me, which is very concerning with regards to artificial intelligence being able to impact financial institutions in this country and our banking system. And I tell people, I said, you know, think about this for a second. You know, you find some individual who is a well-known individual, perhaps Larry Kudlow, Dave Ramsey, Bloomberg, somebody who has got credibility, and suddenly you see an artificially produced advertisement or Facebook post, and this person says, look here, we've got 100 banks that have got a problem today. Now, that individual didn't do this. It's artificially produced. I've seen a commercial already with individual. You couldn't tell the difference between that individual and the real thing. We have just come through the Silicon Valley situation. And if you have real-time payments, FedNow, where you can instantaneously transfer money,
Finally, somebody
and you have
talking
people
real
scared
shit.
to death by some well-known individual
is
through an artificial intelligence situation. And I can tell you China is watching this like
Jerome Powell as he testifies before the U.S. House Financial Services Committee
good stuff,
in
bro.
Washington, D.C. Let's listen.
Why is it not
there's some issues here we need to be taking a look at.
Yeah, I think we're very focused on AI, like many government agencies and law enforcement agencies in particular. It's very challenging. You paint one picture. There are lots of pictures.
Gentleman's time has expired.
It's interesting because the foreign banks actually are watching this. Thank you.
We'll now go to the gentlewoman from Texas, Ms. Garcia, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thank you for being with us this morning. It's always a delight to have you before us. Chair Powell, the February Congressional Budget Office report estimated that the U.S. economy will grow an estimated $7 trillion over the next decade, thanks to, in large part, to the surge in immigration, creating a larger labor force. Immigration also increases demand for goods and services. I know you mentioned in your report that that the growth sometime during COVID was held down due to some restrictions in COVID and restrictions on immigration. Can you detail how immigrants have been fueling our national growth? And did you consider this report from the CBO in this current report?
Low volume.
So I am very familiar with the CBO report. I've read the demographic projections and I've read the economic projections, so I do understand what they did. And
so you do agree with a $7 trillion growth in the next decade?
I have no judgment on that. I haven't tried to make a parallel assessment, but I'm familiar with the assessment. What they're doing is they're saying more people working, bigger economy. And it makes the economy bigger. It's just arithmetic. If you say that if you add a couple million people to an economy, and a percentage of them will work, then there will be more output, and that's what they're showing. I just want to be very, very clear, though, that we don't make immigration policy. We don't comment on immigration policy indirectly or directly.
No, well, I'm not asking you to do that, but Mr. Chairman, I'm simply asking if you agree that the immigration surge has added to a strong labor force, which is necessary. I think you said that we expect a continued growth at a solid pace. So to be able to continue on a solid pace, then we need that labor force. Wouldn't you agree?
Well, so last year we got
ripping right now.
Big increase in workers, and it came from two sources. One was participation increased from people who were already here, and in addition, we got a significant increase in immigration, and many of those people take part in the working economy, and so there was a big increase in labor supply. That will have increased output. It will have made more people. It will have all kinds of economic effects. I'm just reporting the facts there.
Right.
I'm not going to say anything is needed for the future or good policy, or indirectly or directly, but I mean I think it's just reporting the facts to say that immigration and labor force participation both contributed to the very strong economic output growth that we had last year.
Right. Is it possible for the Fed to conduct a formal assessment into the positive impact immigrants have on our economy and report back to Congress?
Not really, no. I think that's a job for the CBO. We don't. That's precisely what the Congressional Budget Office does, not what we do.
All right, but the other question that you've not addressed is, did you consider the CBO's assessment that the growth in the next 10 years would be $7 trillion and about $1 trillion in added revenues. Was that considered in this report? Because that was the February report, and this, I believe, is through February 29th.
So I think that the answer to your question is 10-year growth projections by CBO don't have big implications, don't have any implications really for the current stance of monetary policy. But I will say that the immigration that we saw was a notable factor of the 2023 and 2024 economic outcomes. And of course, we're aware of that, and it plays a role in our thinking about appropriate policy and the path of the economy.
Okay, well, thank you for that. And related to that, I know that the last time that you were here, you and I talked about diversity and diversity and inclusion efforts, both at the Fed, and I applauded you and applauded the president for his appointment of Dr. Adriana Kubler. I expect to visit with her this week. What other strategies and programs are you using in the Fed, not only in here, but in all the branches to ensure that there is diversity and inclusion?
So in terms of intake of people, when we go to hire when the reserve banks go to hire a new president, those processes are very focused on having a diverse applicant pool, and you see the results of that more and more over the years. That happens. We don't have any role in appointments of governors, so that's not our job. The administration does that. In terms of, I'll just say internally, we're very focused on having an open and inclusive place to work. And also in hiring, we work hard to have diverse.
Gentlelady's time's expired. The gentleman from Michigan, Mr. Heising, is now recognized for 5 minutes.
Chairman Powell, good to see you in person. Mr. Chairman, I've got to make a comment here. It's stunning to me that equating an underground economy, which is very different and not a healthy alternative to the regular economy, and basing that on an illegal workforce that's not legally able to work ultimately will fail. That is not a strategy to my colleagues on the other side. So just ask any farmer who's going to then have a regulator come in and fine them for employing people who are not legally allowed to be here in the country. That is one of their greatest fears. So that's just a fallacy of growth within this economy that is not sustainable. Chair Powell, last fall I sent Vice Chairman Barr a letter expressing my concern over the cumulative impact pending rulemakings governing products and services will have on consumers. This morning, there's been a fair amount of time spent on Basel III, but among the agencies, and here I'm including Fed, FDIC, OCC, CFPB, and the number of pending or final rules is frankly just staggering. Regulators last year finalized new rules for the Community Reinvestment Act. The Fed is also looking at Reg II, which in my opinion would unintentionally undermine recent significant progress in bringing low and moderate income consumers into the mainstream banking system. And just yesterday, the CFPB unveiled a rule that would cap late fees for banks. And I just literally walked out of a meeting with my credit unions who are very concerned about those things that may be in their future as well. So I think it's critical that we don't look at any of these rules in a vacuum, and we need to consider their total impact and full scope on that. So I'm going to ask you a question I've asked some of the other regulators. How much do you, as the Fed, and you personally, consult with other agencies on their own rulemaking agenda? Do you coordinate? Do you talk?
So I don't lead that area of our business, but I know there's a lot of talking. Coordination, I'm not sure there is coordination.
We're in government. There's always a lot of talking. I'm concerned about the coordinating. All right, well, let me ask you this way. When a rule is finalized under another regulator, are you mandated or have any kind of policy to go back and look at your other pending rules under your purview and see if changes need to be made because of these other agencies' rule makings?
There's no mandate like that. I think where it made sense to do that, though, we would do it.
But you genuinely have some sort of review of that. It's conscious.
I don't think there is a formal review.
Okay.
No.
I've heard repeatedly that elements of Basel III overlap with the Fed's annual stress tests. What are you going to do to address that overlap?
So we're in the middle of just at the beginning, actually, of deciding what to do about Basel III. And part of that may be the interaction with the stress test. So I haven't got anything for you on that today, but that's certainly an issue that presents itself.
We'd like to continue that conversation. I do want to touch on the bank failures of last year very quickly. Do you think that the banks that ultimately needed the government bailout lacked sufficient capital, or was it more of a management problem?
So with Silicon Valley Bank, it wasn't really, could they have used more capital? I mean, they were actually raising capital. It was a capital raise that they announced that triggered the run and everything. So you can argue that it needed more capital, but I wouldn't say that that was the proximate cause, really. It was a funding structure that was all about too much concentration of
well, many of us are, I'm asking the question because many of us are very concerned that those failures are being used as an excuse to raise capital standards across the board. And because the SEC just released its climate disclosure rule this morning, I'm going to touch on the climate-related question for you. FSOC, the FSOC chair has repeatedly stated that climate change is, quote, an existential threat. Presumably a threat that is existential affects banks and financial institutions of all sizes. Why then have FSOC member regulatory agencies, including the Fed, limited their guidance on climate-related risks only to large financial institutions? Why not everybody?
Well, it's a new thing, and we are not.
It's a heck of a new thing. Yes.
We're not climate change policymakers. It's this is
Either
something that
is the
needs
SEC,
to be handled by elected representatives, and so we're starting this very carefully with large institutions who are already doing it, by the way. Things that we're doing, they're doing this because to remain active internationally, they have to be doing it. So we started with them because they understand it. Imposing it on smaller banks is not something I'm for.
Yep.
Gentleman's time has expired.
We'll be following up on the Taylor rule. So.
The gentlelady from Michigan is recognized for 5 minutes.
Thank you so much, Chairman. Thank you, Chair Powell, for being here. Do you agree with the April Federal Reserve report that compensation incentives contributed to Silicon Valley's bank failure?
I'm sorry, did I didn't...
So the April Federal Reserve report, it said that compensation incentives contributed to the Silicon Valley bank's failure. Do you agree with that?
I would say it's at best a tertiary factor, but it probably had something to do with it. For me, not a major.
So that's no?
That's very small.
Okay, so it did. Okay. So do you agree the appropriate rules on incentive compensation could have reduced the likelihood of Silicon Valley's failure? Maybe. If they didn't take all that money.
I really don't think so. I mean,
if they didn't take all that money.
I don't think it's a first order question for Silicon Valley. A lot went wrong there.
Yeah.
Incentive comp would be.
They actually blame you guys. They blame the oversight, even though they didn't respond to your correspondences.
We took our medicine.
Yeah. Do you think it also has something to do with the fact that Section 956 of the Dodd-Frank rule hasn't been finalized by you?
No, I don't.
You don't think it's the reason?
I don't.
You don't think it's because people made money off of the failure?
Here's the thing. They also lost.
You don't think money drove them to do what they did?
I didn't say that. What I said, there are lots of...
So they made money from it. They actually... it was a lottery for them, right?
That incentive compensation arrangements were at the heart of the Silicon Valley Bank failure. No.
Okay. Do you support a robust rulemaking?
What is this?
For executive compensation, Chairman?
I could say the same thing about the lady right behind
Oh, you don't?
Every single person in there.
Do you support robust
Everyone is out here trying to get that
for
money.
executive compensation? Do you believe in Section 956?
Section 956 is the law. As I understand it, the agencies are looking at doing something. It's been 12 or 13 years, right?
Yeah, multiple agencies.
Smart enough to know anything about.
It's been hard to get it done. I lived through the last episodes of trying to get it done.
So do you believe in a robust rulemaking process for executive compensation?
I do, yeah.
Oh, great. Oh, that's awesome. Will you commit to helping finalize the Dodd-Frank section of 956 this year?
I wouldn't.
It's been 12 years, Chairman.
Yeah, no,
It played a role in the bank failure, Chairman.
If I can answer, what I would like to do is
So you don't want to do it this year? I mean, I'm being serious. You're saying no?
If the member will allow the witness to answer the question, we've had a good day today, and the gentleman's trying to answer the question.
I would like to understand the problem we're solving, and then I would like to see a proposal that addresses that problem.
Okay. Do you believe people should profit off of bank failure?
People should
The executives
still
that
take
made those
their
decisions?
No, not
retirement.
the
They should not
executives.
profit.
Well, I would say executives who are responsible for a failed bank should not profit from the failure. Absolutely not.
So they get to walk away with compensation based
They
on their
do.
failure?
No, based on risk.
You're asking
They're-
about
See, Talib is
a different
asking
rule
this
that
question
would have
all
clawback
wrong,
and things
guys.
like that.
Yeah.
The thing
so
is
that's-
what
that's
she's
something
not
I know you've been
saying
looking at
is
for-
that they
for a
tie
while.
up a lot of capital,
That's certainly an appropriate
which
thing
is
to
the
look at.
risk
Yeah, because
that
it's just going
something
to
may
continue
or
to
may
happen,
not
is my
happen.
opinion. It doesn't have to be yours.
So they need to
It
manage
sure-
risk.
Sure the heck could have
When there is
helped
money,
here
you take it off
if they
the
knew they
table.
were going to not.
She's
they were going to
just
walk
trying
away.
to
If
make
they
it
could
seem
walk
like, yeah,
away
we're just here, we're
with
going to
not the
dump this
bonuses,
bank.
the compensation.
No, you're going
I
to
mean, they
take your
made
money.
money.
You're absolutely right, and you
Significant
should.
amount of money.
She's garbage.
for their
She's
bank
garbage.
failure.
She's not
Last question,
presenting
Chair
the risk
Powell. Do you
part of
believe
it
that
too,
the
because
impacts of
things can
climate
get ugly
change pose a
real
risk?
quick.
Have you been talking about that more?
I certainly believe that climate change is real and poses risks over the longer term, sure.
So there have been
Just
some
ask
that
anybody
say,
who
you know,
owns stock
higher interest rates
in SVB if they did not exit
it
quick
actually
enough.
makes it more difficult to build out the renewable energy projects and other investments required to prevent climate impacts. Do you believe that to be true?
You know, it's not our, I believe that we need to do our job that you've assigned us, which is maximum employment and price stability, and we do it through interest rates. It's not our job to consider the effect on climate change of that, and I think any effect on climate change of that would be kind of minuscule.
Okay. Last question, Chair Powell, who do you see as the major winners and losers from high interest rates in terms of income groups, age groups, and racial or other demographics?
So the point of high interest rates in the current environment is to bring inflation under control. The people who are hurt the most by inflation, as you know, are people who are on a fixed income, who right away are in trouble when the cost of transportation, food, energy, and when those things go up, they don't have financial resources to deal with it.
Have you looked
We're
at
accountable to provide price stability to the American people. Those people benefit the most over time from stable prices.
Gentlelady's time's expired. We'll go to the gentlelady from Missouri, Ms. Wagner, for 5 minutes.
I thank you, Mr. Chairman, and I thank you, Chair Powell, for your service.
You know, we're still waiting
I want to
for
associate myself with the comments of
We
my
all know
colleague.
who
Mr.
we're
Powell.
Fed Chairman Jerome Powell testifying before
crazy
the
lady.
U.S. House Financial Services Committee in Washington, D.C.
And I do hope that the Fed is doing everything it can to ensure that the exposure that these banks have will continue to be, in your words, manageable, because this is a looming crisis out there, given the workplace changes and dynamics. Chair Powell, in remarks on Bloomberg, Larry Summers, former Treasury Secretary during the Obama administration, stated that, and I quote, "It would be much more productive for our central bank to be focused on the question of real estate portfolios in the banks they supervise than, quote, some of the more abstract and politically driven arguments about various kinds of capital charges on the largest banks." Do you agree, sir, that it would be more productive for Fed supervisors and regulators to keep their eye on the ball, in this case, commercial real estate and other real estate investments?
I absolutely think we need to keep our eye on the ball on commercial real estate, and I think we're doing that.
I hope so. According to your semi-annual report, the median of members on your Monetary Policy Committee estimate that your target overnight interest rate will average 4.1% in 2024. Does that mean that the median number of members anticipate that you will be cutting interest rates sometime this year by as much or more than a full percentage point?
No, it doesn't mean that. Actually, the Summary of Economic Projections showed a median of, this is in the December FOMC, so this is now 3 months old, showed 3 rate cuts this year. So that would be 75 basis points, 3/4 of 1 percentage point. You were quoting the next year's number, so you would add that on. That was through 2025, I believe.
So are you anticipating that there would be more cuts here coming?
It's not, the way I would say it is, we're making economic projections. And so we write down a path of growth, what's happening in the labor market, what happens with inflation, and what goes with those forecasts is and appropriate monetary policy, appropriate interest rates. So we expect inflation to come down, the economy to keep growing, the labor market to remain strong. And if that's the case, it will be appropriate for interest rates to come down, significantly over the coming years.
Good.
What will really happen, though, it's not a plan. What will happen is actually what the economy
so here's
needs.
the
economy will
resistance
do
level,
something
guys,
different
that I'm
from
looking
that,
for on
and
the
that's what will
SPY.
actually happen.
Chairman
an eye
Powell,
on this
15
level
members
here.
of Congress, including myself, Ranking Member Sherman, Chairman Barr, and Ranking Member Foster, sent a letter to the prudential
CrowdStrike is
regulators
falling. I wonder
regarding
what's
the
going on
impact
there.
that Basel will have on U.S. capital markets activities. The letter highlighted critical areas of our U.S. markets, including securities underwriting, securitization, and derivatives that will be severely impacted by the Basel proposal. This was also a common theme represented throughout the comment file on the Basel proposal, over 95% of them. Considering that 75% of financing in the U.S. is done through our capital markets, which are the deepest and most liquid in the world, why would the Fed continue to pursue this flawed proposal instead of re-proposing a rule that would not have such a drastic impact on the U.S. economy?
Does anyone know the news for
In fact,
CrowdStrike?
the capital markets concerns you raised are
And
among
what's going on?
those
Is
that I
there a
raised
mistake?
myself in our open board meeting when we put this out for comment.
And you said you wanted broad support, and obviously there is dissent among some of your governors, the FDIC, others. So how are we coming on this, and how are we
We're working our way through the comments, and we're coming to the point where it'll be appropriate for us to begin to evaluate what changes are appropriate. I've said I think those changes will be broad and material, and that's where that is. But we haven't made any decisions yet. We just got the comments.
In my role as chairman of the Capital Markets Subcommittee, I have seen SEC Chair Gensler push the envelope in terms of rules and regulations that go well beyond the congressional mandate, even encroaching on the jurisdiction of other financial regulators. What is the Fed's response to another agency encroaching on its jurisdiction?
We do not comment on other agencies' regulation. However, if they were actually, to take your hypothetical at face value, if they were to come into our jurisdiction.
Oh, it's more than a hypothetical.
And we would react.
Good. Well, I hope you do. I yield back.
Gentlelady from New York, Ms. Velasquez is recognized for 5 minutes.
Thank you, Mr. Chairman. Right here.
Hi.
Hi. Thank you for being here, Chairman Powell. Property insurance rates are becoming prohibitively expensive or inaccessible for homeowners and developers in my community. The FSOC's annual report identifies property insurance rates as an increasing risk, and I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact on macroeconomic?
No.
We are listening to Fed Chairman Jerome Powell testifying before the U.S. House Financial Services Committee. Seems like we have lost the audio feed, but not to worry, as we are here. So again,
The clock being frozen is out of respect for Ms. Velasquez, or out of good luck, I'm not sure.
The clock.
But we'll get staff to listen. We'll just suspend for a moment.
We need to invest in infrastructure for this committee.
Yes. Well, we're trying to do electronic voting, and
No voting.
no, it's hard enough to just get the microphones to work. Madam Clerk, thank you. Thanks. So all the photographers have left, so the awkward photos for Trish will be less awkward.
all right. So again, looked like having some technical difficulties down in Washington, D.C. No surprise, but as they get their shop in order, we'll do a quick reset here and get a data check with Mr. John Tucker.
Yeah, and after yesterday's sell-off, Paul, the major stock averages are higher, but right now off the best levels of the session. Jerome Powell is expected, reiterating the Federal Reserve no rush to cut interest rates. If there are any surprises, it should come up during this Q&A session that you're hearing with the House lawmakers. And for once, it's not our technical problem. It's actually in Congress. And I like Nydia Velasquez's comment there. We need to invest in infrastructure in the hearing room. Traders also weighing the latest labor market readings. Job openings remaining elevated in the month of January, so that suggests demand for workers is still strong. That's the JOLTS job opening labor turnover survey that we got at 10 o'clock. Available positions edging lower to 8.86 million. Among some of the individual stock movers, NVIDIA shares, they are higher, up 2.6%.
All right, here we go,
right
guys.
now.
Looks like we're getting a nice rejection
you also have
up there.
Tesla shares, they're down about 2.4%. CrowdStrike Holdings, that surged earlier today, and right now up almost 11% on a bullish forecast if their earnings report. S&P 500 overall 38 points higher. That is up 0.8%. We're at 5117 on the index. The Dow Jones Industrial Average is up 0.6%.
All right, guys,
We're at
watch that level. I told you.
Higher. That's at 38,833. The Nasdaq 100 up 157 points. That is a rise of 0.9%. The 2-year yield 1 basis point lower, as we hear from Jerome Powell. That's at 4.
Come on. All right, good. I'm on the SPY.
And
so,
then
guys,
the
I'm looking
benchmark,
for a SPY put.
That is
up at
right
that
now
level.
3 basis points lower.
Got some nice
That's at
volume up
4.11.
there.
And we check the markets all the time, right here on Bloomberg Radio. I'm John
Come on,
Tucker,
man.
And that is your Bloomberg Business Flash as we
Excuse
continue
my
with
language.
the testimony before
9,
Congress, the
5,
semi-annual
10.
testimony of Jay
That's
Powell,
a delta.
the Fed chair.
That's 1 for 1.
Alex
John,
and Paul.
Yeah, John Tucker, thank you so much. Just kind of watching
Dude,
the
you're
feed
kidding
here,
me,
the audio feed.
bro.
Apparently, they had some technical issues, it appears, with Fed Chairman Jay Powell's
Oh my
his
God,
microphone, so they've
guys.
switched them out. And I think he's back up and running. So let's head back on Washington, D.C. Fed Chairman Jay Powell testifying before the U.S. House Financial Services Committee.
Including property insurance, and it's been adding meaningfully to inflation. It's not something we have any control or authority over. Same is true of auto insurance. They're just insurance generally has prices have gone up a lot.
It was a nice trade. I said,
So
watch
when
that
we
level.
talk about the lack of affordability when it comes to housing, the insurance, the rising cost of insurance is an important factor that is affecting the availability of affordable housing in our communities.
Guys.
And I hope that there's some discussions among the Fed because it is an increasing risk and it's going to have a direct impact on our economy. Chairman Powell, I know you spoke with Chairman McHenry a little bit on inflation and interest rates. Can you explain what evidence you're looking for before inflation has returned to 2% and interest rates can be cut?
Sure. So we're not looking for inflation to go all the way down to 2%. That's not what we're looking for. What we want is just more evidence that will give us more confidence that inflation is on a path down to 2% sustainably. So that will come in the form of good inflation readings, really. We want to see, just a bit more evidence so that we can be confident. We don't want to have a situation where it turns out that the 6 months of good inflation data we had last year, that didn't turn out to be an accurate signal of where underlying inflation is. So we're just being careful, and because the economy is so strong and the labor market's so strong, we think we can and should be careful as we approach that decision.
And when you say evidence, what evidence? If there's anything.
So just more, we'd like to see more good, relatively low inflation readings. We're not looking for better inflation readings than we've had. We're just looking for more of them. And what will happen is that as we go forward, the 12-month inflation will continue to drop
508s, but I'm really looking
because it'll be lower than early last year.
Thank you.
I'm looking at the 509s right now.
Mr. Chairman, I would like to pick up on where Mr. Lee left off and reiterate the importance of the rulemaking on Section 956. This is an issue that I also raised with Vice Chair Barr, Chairman Grunberg, Acting Comptroller Sue, and I told them when they came before this committee that I will be asking for a status update on the rulemaking at every future hearing because it's well past time, 12, 13, 14 years. If you are employed in a company and you are given a task, I will think that you will be fired if you don't get it done, and it has taken 12 long years. So you are the chairman of the Fed. How is the Fed working with other agencies to propose the rule?
So there's a lot going on in regulation at the Fed right now. My understanding on 956 is that there have been discussions between the regulatory agencies, and I think it's not three, I think it's more like 6 agencies that have to agree.
I know.
I have not seen a proposal. I think something is under consideration, but it's not something that's gotten to me yet.
I will ask the next time, and believe me, I'll be here.
Great.
Thank you.
Gentleman yields back. Gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Mr. Chairman, good to see you. You have said numerous times that the capital framework is about right and that banks are well capitalized. Do you still believe this?
I do.
Given that you believe that, and given the fact that the Basel III Endgame proposal dramatically increases capital requirements on banks, would a re-proposal that implemented Basel III in a capital neutral way, could it do so without jeopardizing financial stability?
Could. I mean, hypothetically, yeah.
Okay. According to Latham and Watkins, 97% of the comment letters either opposed, called for a re-proposal, or expressed substantial concerns about the Basel III Endgame proposal. And those negative comments came from across the ideological spectrum and from various interests. Without objection, I would ask the chair to include that report into the record. Without objection, I'd ask the chair to include that report.
Without objection.
Thank you. And Mr. Chairman, did you see that report?
I did.
Does that concern you, that 97% of the comments were negative?
So we didn't do our own count, so I can't make an assessment, but I would say it's unlike anything I've seen.
The Basel III comment period ended on the same day as the Fed's data collection on the proposal, which is an odd process since the data should have been collected far earlier, analyzed, and the results should have been available for the public to comment on before the comment period ended. Why did the Federal Reserve choose to do a quantitative impact study during the comment period for the proposal, foreclosing any ability by the public to comment on the results of the study?
Well, I mean, the movie's not over. We are where we are, and Vice Chair Barr did commit to putting the QIS out for comment. We will receive those comments, and those comments will be taken into consideration as we think about the path ahead.
Well, speaking of process, you've got your excellent general counsel right behind you there. And I don't want to get into privilege here, but have the lawyers at the Fed raised any process concerns or Administrative Procedure Act issues with the board?
What do you guys notice?
Let me just say that we're committed to doing transparent and reasonable and data-based rulemaking in compliance with the Administrative Procedure Act.
Well, of course, giving the public the ability to comment on the quantitative data that has been provided obviously is consistent with good process. Sir, Governors Bowman and Waller, Vice Chair Hill, and Director McKernan all dissented on the proposal, and Vice Chair Jefferson expressed concerns with it during his statement. Under your tenure as chair, can you identify any other regulatory proposal which has elicited this much dissent?
No.
Have you in the past acknowledged in front of this committee that you will not move forward with proposals without consensus? Or you have acknowledged that in the past, and we appreciate that commitment to consensus. Have you achieved consensus yet on the Basel proposal?
Let me say I am confident that we will, but that's a process that as I mentioned, we're evaluating the comments. We're just coming to the place where we're going to start talking about the path ahead. And I am confident that we'll achieve very broad support on the board.
Mr. Chairman, do you agree that the heterogeneity and business model diversity within the banking sector contributes to system-wide financial stability?
I strongly do.
And do you agree that a concentrated business model in the banking sector would present a potentially systemic risk?
Potentially, yeah.
And this is one of my major concerns with the proposal, Mr. Chairman, because by de facto repealing regulatory tailoring, subjecting Category 3 and 4 regional banks to one-size-fits-all standards that currently only apply to large GSIBs, discouraging securitization, which is the private sector solution for dispersing risk, eliminating the use of internal risk models and transitioning the industry and regulators toward only a standardized framework, actually would push the industry into a smaller and more concentrated looking industry, and as a result would, in my view, actually increase systemic risk and decrease market competition. Do you share that concern?
I think it's a real concern. And again, I think that's part of what goes into my thinking, certainly about the proposal and where it needs to go.
Well, given all of these concerns, we hope that you can commit to reproposing the Basel III endgame, and we strongly urge you to take that into consideration. With that, Mr. Chairman, I
Gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes.
Good morning, Mr. Chairman. Welcome. Good to see you again. I want to go a little deeper into the commercial real estate issue and the potential impact on regional banks. This morning, Scott Rector, who's a member of the New York Fed Board of Directors, released a white paper on CNBC this morning describing the trillions of dollars in commercial real estate loans that will come due over the next couple of years. He described it as a, quote, slow-moving train wreck, close quote, and for our regional banks. He went on to predict that it will force a little over 500 banks, thereabouts, to either fail or consolidate. He also described what he termed as a doom loop where, similar to Silicon Valley Bank, when people lose confidence, when depositors lose confidence in the bank, they pull their money out and we end up in a bad situation. Now, I don't believe everything that I read or hear, but in Congress we do tend to repeat it. And I just wanted to get a sense from you. I am seeing in my own city of Boston, we've got 20% vacancy rates in office space. We rely on that for a lot of the tax revenues for the city. But I'm just wondering your thoughts on that issue. Is there a systemic concern here, or is this isolated? And might lowering the interest rates help some of those banks? Because I hear from my developers in our area that no one's lending. So, crack at it?
Sure. So I haven't seen that report, so I can't comment on it, but I can comment on commercial real estate. So we've had a secular change in the economy, which has left office rentals in many places, office buildings. Demand for them is significantly lower, at least temporarily and perhaps for a long time. And also the same is true for downtown, in some places, downtown retail that's associated with office workers. So it's a shock to the system, and we've known this for some time, and we've gone through the commercial banks in the United States, and so have the other regulators. We've done it jointly and identified the ones that have high concentration and are going to need to deal with that. And so we've been in contact with those banks and talking to them about how they're going to deal with this, how are they going to absorb these losses, do they have enough capital, do they have the liquidity, do they have a plan to do this, and is it consistent with their lending practices and that kind of thing. So it's going to be something we work through over a period of years. And I do think it's slow moving. I think that part of it is right. You ask about 500 banks. I have no idea about that number. But certainly there would be some banks, probably smaller ones, that have these high concentrations. It's not the very large banks. It's really a manageable thing at the large banks. So I think that's what it's going to be, and it's a serious problem, and more serious in some locations and jurisdictions and with some banks than others. But it's one we'll be working through, and I think that's how I would think about it.
Does the Silicon Valley Bank situation, Signature? The money moves so quickly in those cases. It was instantaneous now. The velocity of money moving out of those banks really, I think, in some ways contributed to their failures. Are we looking at anything technologically that might be able to address some of that or mitigate it?
Sure. So we also,
No, that
after
would be
Silicon Valley
controlled
Bank,
transactions,
we got in contact with and worked with financial institutions that had high concentrations of uninsured deposits. And many of them have greatly improved their liquidity position. So that's the thing that we're working on.
Okay.
As you probably know, we're also working on some liquidity rules which will strengthen our framework of liquidity rules.
And that's going to go against you guys.
That's something we haven't proposed
All of
yet.
us, where
Let me
they're
ask you
saying
something
can't
off topic.
transfer money.
So we know that Russia has about $300 billion in U.S. We've frozen assets, Russian assets of about $300 billion between U.S. and European banks.
Hello. What's your name?
You want to comment on that? What
your
I'd like
name?
to see is us give that to Ukraine, to be honest with you. I know that's a very simplistic idea, but I'm just wondering if there's any historic example that we could look to if Congress has to take the necessary steps to redirect that money to Ukraine so they can feed their people and fight that war.
This whole area of sanctions and foreign assets and things like that is really controlled and directed by the administration, by the elected branch of government. We are,
Like she's an
all we are
IRS,
is just a
like
technical seat around, in the back row to help. We don't make those decisions, and I wouldn't comment.
I know you're big on history. I was just wondering if there was any examples out there that we might provide guidance to us.
Gentleman's time's expired. The gentleman from Texas, Mr. Williams, now recognized for 5 minutes.
Mr. Chairman, thank you for being here. When I'm back in my district in Texas, I'm constantly hearing concerns surrounding the fundamentally flawed Basel III. We've talked at length about that today, endgame proposal. These concerns are not only coming from my banking industry, but also from farmers, ranchers, small business owners who are concerned about how this proposal will impact the ability to access capital in the future. And to all of us, did it not raise alarms? And we've heard about the 97% today of public comments on this proposal, and they all came out negative. And Americans across all sectors are worried about the disastrous implications that will follow this proposal and have tried to make that known to banking regulators who continue to ignore them. It is time for federal regulators to take these concerns seriously and, quite frankly, just, I believe, start over. So I urge you and your colleagues to rethink the misguided policy and do what is best for American people, small business, Main Street America, and withdraw the Basel III proposal. Now, Chairman Powell, given the concerns raised by financial institutions, again, farmers, ranchers, et cetera, and other communities across the country, can you elaborate on how the Federal Reserve is responding to and addressing these comments that are mostly negative and request modification, delay, or complete withdrawal of the proposal of Basel?
What's it going to be? Look.
Yes, I will. So we're in the process of reviewing the comments. They were quite voluminous. They were very detailed, a lot of data, a lot of analysis, and that's just what we wanted. So we've got those, and now it's a lot. It's hundreds of them, and we're going through them, and we're just at the point where we're about to begin then turning to the question of what changes should we make to the proposal. We haven't made any decisions. We haven't really gotten to that stage yet, but we're getting, remember, we only got the comments less than 2 months ago, so it's just we're at that stage. So we're looking at it. As I mentioned, my own view is that there will be material and broad changes to the proposal as we go forward, and we haven't really made decisions yet, though. It's just a little bit early for that.
We're glad you're looking at it. I want to bring up the long-term debt proposal rule, which would require banks to issue enough long-term debt to cover capital losses. Now, Congress worked to pass legislation.
You're listening live to Fed Chairman Jerome Powell as he testifies before the U.S. House Financial Services Committee in Washington, D.C. Let's listen.
For families and businesses in my district to have options to meet their lending needs. So the Fed's long-term debt proposal would undo any sort of regulatory tailoring and puts into place a new long-term debt issuance requirements on regional banks, which require these banks to issue long-term debt both at the parent holding company level and the IDI level. Now, these regional banks will face increased costs when they are already facing towering regulatory burdens from this administration, and those are the banks that people do business with. So, Mr. Chairman, do you believe that this proposal rule goes against the requirements of S. 2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act, and will you commit to exploring this issue further with your colleagues?
So we're committed to implementing 2155. We believe that the regulatory and supervision, regulation and supervision of banks needs to reflect their size and activities, and that's something we'll be considering as we go forward with this.
Okay. Short time I got left. Americans continue to feel the pain from runaway inflation created by the Biden administration as everyday costs continue to stay expensive. As you know, I'm in the car business, and inflation is just running rampant in my industry. And the irresponsible and partisan American Rescue Plan forced through Congress by Democrats only made inflation more of a problem. And now American families and businesses have been forced to deal with runaway inflation for 3 full years now, which has caused some major hardships so quickly. The ARPA injected nearly $2 trillion of deficit spending to our already struggling economy. And how does this type of inflated spending, combined with economic headwinds like supply chain shortages, impact the economy? And doesn't this kind of reckless spending actually fuel the pressures of inflation?
I think there are a lot of causes of the inflation we've seen. We saw this inflation everywhere in the world. So the reopening, really the reopening of the economy after
see if it breaks out.
With very strong demand and constrained supply, you saw inflation in all the advanced economies. It was a little sharper here at the beginning. I think there's a role for monetary policy in that. There's a role for fiscal policy. There's a role for the pandemic, a starring role for the pandemic. Our job is to deal with it, and that's what we've been doing.
Well, thank you for always keeping small business in Main Street America in your calculations. And with that, Mr. Chairman, I yield back.
Gentleman yields back. Gentleman from California, Mr. Sherman's recognized for 5 minutes.
Mr. Chairman, I want to thank you for recognizing in your opening statement the importance of immigrants in keeping costs down. And I want to thank you and the administration for what has been an excellent 2023 economic report.
He's funny.
We've got 3.1% economic growth, by far the best in the developed world. Headline inflation, 2.4%. And that's not a little blip, a 1 month number. That's for the whole of 2023 and compares very favorably with the pre-pandemic portion of the Trump administration when we had inflation of 3.5%.
5-12 breakout.
My goal here is to convince you to cut more and sooner
60 to 80,
because
60 to 90,
for a number of reasons. The first is
50%?
that I know, if you ask a constituent, they want zero inflation and zero unemployment. You know that we can't have that, and have concluded that the economy works best with a 2% inflation rate target. But I've looked at the history of that 2% number. It seems to come from Auckland from the 1980s. And there's a lot of arguments that your target should be just a little bit higher. Larry Summers recently produced a study arguing that the cost of money is part of the cost of living. So we have this weird paradox where you're trying to keep the cost of groceries down by raising interest rates, but as the ranking member points out, the big issue is housing. And your measure of inflation seems to treat all Americans as renters, even though 2/3 are homeowners.
Daily chart.
And so when interest rates go up, that's an increase in the cost of living for anyone with an adjustable rate mortgage, anybody looking to buy a house, anybody with a home equity loan. Obviously, we would cut interest rates a little sooner and a little more if your target was something closer to 2.3%. So I'll ask you, is there substantial economic analysis that argues that your target rate and the economy would work better if we had a slightly higher target than 2%?
Not really, no. What's happened is, you pointed out New Zealand, but what's happened is that 2% has become the global standard. And it's a pretty durable standard. I don't have any reason to think that it's a problem for the United States to get to 2% inflation. We're at 2.4% right now, headline inflation.
I would ask leave to add to the transcript of this hearing numerous articles that argue for something between 2.3 and even 3%. I'm not arguing for a size 3%. Let's look at Basel. There's nothing free here if the standards are too high. We lose economic growth. If they're too low, we have bailouts and bankruptcies. But I think everybody agrees that the standard should be well crafted. You've got a system where everybody drafting this is well dressed and focused on Wall Street, and you've got Basel rules that discriminate against Main Street and 4 Wall Street. I'll give you some examples.
Lose 80%
65
of your
basis.
market cap.
It's
You're
65% if you're a publicly
You're
traded
fucked.
company, and make a loan to a publicly traded company. You make a loan to CalPERS, they're
You
not
start
publicly
getting,
traded,
like, there's-
without
I'm
objection,
sure
like
a
to
lot
put in
that
their
goes-
article into the
that
record.
goes on with it, but that
And
earnings
so
call, I think,
they're,
ruined
in
them.
effect, going to have a tougher time getting a loan.
Well, it was
the local
the
pizzeria is
assets
going to
that
have
they
a
have on their
tougher time
balance
getting a loan. You've got in Basel III ignoring mortgage insurance, which obviously makes the loan more prudentially sound for the bank and is very necessary for first-time home buyers. And you've got a system where if you make investments in long-term bonds on Wall Street and you put them in the hold to maturity category, you don't have to recognize the losses and mark to market. So there, I hope you'll look at these in terms of the competition between Wayne Street and Wall Street for bank loans.
I'm going to try and make something
Finally, we
happen
go to
on
clean
KRE
energy
here, guys.
investment. Can I count on you to personally look at the paradox where Basel
look at the
III
48 puts.
treats clean energy tax
48
credits
puts.
much more harshly
Give me 1
than
second, let me enter
low-income
that.
housing
God, it's
tax
taking way
credits
too long.
for
Come
no
on.
ascertainable reason. Thank you.
Gentleman's time has expired. The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes.
Well, thank you, Mr. Chairman. Mr. Powell, thank you for being here today. I'm concerned with the small dollar credit for businesses. As a former business owner for over 20 years, I can attest that as the small dollar business credit becomes more expensive and less convenient, businesses are going to turn to credit cards and other alternative financing for business purchases. These inevitably result in even higher costs, which goes down to the consumer, which means that they're going to pay more for the services or the products. But in February of this year, total credit card debt reached a record of $1.7 trillion. According to Intuit's Small Business Index annual report, average monthly credit card balances were 27% higher in 2023 than they were in 2019. What do you view as the driving force behind these record high levels of credit card debt?
Part of it would be growth in the
I think I
economy,
just gotta take
so that'll
it,
be
guys.
part of it, just that it's a bigger
I think I just
economy
gotta
and
take
a
it.
bigger number. I'm not sure what that is. You know, as you know, people had lots of extra cash during the pandemic from forced savings. They've spent that down, now they're borrowing. I'm not sure.
So if there was a rule to force banks to tighten lending, do you think the rule would drive businesses and consumers to alternative forms of credit?
Chips will stay high from
I do. I think, you know, if you raise lending costs for banks, then at the
down
margin,
there,
that will make
47.
non-bank lenders, you know, they'll get some of that business.
And if it becomes more complex or less convenient, then businesses will turn to these alternative forms like credit card. I can tell you that from
And have,
experience. Yes.
I need a bounce.
Well, I've called for the withdrawal of the Basel III endgame proposal entirely. Will you commit to an analysis of how bank capital proposals like Basel affect small business credit access and the small dollar lending before finalizing such
There's a nice
proposals?
little level right here that is
We
trying to hold
understand nature.
48.50.
We can find the tools to protect our
Literally.
world.
저희 블루카본 프로젝트는 생물 다양성을 높이고 공기 중에 탄소를 흡수하고 저장하는 효과도 있습니다.
Small business is the backbone. It's the bloodline of our
And they create the
economies.
jobs. That's
Yes.
right. I do agree. Yeah.
Okay. The chairman asked you for your thoughts on withdrawing or reproposing the Basel III endgame proposal. Have you specifically discussed withdrawing the proposal with Vice Chairman Michael Barr or the other governors?
So I don't want to get into our internal, doings, but I will say that I understand it is a live option. Again, we're not at a stage of being able to even have that
What's funny is I
discussion yet
looked
because we're
for-
not really.
just so you
we don't
guys
have a.
know,
We
I
don't have
looked for
a.
New York
We've got to
Community
decide first
Bank
what changes
credit,
do we think are
New York
appropriate,
Community Bank.
and that'll take a
I
little time.
looked
And then
for
the question
their,
will be
whatchamacallit.
reproposal. What I said is, when we get to that point, if reproposal is the right thing to do, we're not going to hesitate at all. It's a perfectly live option.
All right. In the current environment we have in politics in this country, there's not a lot that you find bipartisan agreement on, but I think you could find some agreement in withdrawing that proposal. Can you explain the importance of broad consensus at the Fed on proposals like B3E? Are you concerned with recent trends of disagreement among board members related to major proposals?
So I think we're going to get to broad consensus at the Fed. I do. I think it's very important. You know, this has been our culture that we try to find common ground, and we've been able to do that in the regulatory space, and I expect we will be here as well. And I'm committed to that.
Could it be that we're seeing this level of disagreement because of extreme measures that are being taken now that may not have been taken in the past? I mean, a total difference of opinion and understanding and philosophy regarding a free market economy.
I won't speculate, but I will point out that 4 of the 7 governors during the open board meeting at which we put it out for comment expressed real concerns, very specific concerns about the proposal, and said we would look at the comments when they came in, and that's what we're doing.
All right. Do you feel that they have validity in their concerns?
I was one of the 4, so yes.
With the few seconds I have remaining, there's a recent report of FinCEN working with financial institutions to query legal purchases made by American citizens. Has the Federal Reserve been instructed within the past 3 years by Treasury or anyone else to search Americans' legal transactions?
Not that I know of, no.
Okay, thank you. I yield back.
Gentleman from Illinois, Mr. Foster is recognized for 5 minutes.
Thank you, Mr. Chair, and thank you for being here.
Listening live to Fed Chairman Jerome Powell as he testifies before the U.S. House Financial Services Committee. Let's go back.
And separate from that, there remains a longer-term need for reconstruction assistance to Ukraine, which the World Bank estimates is somewhere north of $400 billion. Now, at the start of the Russian invasion, the free democracies of the world froze roughly $300 billion in Russian currency assets, primarily at European banks and financial institutions. And the Biden administration and many of our allies have recently taken the stance that those assets should be leveraged somehow to provide reconstruction resources to Ukraine. I support this concept, and I believe that additional action should be taken to ensure that we hold Russia accountable. But there are real concerns on the impact that this might have on central banking system, on the primacy of the dollar, the euro, and so on. And so my question is, have you seen just the act of freezing these assets and not seizing them, but simply freezing them? Have you seen deleterious effects on the primacy of the dollar, the confidence in the central banking system? Is there any visible downside from the act of freezing that's visible so far in the 2 years since we've done it?
I can't point to any. I can't point to any.
Okay, so that's an interesting observation when we think of taking the additional step of actually seizing them, that at least so far, because, to my mind, having them frozen is as violent as and as violent as seizing them outright. And so that's interesting that so far we haven't seen that. Now, in terms of the Basel III and so on, there is there's a frustration I've had over the fact that directionally the effects of these are clear, but the magnitude of effects are not. For example, if you talk about the effect on the prices seen by derivative end users of increased capital requirement, directionally it's clear. If you raise capital requirements, banks will withdraw from these markets to some extent. Other players will step in partly and take up part of the slack, and the spreads will increase and so on. Is the data that you've collected enough for you to actually estimate the magnitude of these effects instead of simply the direction?
I think it's really hard to get down to the micro level and try to assess that, because you're right, there would be multiple effects. But you do know that you know the direction, you know what the sign is.
That's right, but if you can avoid financial crises with a microscopic increase in prices seen by end users, that's one thing. If it's a very large difference in the price, so that the magnitude matters a lot when you're doing these balancing things. And a lot of it depends on, actually, you need a model for how the different market players will react. And is that really not going to be in the scope of the analysis that you anticipate from the quantitative?
I believe we have done some work on that, and I think the banks and other participants have done work on that as well, and come up with a range of answers. But this is there are just an awful lot of variables in these equations, so it's hard to say with any confidence. That's why it's hard to, the job of deciding the precise level of appropriate capital is a hard one.
Yeah. And now with 10 years, we've had two major crises with both a fiscal and a monetary response. Are there the lessons that you can learn now that, I believe, and it seems like your testimony indicates that we're kind of approaching back to normal now? And we've seen in the crisis of 15 years ago, we saw what many people thought was an inadequate fiscal response, that the fiscal response was, less than half of the output gap. And we limited by political will to do things. And then, of course, you were limited by the zero bound in what you could do for most of a decade, and we had a long recovery. And the comparison, to the COVID recovery has been very sharp, and it's quite remarkably put us right back on that track. Are there any lessons that you've sort of drawn about the importance of the getting the right balance of fiscal and monetary response to these shocks?
So we think about that a lot, and I think I have to start by saying it's too soon to really tell, because the answers you would give today, the picture looks very different than what it looked like a year ago. And so, and a year from now, we'll be looking back going and saying, we've learned so much more. So I think the pandemic is still writing the story of our economy right now, and we should just be prepared to be surprised with the next chapter, as we were with 2023, the very strong growth, the sharp decline in inflation while the labor market remained very strong. Very few forecasters had that, but we can talk about it.
Gentleman's time has expired. We'll now go to the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being here today and for your testimony. I'd like to start off, first of all, by completely echoing everything Congressman Barr said. A lot of us have talked about Basel III endgame, and I think Congressman Barr kind of nailed the thought process. I do hope you'll kind of withdraw that and take the comments you've heard from here and from so many others about the hazards with the current approach. But I'd also like to address one of the other practices by the Federal Reserve, and it's the practice of paying interest on excess reserve balances held with the Fed accounts. It's my strong belief that rewarding banks with returns for taking no market risks actually harms our economy, and it discourages financial institutions from lending money into the economy. Instead, they park it at the Fed. This has little to no impact on very large corporations, but it can have a crippling impact on small and mid-market firms. And we especially saw this in the long recovery as Dodd-Frank was implemented in the Obama years, transition to the Trump years. We changed some of that mindset with a lot of other policies, but we saw a strong surging economy. So our country would pay a price for this market distortion by the Fed in two ways. First, they're unable to obtain loans at competitive rates because the money is sucked out of the market. Frankly, a lot of them don't even have access to lending except through bank capital. So it forces them into other forms of capital, equity capital, and others. Second, they ultimately pay higher rates whenever they have these alternative means of capital. And so today I've introduced a prohibition on the IOER Act, which would prohibit the Federal Reserve from paying interest on excess reserves. By eliminating IOER, we can begin to return our economy to the undistorted free market economy it's supposed to have. The alternative is you could simply raise requirements. We see some of those moral hazards when you do it across the board with approach like Basel. So what's your case for why you should keep paying interest on excess reserves?
I didn't like how
as you know, we don't see the downsides that you're talking about.
You right
banks have a cost of funds, and they have what they can earn, and that's what really matters is the spread.
And if they wanted to do it, they could simply buy treasuries on their own, and they could do that independently. I suppose they can independently keep it at the Fed. But they don't have to buy, they don't even have to put it on their own balance sheets in the same way. They've got immediate liquidity with the Fed overnight account. So I don't see how that's different than what they could already do.
What I was going to say was, banks can earn a much bigger spread by lending to corporates. So
Great job,
their
guys.
incentive to lend
Great
is
job.
the same as
Great
it always
job.
was.
Great
This
job.
doesn't affect that. Really, it's their,
Great job.
they have a cost of funds and they have the ability to have reserves, but that's not going to, they're not earning a profit on that. So, or a big one, they can earn a much bigger profit by lending to small corporates.
Well, speaking of profit, I mean, the Federal Reserve isn't officially supposed to be a for-profit corporation, but you are supposed to pay for your operating costs off of positive cash flow. And right now, the Fed doesn't have positive cash flow. In fact, the Fed has negative cash flow. So it's not entirely unrelated that the Federal Reserve operated at a $114.3 billion loss in 2023 and currently is carrying a $133 billion loss on its balance sheet this year. So it's, not the right approach, I think, to be paying essentially that much out in excess reserves to banks that are holding capital in the Fed when they could be deploying it into the market. So right now, the interest you're paying banks and money market funds exceeds the income you're getting on the $7.6 trillion balance sheet assets that you have, to the tune of $133 billion asset. So, effectively, the Fed is operating at an operating loss. So what's the path back to cash flow positivity for the Fed?
As you know, for many years during the QE, large balance sheet period, we've contributed way over $1 trillion in net earnings to the bank, which to the Treasury Department. So you can't look at the loss without mentioning that we've been giving effectively $100 billion a year in profits every year to the Treasury Department. So the other side of that is when we raise rates to do the job you've assigned us to get inflation under control, when we do that, we absorb paper losses. It has no effect on our operating, the way we operate the Fed. And if we retained all the earnings we have, then it wouldn't be a problem. But we don't do that. We give that money to Treasury.
Thank you. And I think the last thing is I just encourage you to halt any effort to develop a central bank digital currency. It doesn't need designed, developed, and it certainly doesn't need established. I yield.
The gentlewoman from Ohio, Ms. Beatty. Mrs. Beatty is recognized for 5 minutes.
All right, we're listening to Fed Chairman Jerome Powell testifying before the U.S. House Financial Services Committee. Just kind of a little bit of a reset here, but the S&P up 0.9%. The Dow Jones Industrials up 0.6%. The NASDAQ up 1.1%. We have some news on New York Community Bank. NYCB halted for volatility again. Stock down 23%. NYCB sinks, they're halted for volatility throughout the morning here. So we'll have to see. NYCB has contacted investment firms into a possible equity sale. That's according to the Wall Street Journal. So again, some news for NYCB, the stock trading lower here. We'll have further reporting on that right now. Let's head back to Washington, D.C. Fed Chairman Jerome Powell as he testifies before the U.S. House Financial Services Committee.
Also substantiated by the Federal Reserve of New York and Michigan surveys that I've read. It also talks about job gains and uses the word robust jobs. So I want to thank you for educating us on that. And Mr. Chairman, I'd like the record to show that all of this also resulted during the Biden-Harris administration of making sure. So often we hear in this committee and other committees about what the administration is not doing and what our economy and jobs look like. Now let me move on to something that's very dear to me, and want to thank our ranking member for bringing it up, and that's the lack of affordable housing, which is one of the primary things that I hear about when I'm back home. I'm on more panels to try to explain what you do, what we do, or oftentimes what we don't do and why we have this. While I know that interest rate hikes have successfully brought down the inflation, rising rates have also had an adverse effect on the cost and the pace of housing construction and costs. Are you concerned about the effects that interest rate hikes are having on the cost of financing new construction? And the second part, how do you expect to control for long-term housing inflation that might have a potential rate cuts, how it might affect that?
So our policy to bring inflation down is to raise interest rates, and that works through several channels. One of them is probably the most important, is interest-sensitive spending, and within that you have housing and durable goods and things like that. So, you know, during the early days of the pandemic, the housing industry was about to all go bankrupt, and all of the facilities that we did really supported that industry through their critical time. When we're going in the other direction, when we're raising rates, housing is definitely affected. We understand that. It's not something we want to have happen, just it is the reality that housing will slow a lot when you raise interest rates. We've done that, and we're doing it for the longer run benefit of the people we serve to restore price stability, which is beyond value for people to have price stability. We get it that in the near term, that's higher rates, that's fewer sales, people are locked into low rate mortgages, we get all that, but we got to do this because it'll benefit the country and people in the longer run.
And I have a great appreciation for that. But also when I go back home to the district, what I hear a lot from agencies and individuals who work with advocacy groups, that the effects of interest rate hikes are not borne equally to all American households. So we hear that, and there's no doubt that low-income and minority communities are hit the highest or the hardest by these monetary policy changes. Black households and business owners have historically faced challenges with home ownership and access to capital, and they're disproportionately impacted by the rate hikes. Does the Fed, do you have anything that you could help me with this dilemma and how we can better achieve economic goals in a more precise and equitable manner?
So I think it's working. You see inflation coming down, and that's why I do think it's likely at some time this year, if the economy, proceeds along the path we expect, that we will begin to reduce rates. So that's really the path that we're on, and I do hope it works out that way.
And when you say, I don't have a lot of time, but when you say economy, what does that mean? Helping poor people and black people get more jobs, more money?
So our forecast is for continued strong growth, a continued strong labor market with wages going up and also with inflation coming down. So that kind of an economy.
Okay, my time is up. I yield back.
This could be a second entry up
The gentleman
here.
from
I'm gonna
Tennessee,
be
Mr.
watching
Rose,
this
is now
level at
recognized for 5 minutes.
48-40.
Thank you, Chairman McHenry and Ranking Member Waters, for holding this hearing, and thank you, Chair Powell, for being with us today. I'd like to start by discussing the independent automated teller machine owners or operators section of the Bank Secrecy Act examination manual. I want to ensure that financial institutions will not be discouraged from providing banking services to the independently owned ATM industry. In 2021, you made it clear that the industry does not automatically present a higher risk for illicit finance. I'd like to know what efforts have been made by the Federal Reserve to fully communicate that position to financial institutions across the country.
I will have to get back to you on that one.
All right. Thank you. Well, and so I might just add, listening to independent ATM operators over the time that I've served in Congress, I've come to understand that unfortunately, and it was in the Bank Examiner's Manual up until just about a couple years ago, these operators were identified as being extraordinarily risky, and that was causing them to be debanked in many cases. So I do hope that you'll take a look at that and make sure that we're communicating that to financial institutions and, most importantly, to the regulators. Chair Powell, Tennessee is home to over 1,000 foreign-based businesses that have chosen to invest in our state and create more than 160,000 jobs. These jobs are reliant upon cross-border financing provided by global banks, including foreign banking organizations. The Federal Reserve has long maintained the principles of national treatment and equality of competitive opportunity when regulating foreign banks and assessing them based on their U.S. operations. Are you still committed to these principles?
Yes.
And how will these principles be reflected as you move to finalize the Basel Endgame proposal?
So we have received a whole separate set of comments from the foreign banks, and we'll look at those, very much in that spirit and make appropriate changes.
Thank you.
Chair Powell, the Basel III endgame will incentivize firms to transfer credit risks off their balance sheets. One avenue for such a transfer is synthetic securitization, the framework of which must be approved by the Federal Reserve. However, it is my understanding that there is a substantial backlog of reviews and approvals of these securitization frameworks. It is concerning that the Federal Reserve is directed to is directing the risk transfer, yet also impeding it, in my view. Can you comment or can you commit to reviewing this approval process and taking steps to reduce the backlog of pending securitization applications?
So as I understand it, these transactions are becoming popular right now. There's a lot of appetite to do them, and we're not stopping them. We're just being careful because there were similar things that happened about credit risk transfer during the global financial crisis that didn't actually work out. So we want to make sure that these structures really do actually durably transfer, and we think that they do, but we just need to be careful because the last experience with these was difficult back in the last crisis. So it's just something that we're not intending to slow these down, and I think we'll try to get through it.
Is it a lack of available resources to apply to the approval process, or is it an intentional slow walking to make sure that every I is dotted, every T crossed?
I don't actually know, but I do. What I heard was, what I have been told is, we're not stopping these, but we're going to be careful with them and just be absolutely careful that they really do transfer credit risk in a durable, kind of sustained way. And that's the thing. And I don't think it's an intention to go slow or to have a backlog. It's just, and so I don't know what the staffing issue is. We'll check.
All right, thank you. As the Federal Reserve continues to consider proposals designed and debated in Europe, such as Basel III, has the Federal Reserve Supervisory Climate Committee or the Financial Stability Committee had any discussions regarding the adoption of ESG risks in capital requirements?
I don't know.
Has there been any discussion in other committees regarding the adoption of ESG risks in capital requirements?
Any discussion, I really don't know. Let me say that's not something we're considering, but when you ask me any discussion, I don't know.
It's not a priority in capital requirements.
To put it mildly, yeah.
Okay. Thank you. I see my time is running out. I appreciate your answers, and any further light you can shed on those matters, I'd appreciate. I yield back, Mr. Chairman.
The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, for being here today. I want to start just with following up on the exchange you had with Mr. Sherman. As I think you know, I led a letter with 106 of my colleagues with concerns about specifically the clean energy tax equity provisions in Basel. I appreciate your commitment to look at that. I wonder if I could just put a little bit of a sharper point on it. Can you look at that before the rule is finalized and potentially issue some sort of an addendum to the rule? The concern I have is the number of banks who are a little bit frozen right now, waiting for some clarity on that. And I'd prefer we not slow down the rate of clean energy investing in our country if we don't have to.
Everything.
I don't know. I mean, I think there's a proposal.
Just be patient, though. If you guys haven't done anything yet today.
We're well aware of the commentary, and we're going
to
react appropriately. I don't know that we can pull one thing out of line and deal with it. But we're making good progress, and I think we'll be back reasonably soon with some answers.
Okay, well, time is of the essence. Appreciate anything you can do. Second thing, good thing about going late here, you get to follow up. I want to follow up on your discussion with Congresswoman Garcia here. I really appreciated your comments on the 60 Minutes interview last month when you mentioned that immigration is a big part of the story of the labor market coming back into balance.
I might actually want to start looking at
now, generally, and correct me if I'm wrong, more immigration is generally going to ease inflationary pressure. Is that all else equal? Is that a safe characterization?
It's probably closer to neutral, actually, because people come in, they also spend, so it's not clear that immigrants coming in, they add to GDP.
Okay, so either we're going to get economic growth and or downward pressure on wages.
More workers, so that wages might go up a little bit less, but at the same time they're also spending. So we had this conversation. It depends on what you assume, but I think it's better to just assume it's sort of broadly neutral from inflation.
Okay, so I guess, and maybe you've answered the second question, but given as you all are using the Census Bureau data that is more conservative than the CBO data, and obviously we're all making estimates in the future. Can you speak at all to whether your forward views on economic growth and inflation How sensitive are they to your assumptions
These are
about
50
that
cents for
census
every
versus
dollar
CBO
right
data on
now.
what the actual level of immigration is to the country right now?
Just about.
I think the CBO assumptions
Or
are
50%.
would
So if you get a dollar to the
are meaningfully
downside from
higher and
48.50
would affect growth and
to
would be part of the
47.50,
explanation
which I think is
why growth
doable,
was strong last
you
year.
have to worry about your
and
time
would be a
decay,
reason
but that's
to
close
expect.
to,
I mean, it's not the
that's
main
pretty
reason,
much
but it
will
would
be
it would
50%.
definitely add to growth this year.
And it'll
I
go
wouldn't say
higher
that
as
we
it goes down
accept
in
one
there,
version
but,
or the other. We're studying. We study the CBO
now these deltas
numbers
are
carefully. We're
42
just trying to get to
versus
the right answer.
52.49.
And, but
so you're
I mean, I think the
obviously
CBO
gonna make
shows,
more,
and
but
they
you
say
gotta,
so, stronger
it's gonna
growth,
have to move a
higher
little bit.
growth,
If it gets going
more
again,
people. I don't know the per capita
in the
growth goes up,
afternoon,
but the
watch
absolute
for-
level of growth goes up.
I'm gonna keep my eye out on these.
Last question.
48s. All right.
I think there's a lot of good news in the monetary
those.
report that you all just issued
It's very
around
risky.
wage growth. We've
I
seen,
would, look
the
for
lower
time.
quartile of earners starting to close some of those historic
look for the
gaps.
following
We've seen
weeks.
minority groups and women start
So
to
you
close
could
some of those
pay
gaps.
the same price,
What I
10
didn't
cents
see, and I don't know if
for
this
next
is because you all haven't done it or I just didn't read
you
closely
know,
enough.
It is a
Have
dollar
you seen
below,
any
but that's
gaps
where we're
in
going. That's where I want to try to get this to,
regionally
is
within
around
the U.S.?
47.
Are there parts of the country that are
So I'm
seeing
gonna
stronger
actually
wage
keep my
growth
eye
than
on
others?
The 15th of March.
There are. I don't have that off the top of my head. I want to go back and if I can just, when I talked about immigration, I think that the immigration story for last year was part of the positive supply shock and was part of the reason why inflation came down. I was really asking the question over the longer run.
Fair enough.
And there, I think it's more
Fair
likely
enough.
to be neutral.
I want to appreciate that. I want to just close on this regional piece because the Atlanta
step
Fed,
away.
which is the best I could.
To, they're talking about New York Community Bank. All right, so if you don't know, New York Community Bank's going to raise money. I've been telling you guys, what's the problem? All these dumbasses on CNBC not talking about the problem. The problem is the banks. Bank term lending is over with. All right, the first week of March, like we have a week left. It's over with. All right, guys, give me 1 second. Let me do a little work. I'm here. I am wanting to see how we're going to play this.
We're going to step away from that
All right.
testimony from
I want to see how we're going to play this. I'm going to look around at some other regionals. I was looking at Zion Bank.
right-hand side of your screen, and that is a sharp plunge in shares
You
of
know,
New York
there's
Bancorp,
still
now
risk
down
out
some
there.
45%. As the Wall Street
Okay,
Journal
this is
reports,
our loom.
this bank
Again,
has
I think this is
contacted
our
investment firms
looming,
on a potential equity sale as it seeks
you know,
outside
headline
capital to
risk
shore up
is
its
the
balance
banks. The
sheet.
banks are to
These,
go
shares have
credit.
been down more than 70+% since the beginning of the year on concerns over the bank's loan book.
So give me
its
1 minute.
exposure to commercial real estate.
Give me just
I wanna 1
bring in now our
second,
Leslie
y'all.
Picker,
Our banking reporter who has covered this story from the outset with what we're learning here. Leslie, what can you tell us?
Hey, Scott. This is something that had, in part, speculation surrounding the need for an equity capital raise on Monday led to the decline in shares then. Now these reports, which I have yet to independently confirm, but suggest that New York Community Bank has been reaching out to investors to see if there would be interest. Now, the reason this is sending the stock lower is because this stock has already plummeted, before these headlines hit, more than 70% year to date. So they would be doing this equity capital raise at a very depressed valuation relative to where they started the year.
And I think it's only going to go lower.
To current equity holders. So that's why you're seeing such a significant drop in shares. It also comes, whether it's a coincidence or not.
We should have shorted NYCB. That's what we should have shorted. Nobody's going to pick this up. You guys have to learn, when you see these things, they're not going to pay up for them. They're going to pay down for them. Learn that. So that's my fault. I should have went and shorted NYCB itself.
History doesn't repeat itself. It rhymes. But all of this taking place kind of among the same realm is a concern for investors at this juncture.
Yeah, clearly, and we're going to keep watching this story. Leslie Picker, thank you very much. You'll let us know what else you hear. I do want to bring in our senior economics reporter, Steve Leisman, who's been watching the Powell hearing on Capitol Hill, because, Steve, the Fed chair has been speaking a bunch about bank stability. He's been asked directly about it.
How are they asking 470? That's crazy.
And how it's going to play
There's no way. 470? It can't go 470.
The Fed is seeing what's happening.
Somebody's
at
an
the Community
obvious
Bank
idiot.
As a systemic risk story, which is the way that it would sort of rise to that level. He was asked specifically about the office commercial real estate issues and problems on the bank. He called it manageable, was a term that he used. Also on the banking front, Scott, if I could just pivot quickly, these new proposals for higher capital levels at the banks through the Basel III proposal looks like it's in real trouble at this point, both politically and at the Fed. Fed Chair Powell talked about broad-based changes to that proposal being likely. Also even brought up the possibility of reproposing the entire proposal that's come through. Which
I'm a little upset that I didn't go after NYCB itself, guys. I kind of wish I went over that myself.
A lot of support, certainly on the Republican side, even some on the Democratic side, it would appear. So that's the big story. I'm not hearing him talk about this commercial office real estate issue at this point as a systemic problem.
I understand that, but I think we do need to go back to the time in which,
and
remember,
for anybody that's here,
said, we're
when this guy talks, this guy Judge,
and I think we need to
and they bring up all these points. Well, what about this? Well, what about that? No, motherfucker, it's the banks. Bring me on CNBC. Stop talking about stupid shit that doesn't matter. Excuse my language. I do apologize. I'm sorry. I got a potty mouth. It's my fault.
That maybe that deal should have been questioned a little more firmly at the time. It's easy to be Monday morning quarterback now, but the Fed does have oversight.
We haven't been Monday morning quarterback. We've been shouting since Monday, since last Monday, the Monday before that, the Monday before that. It's the banks, and it will always be the banks.
I've also seen the history of these things where some of the banks who step in to take over these problems end up, and by the way, a lot of these things are done burning the midnight oil, and sometimes they do miss things. And so banks who have stepped in to help out the Fed or the government in these
Okay, let's see if we can try and make a play on this. I'm not. This is crazy. Look, it's already halted again.
To be not big enough to withstand those issues, Scott.
So the stock is down some 45%. You know, the Fed chair is sitting in front of the House Financial Services. Yes, Steve?
Yeah, I do want to get, if you have a second, just to the monetary policy part of this report. I
was going to lead you there in that.
I'm going to try and get a bid out here, maybe like 10 cents on the $1.50.
Is still sitting before the House Financial Services Committee, obviously unaware of the latest headlines that are moving about New York Community Bank, not to overshadow the hearing today on monetary policy, which was largely stay the course. That's what we heard from Chair Powell.
Well, that is correct, but I did hear a little bit of a dovish twist or interpretation of how long the Fed will rate. And I want to go through a couple of the things he did say. He said, what we need is just a bit more evidence. He maybe sort of set the bar low for how much more evidence the Fed needs. Just a bit more evidence. And he went on to say, I just want to get the words right here, we're not looking for better inflation readings than we've had. We're just looking for more of the same, is what he said, Scott. So we've been wondering, what is this bar for the Fed to get confident? And he kind of gave us an explanation, I think, where that bar is not maybe as high as you thought. And he also reiterated the notion that he said before, not looking for inflation to come down to 2% before cutting. So I did see a very small rise, Scott, in the probabilities of rate cuts, a little bit in March and a little bit more in June on the back of those comments. So when we're trying to figure out what it's going to take for the Fed to get confident to cut rates, Powell set the bar maybe a bit lower than we thought it was before.
I mean, he also, I guess, puts a bit of equilibrium between the two ideas of.
I'm going to put out a limit order
too early, but there are also significant risks.
It's going to be way under.
We acknowledge that once again today, and that has to be clearly on the Fed's mind as well. And when we have headlines like the one that we're just talking about with New York Community Bank, they become a little.
I'm going to put it for like 35 cents.
I think that's right, Scott. But I
30 cents.
Here, and boy, I'd sure like to hear Leslie's.
We'll have to see where it opens at, though. I'm going to put one out for 10 cents. We'll see where it opens at, and I'll be ready with the order.
Is that what's going on at New York Community Bank Corp has been isolated to the New York Community Bank Corp. It's not really even the canary in the coal mine for the story about office real estate because there's sort of like these very unique things on the
No,
book of New York
but
Community Bank Corp.
he's such
I
an
feel
idiot,
like
too.
We're all looking for that canary in the coal mine, Scott. When
It's rates being too high. If they can't, obvious, you know, I think New York Community Bank, though, was because of the two apartments that they have on their balance sheet, and it's not really towards credit, and it lost so much money off of those earnings that the market cap came down, and once your market cap goes down versus your debt and your obligations, you run into a big problem there.
Is something that could stave off a worse outcome from this. I don't know the answer to that, but certainly the Fed chair does not sound like he sees this at the moment as a systemic and or cascading issue for the banking system.
Nor has the Treasury Secretary, Janet Yellen, because she's been asked directly about it too. And I think she used the words concerning but manageable, I believe was the word she used maybe four or so weeks ago.
Well, maybe, Scott, what we want to be careful as the time when the regulators aren't worried is the time when investors should be worried. I don't know the answer to that, but they are telling us they've worked with the banks. I will say this, Scott. I don't know that they have 100, you know, that they can really work their way out of this ahead of time, but it's not something that they didn't see coming. This has been out there for a while, several years now, in fact, and we also know when these things come due and the bulk of them come due, it is on the way. And when you talk about the need for the Fed to cut, this is part of that story, that the Fed doesn't have infinite time before all of this debt comes due, and it would sure be a better outcome if the Fed were at a lower rate for the refinancing of these commercial real estate properties.
Yeah, there's no question. You just don't want to be too reactive to a gathering group of problems. You could say that they didn't see the run on SVB. Maybe they erred in allowing this transaction to take place between NYCB and Signature at the outset, but it does raise more significant questions. Steve, I'm going to let you go.
So I do have a couple 10-cent orders out there.
At 1 o'clock
I would like to see a pop.
to
Let us be able to get into it because if they raise money, it's going to be for lower, not more.
I guess it's for maybe Jenny's misfortune today. Jenny Harrington, who's with us, along with Bryn and Joe, you own these shares of NYCB. And you had sort of pledged to stay with them for the time being.
I wonder if they're not going to open it up now. So you can see here. Let's see if.
So the position, thankfully, is down to a very, very small amount, for better and worse. You know, some natural.
No, it's actually on. So, sorry. Let me turn this down. Nah, it's good. I just didn't turn it on. It's actually lit up right now, believe it or not. It's actually working today. So. It was giving me problems, and I didn't plan on using it, so I kind of just let it off. Or what it is I didn't wash my face, and I didn't get dressed, so I'm just chilling. No hat, I'm not dressed up. So, and it's funny because it's on, and I thought about that. I'm like, yeah, of course you're going to stay on. Like, it's been on the whole time. If I just flip this bad boy.
That you just made about maybe the regulators shouldn't have let them acquire Signature. No, in retrospect, they shouldn't have. Because what that did was bump them into that $100 billion asset level. And what this arrogant management team did was fail to realize a year ago when they got those assets that they should have brought in other management who had experience at the big bank level. They should have brought those people in a year ago.
No, but that was all. So look, KRE, I'm watching this level here.
Scale bank better. Maybe they
up here at 48.50. It's going to bounce above. I'm out of those puts.
This share price at $1.86 is really upsetting. And part of it is because there's a
but
lot
I do
of
have some
credit
10-cent orders
that
for
deal in distressed
next
real estate,
week
companies that the investment bankers who are out there. And
on
there's too many parties right now
NYCB.
incentivized to pick
I doubt
off
I'll get filled on
NYCB's
those.
there's a lot of really
Is it
valuable
this week
assets
or
there.
next week?
Real estate, loans, mortgage servicing business,
Last
and there's all
50
these creditors
cents.
who know how to manipulate the share price very
Because
effectively.
I think they're going to pay down. I think they're done. They're
We,
going to
the
get
public
bought out
shareholders, get punished
by
the most.
someone else.
It's a huge disappointment.
I really think
you
that,
just
and
work
hopefully it
your
can
way
happen
out.
in
This
2
is
weeks.
also a reason when, I often
I
say
think
I'm
it's
trimming
paused.
position when it gets oversized. This is why we
I
trim
don't
positions.
know.
This was a great stock 2 months ago. This was an amazing stock.
Yeah,
a year
I
ago
wasn't
when everything
sure
else
what
was
we were
going
going to
down.
get. I
And you
kind of
just
was
trim when
like,
things get overweight because you
I kind
don't
of said
own
if
the
we
right
get
thing.
above 407, that if, we got to look for the rally. You know what I mean? I've been saying it. 407's our guy. Oh, look. We got. What's funny too is like look at 407, right? Like look at this. It has not made 407 support to the upside. It has came down, pulled back, tested it on the downside, and then broke it. And then you still have not said, let me take a rally. Oh no. 2 sailors are dead from an attack on something. God damn it. It's ridiculous. Pull back to 507 and rally higher. Nope, still haven't gotten that yet. So yeah, there was just news that I guess 2 sailors are confirmed dead or something. I don't know. So that's a shame. It's a damn shame. No, I get that. I think I said it yesterday. I just had this feeling that like they were just tossing it back because whenever there's a down move, right? Like I get it. We respect the move because of what we saw Monday at the end of the day, right? We saw Monday at the end of the day. I grabbed some puts there, and you saw them things go from 4 cents to 22 cents, right? In a matter of 10 minutes. But the pullback was off of nothing. Just profit taking alone, right? So unless like think about the catalyst when we have downsides. Like I get it. I'm not saying to not respect the move, but keep that in mind and come in with the mindset like, okay, like yeah, we had a sell off, we had a pullback, but for what? If it was for nothing and it was just profit, that means they should step to the side, low volume day, let them run it up, and they'll step back in at a higher price. Like 2 days, 3 days later, they'll just step away and then they'll step back in and start taking profits as the market goes higher. I've just always learned to do that, and that's why yesterday I'm like, this is just going to be everybody's going to get they're going to do this. Everybody's going to talk. They're going to get nervous. We saw it Monday, but for what? It's not like New York Bank came out and said that they got to get bought out like they're in a world of shit, and that there's actually a whole bunch of other banks that, or their insurance, or just something that is like an event, right? A catalyst. So without if there's a catalyst, then I'm buying, 2-3 months out, and I'm gonna swing it, and I'm still waiting for that. I told you guys I've been watching the VIX. I traded UVXY yesterday, but I'm still waiting for like the catalyst to start. Right? I'm still waiting for the catalyst to start. I don't know if we're going to get like a government shutdown talk. I haven't heard anything about a government shutdown. That's all we heard last week, in the beginning of the week. It's Wednesday. They have no money on Friday if they don't have a deal done. So, that's going to be my plan. I'm kind of just being patient. And if we just keep grinding higher, we keep grinding higher. CB. So I think they're halting this thing for good, guys. Shit, man. This thing ain't going to be back up. Fuck. This sucks. That sucks. I'm going to try and get rid of this order. I don't think it'll. Let's see here. I'm going to cancel that order. So that order's canceled. I don't think it's going to open up today. I really don't. I think it's going to be maybe not until tomorrow. Let's see here. Let's keep moving on. Let's keep moving on. Palantir, we traded that. PLTR. PLTR. Had a nice recovery. Coinbase. So I'm still kind of just waiting to see what we can get our hands on. I thought about taking a long on Coinbase, but I didn't do it. It was a little tough. I kind of want to see how I do Friday. But been doing really well. Other than the beginning of the week not being able to get out of that short on Coinbase, as quickly as I wanted to. Been doing really well this week. The percentages are coming in. I still haven't had that monster trade that I'm looking for either, though. Which it's gonna come. It might come right now. Look at the volume coming in there on Robinhood on that rejection. Oh shit. They're gonna get bought out. There was a lot that happened. They reported earnings, and 2 of the apartments that they have were huge, and they're having problems because New York City says that they want to be able to control rent prices. Well, if they say that they can't raise the rents, then and the people can't make money, and you're talking about a $1 billion like a huge apartment company. Oh shit, it's open. NYCB. Oh, pending news. So yeah, they needed to raise money. They were going to do an offering, is what they were going to do. Everybody's seen it coming because of their earnings and stuff like that. They got put in a bad place, right? So what happens is you got to think about what happens to the company and what they and all the like loans and stuff that they have at a price of $10 a share with whatever their market cap is. They go from 10 to 6, right? 10 to 5. They get cut in half. They can no longer function like a let's just say a $10 billion bank. They're now a $1 billion bank. So, there's a lot that goes on into it. I'm not a banker, but you can kind of get the gist of it. The liabilities that they have. They're not going to. I don't know. I don't know how to put it into perspective, but I do know that there was two things on their balance sheet that pretty much made up a huge lump sum, and I think the problem here with NYCB is not that like there was defaults or they had to raise money because their stock price got hit off of the back of earnings. So I think this is a little bit different than like SVB and stuff like that. So, but again, I've been saying this, Wiz. You know it. I've been talking about the banks every time we listen to CNBC. I say, why do they have these dumbasses on here? The only thing you need to worry about is where are rates when the banks start to need to draw cash for depositors. Where are rates? Are they at 4.5? Are they at 3.5? And how do we know that they're down enough that the banks don't have to sell at a loss. Sorry, just give me 1 second. See if you can regain this level on the SPY. See if we can regain it. This is obviously a resistance level up there. You got to watch for the volume. Look at this. Maybe we read this 15-minute chart as an increase. See, the volume kind of fell off up there. Let's see if we can get an increase in volume. I kind of want to get some lunch. Because I have not ate yet. I've literally been here at my desk all day. I have not ate. I've had a little bit of water, and I had 2 cups of coffee. So I was kind of just thinking about lunch, and as soon as I think about lunch, I'm like, oh, yeah, it's 1 okay, so it's 1 o'clock. I should be, see, this is when she finna start doing something. All right, I would watch this level whiz right there. See if it holds. See if it holds again. 510.96. 510.96. You might have a long to 513. I was going through the options change, or not options change, the options chain, and kind of like looking at the open interest, volume, and stuff like that. I know you trade futures. But
which is the great concern that we hear all the time. Steve Leisman, I'm going to get back to you. Not only what have we
513 looks like your call wall, I guess you want to call it, for the day. Now, actually, yeah. It might be 514 actually. No, we'll go with that. 123, 512. There's 260 at 511. So 512. Wait, no. 282, 512. Yeah. 512. 512. Banks should fail in our system. They say the dumbest shit on CNBC, I swear. They really do. Like, once they talk for so much, it comes to a point where they feel like they've said everything, so they just, like, gotta say something dumb as shit, just so it's not the same. So, I just want y'all to know, I don't know what I want y'all to know. If you could hit the like button, subscribe. I don't know. I gotta figure something out where I can get a stream get a stream like on and popping, right? Even if I can find a way to bring on a few other traders to like have like a screen split back and forth, like something. I don't know. But see, I'm getting hungry. I'm getting weird. So I need to go get something to eat. I might go get something to eat real quick. Let me see. Let me see if I have anything here. What I have here. If I can hold off. But I have something like 5 minutes away I could go to. Maybe I might grab a pizza or something. 440.97. The Qs. So let's do a check real quick. Let's do a check. Mic check. Mic check. See where the IWM is. We'll see where the indexes are. Come on. Okay, look at the Dow. So the Dow's going to start pulling back here. Dude, I have not looked at Goldman Sachs at all. I haven't looked at Goldman Sachs. Fuck, man, I feel like Goldman Sachs is up here. What is this? 396. 396. I still want to see if we can get KRE and stuff back down. Look, we're struggling up there. The thing is like, is this just a KRE thing? You know, that's why I kind of wanted to play KRE, or not KRE, but NYCB. I think it's going to be halted for the rest of the day. I think it's going to be halted for the rest of the day. They gave people a chance to get out, and now you're going to see it not open up until the buyout, and it'll be at like 0.000. And I'm going to be honest too, guys. I don't think this is like, I think this is only pertaining to New York. Because what they have is their earnings got contracted. The earnings didn't go so well. It literally just killed them. And now, you know, they're in just a world of hurt. If I'm $1 million corporation, and if I, for some reason, something happens, and I get cut in half to 500,000, what do you think? What do you think that means for all the debts that I have? Right, that were valuated at not only $1 million but 4 or 5 times that. Okay. If someone out there has more information, let you know, that can explain it a little bit better, that'd be awesome.
You know, we could all economy, but the stronger economy at a period where we have so much debt would most likely have a larger effect on what's going on in rates, especially longer rates. But everything's
I think it's
been
time.
moving
Let's
down.
do it. Let's do it.
Say anecdotal evidence if you please,
Let's do it.
but some of the recent spat of weaker data is what many investors are hanging their hat on. They're making a bet that that's going to continue. And if you look at 2s and 10s on one chart today, definitely we were making our low yields of the session right around the weaker data, whether it was ADP or the fact that JOLTS had benchmark revisions. The one traders really paid attention to was last month went from over 9 million to under 9 million. Now, you can call that all anecdotal if you want, but there has been no moguls, a lot of weaker data, and we've just been cascading lower. Then, boom, right before noon, the New York Community Bank story hits the wires, and that's what moved the market. If you look at the timing of interest rates against that stock before it was halted, the timing matches up perfectly. And I agree with everybody today. The line that all of my sources found the most interesting is we don't need to see 2% to start easing.
My guy,
And
are you
can
sure
say
about
what you
that?
want about that comment, but when you put it all together,
Are you sure about that? Look, that was just a gap fill. That's all it was. That's all it was a gap fill. Now what are we doing? We filled the gap. What do we do? Are we going to go lower? Let's find out.
And finally, if you look at the longer charts, 1 month on 2s and 10s, we're basically a little shy of a 1 month low yield close on 2s, a little longer term than 1 month on 10s, at least based on where they're set up now. And remember, we haven't had any big debt auctions. Debt auctions, when they start to show up again next week, you're going to start to see the influences because a lot of the good news is already built in the market. This weaker data based on what we see Friday is going to be imperative to keep these yields down where they're at.
All right, Rick Santelli with the rates picture out in Chicago. Thank you very much. Now, if that wasn't enough in terms of layers for you, we've got even more to lay on top of that because weekly mortgage numbers came out this morning and then demand shot up even as rates didn't move that much for mortgages. Dinah Olick is here to tell us the context around that story in housing and why people seem to be transacting a bit more.
Yeah, and still, Dom, mortgage rates remained stubbornly high, above 7% last week, and they're still there now. The average on the 30-year fixed is 7.03%, according to Mortgage News Daily. And as you said, it didn't really move last week. So demand for mortgages, though, from home buyers shot up 11% compared with the previous week, still 8% lower than the same week 1 year ago. But one note from the Mortgage Bankers Association in the report on that purchase volume, FHA loans drove a lot of it. Now, these are loans often used by first-time buyers because they have lower down payments. So the gains show just how sensitive these buyers are because rates didn't go up. They just stayed the same. So they also pointed out to new listings. And in fact, there were nearly 15% more homes actively for sale in February compared with a year ago. And that's according to a new report from Realtor.com. And homes priced in the $200,000 to $350,000 range grew by 25% from a year ago, outpacing all other price categories. So we're now looking at the highest inventory overall since 2020, the start of the pandemic. So the big question, Dom, is will all that new supply take some of the heat off the home prices, which are still hitting record highs?
This is the conundrum, housing, residential especially in this country right now. Okay, so let's go back to this panel. Diana, please stick around. Let's bring everybody back into the conversation. Peter Bookvar, I will start with you here again. The housing dynamic right now is one that is going to perplex and make the Fed's job that much harder. Shelter costs, you mentioned, and Mark mentioned it, a higher percentage of some of these inflationary stories. Is it enough, this dynamic, to get the housing market going to bring some of those transactions back? And net, will that be good for the economy and the rate picture going forward?
Well, to add what Diana said, you need a lot more supply. And you think, where is that supply going to come from? And I've been saying that you need baby boomers to start downsizing, because I don't see any other massive amount of supply that can come from other than that area, in addition to obviously new builds. So I still see this sort of sclerotic existing home market that could last. And for every new home that's not bought, I mean, a new one for an existing, or a new buyer buying an existing home, there's not paint or carpet or flooring or stuff that's not transacted in because no one's moving. So I still think that this is a very difficult situation. And even lower interest rates, I'm not sure if that's going to make the difference on the supply side.
Mark, how pivotal is the residential housing market and its unlocking, its unfreezing to the next step, possibly, hopefully, hypothetically higher for the U.S. economy?
Well, Dom, let me answer the question in a little bit different way, bringing it back to the Fed. If you look at inflation, and if inflation is above target because of the cost of housing services, you want to get that down. To Peter's point, you need more supply. And the way you get more supply is you ease up on the banking system. You bring down interest rates, allow the yield curve to become more rightly sloped so the banks can get out of the box they're in, so they can start extending more credit to the multifamily developers. If you talk to any multifamily developer, particularly in the affordable part of the rental market, they'll tell you their biggest problem right now is getting credit, any credit at all, and if they can get it at an interest rate that makes any kind of economic sense. So if you're sitting at the Fed and you're saying, how do I want to get inflation back down to target? I have to focus on housing costs. How do I need to get that down? I need to get more supply. The answer isn't high interest rates, it's lower interest rates. And by the way, I'm not arguing for aggressive rate cutting. I'm not arguing that. Let's just go quarter point each quarter and take some of the pressure off the system to allow more credit to flow so we can get more supply, so we can get the inflation back in the bottle.
Hey, Steve, you keep kind of moving your head around here. I feel like you're.
I just want to put in how much I love Diana and how great she does covering the real estate business, but it's only one component of the economy, and I don't think it's an important component. I don't want to downplay it, but I do want to point your attention, Dom, to the Business Roundtable survey today. It came out. It's up double digits, one of the biggest increases we've seen since 21. Expected CapEx, both up double digits. So when I look at the outlook for the economy, that plays another big factor for me in what's what the Fed ought to be doing and what the outlook ought to be. And there's this notion out there from Bostic, which is a little bit more hawkish here, which he said he's concerned about this pent-up exuberance that's out there. This Business Roundtable survey kind of goes along with this pent-up exuberance issue, which is something that the Fed has to watch out for. When they start cutting, is this an avalanche of investment that ends up stoking future inflation?
All right, Diana, last word to you.
I think there's an incredible amount of demand out there, and if you do get mortgage rates even lower, I mean, lenders are telling us that sellers now are buying down mortgage rates to get that buyer from 7% to 5%, and that's how they're getting buyers in the door. So I do think you're going to see this wave of demand if we do start to see those rates come down, and it's a wave that I don't even think the builders are ready to handle.
Interesting. All right, great conversation. We could go hours for this one. Peter Bookvar, Mark Zandi, Diana Olick, Steve Leisman, thank you all very much. We'll see you hopefully all again soon. All right, by the way, don't miss Steve's exclusive interview with Cleveland Fed President Loretta Mester right here on The Exchange tomorrow, 1 p.m. Eastern. Given everything we've talked about today, it's going to be a key interview. Must-watch TV there. Coming up on the show, OpenAI is firing back at Elon Musk's lawsuit, releasing some explosive emails contradicting what he has said about some of the inner workings over at OpenAI. We're going to break it all down and look at Microsoft's latest AI headwinds coming up next. Plus, we're in the midst of the biggest biotech rally in nearly a decade. That's according to Jefferies. We'll look at the FOMO, or fear of missing out trade. It's taking place in that industry and where we might see more M&A in the near term. The Exchange is back with that story after this.
This is The Exchange on CNBC.
Welcome back. Today, the OpenAI has entered a new round, with the startup now publishing
Just give me 1 second, guys. We're going to come up with some. We're coming in here at 2 o'clock. Coming up in at 2 o'clock. Let's see how we're going to play the rest of the day.
Blinken's Foreign Affairs Policy Board, where she provides input on a worker-centred foreign policy agenda, as well as a member
Need prescription eyewear fast?
The second half, maybe some time away. At some point this year, that could mean tomorrow. I mean, that is totally open-ended. So
it's like managing a young kid, right? We're going to do it sometime, maybe later this year.
I also just appreciate the view into the way that, Steve has to really parse everything that comes out of Jay Powell's mouth in order to understand what he's doing. And it is important, though. We laugh, but this is what traders are trading on. Hey, speaking of the trade, give us your idea of the way that the trade evolved after we heard from Powell.
Well, the market got going pretty well early on because the ADP numbers came in a little bit softer, and that was followed by 10 o'clock when the JOLTS numbers came in softer too, and there was a downward revision for the past month. So that gave a bid into the market, and that bid was also sustained, I think, because Powell, some people in the bond market were a little bit wary that coming into this, that Powell could perhaps reference some of the recent uptick we saw in inflation data. He didn't. He pretty much stuck to, as Steve said, the middle of the road. He kind of just, nailed the drive down the middle of the fairway. And so that combination of that data, Powell sort of maybe a touch on the dovish side, not as hawkish as people thought. That was enough to get the rally going. And then, of course, we got the news about the New York Community Bank. And again,
that's when we kind of went to, I feel like, lows of the
session.
session.
And then you see the sort of typical safe haven bid coming, particularly into 5s and 10s. And you can see the 2 years still above 450. It's only a little bit down on the day in terms of yield. But the belly is where people want to buy if there's any sign that the data is actually turning softer, and therefore that's going to open the way for potential rate cuts.
So kind of key that once we figure out what's going on with New York Community Bank Corp, whether or not we get this cash infusion, which is kind of floating out there in terms of some of the reporting, we're watching, we're kind of glued to our terminal to see whether or not we get a headline anytime soon. But how the market trades off of that will be more telling in terms of the real reaction to Fed policy, or no? You feel like we've got it?
I think we've got it, and I think actually, bear in mind, we've got the payroll report coming Friday, and then we've got CPI next Tuesday.
Right.
Now, if either of those reports are firmer, stronger, stickier inflation, this bond market's going to have to it's going to inch back towards the higher end of its recent range, which in 10 years is going to be back around 420, 425.
Which you've talked about a lot with us.
Yeah.
Hey, Steve Matthews, Michael McKenzie just now saying, Powell just hitting it right down the middle, kind of in the middle today. Would you say he was more hawkish? Would you say he was more dovish? Do we have to come out with some sort of different type of bird in order to describe the way that he was on Capitol Hill today?
Is he like a turducken? He's a little bit of everything?
So, some of the Fed people like to consider themselves owls because that's sort of a wise thing as opposed to hawks or doves. So that's the other bird that you hear. But I agree that he's very centrist. And the reason is when he speaks for the entire committee, the 7 governors, the 12 Fed presidents. And unless he's done a poll beforehand and talked to everybody beforehand, he really can't pivot on policy. So he basically has to reflect what the view has been, as of the last meeting. So it was a good bet that he was going to come across as being centrist, and he pretty well did. Although at an occasional point, you just saw the very slight touch of dovishness in terms of his personal view. He was asked about what more evidence that they needed to lower rates, and he mentioned that it would be just a bit more evidence. That doesn't sound like a lot. That sounds like it's just a little bit. So that was kind of came across as a dovish answer, but generally very much down the middle.
Having said that, Steve, he did say our policy rate is likely at its peak for this tightening cycle. I only bring this up because we've had guests. We've had Torsten Slok, who says we don't think the Fed's going to do any, over at Apollo, any rate cuts this year. We've also had individuals, Larry Summers and others, who say, wait, we could actually get a rate increase. Do you read that likely at its peak? Not the first time he's used the word peak, that they are done raising rates? Or again, do we have to say, ultimately, folks, they're data dependent?
Unless there's some huge inflation shock, it would be quite embarrassing and quite a change to start raising rates over again. So it's like, I think that their view is that they would much rather hold rates at the current level for a longer period of time than entertain the possibility of ever going higher. So it's like, he didn't 100% close down that option, but it's pretty clear that is not something that they want to do at all.
I did hear him, too, Michael McKenzie, reiterate the summary of economic projections, the dot plot, that when it came out in December, the median projection was for 3. Interesting 3 rate cuts this year. Yeah. Interestingly enough, we are starting to see the market move closer to that. Did you see, was there anything in there that convinced you that 3 is going to be the number today? That the summary of economic projections that we'll get next time will change at all? The median?
Sorry.
That's okay.
I just got to find some
I think
news. I got to find something. AutoZone shares get a price target boost.
And based on the idea that maybe they go June, September, and December.
Let's see.
Let me do the same. Hit the same question over to Steve Matthews while we get Michael McKenzie some water. Right now, what about you, Steve? Was there any indication that the next summary of economic projections, and again, we're reading tea leaves here, could actually show a difference in the median projection?
As of today, it would seem like 3 is a pretty safe bet, and you would have to wonder why would he bring the number up, which he did in the Q&A, unless they were kind of thinking that that's what they want to be, at the next meeting. But the one caveat there is the CPI next week really matters. It's like this in his prepared text, he didn't mention the January CPI. January CPI was not good at all. And if you get another surprisingly bad number, it would be harder to kind of write that off as an anomaly because you would have 2 bad numbers in a row. And so, that could change things. That's the thing to really watch. The jobs data, I guess it could matter a little bit, particularly if it's a really low number that's kind of suggests some softness.
Right, exactly.
You hear that, Carol? He's saying they're data dependent.
T-shirts and hats, we're making them up. Got about 40 seconds left here. Michael McKenzie, got you some water, which I've been there.
Appreciate it.
It's the best of us.
We talked with you about that 10, that kind of topping out at 4.25. Do you feel like we have hit, though, the higher end when it comes to the U.S. Treasury curve, that we know where the higher ends are at this point?
Yeah, we have, unless, as Steve says, inflation does shock to the upside. And I think when people like Torsten Slok are talking, they're saying they think there's going to be a reacceleration coming for the economy, and therefore wages do pick up, and therefore inflation picks up. And that's going to force the Fed
what that means, right? When TLT's rising, and we brought this up.
That would be something that would worry the bond market.
Pulling back, the TLT
and I do think
up.
until we see really for sure that this resiliency of the economy is beginning to be chipped away,
or is a sign.
The bond market's going to be cautious. And again, I spoke to some investors last week, and they said if it gets to 440, 450, we're definitely going to buy the 10s. But they didn't rule out a test of 440, 450. They weren't so certain.
Where are we going to make some more money?
It goes back to what we said with Mike McKee. Jay Powell saying the pandemic's still writing the story of our economy. We don't exactly know how this all lands. Guys, thank you so much. So appreciate it. Steve Matthews, economics reporter at Bloomberg News out there in Atlanta Bureau, and of course our Michael McKenzie, rates reporter at Bloomberg News. Tim here in studio.
Hey, let's get a check on the latest world and national news. We got Amy Morris standing by in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hey, Tim, thanks so much. A Russian missile strike has landed near Ukraine President Zelensky's motorcade in Odessa. It's where he's meeting with Greece's prime minister. It was very close, but nobody was hurt. In front of a House panel today, Federal Reserve Chair Jerome Powell was asked if he believes there won't be a recession.
There's always a meaningful possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Powell told lawmakers the central bank is in no hurry to cut interest rates until policymakers are convinced they've won their battle over inflation. After some overwhelming losses, GOP contender Nikki Haley is ending her campaign with a thank you to the American public and a warning for members of her party.
She was just staying in it for the money. She was just trying to rake out as much money as she
It is filled
could.
with followers, not leaders. Standing by our allies in Ukraine, Israel, and Taiwan is a moral imperative. If we retreat further, there will be more war, not less.
Haley indicating she will not
Not
immediately
less.
endorse Donald Trump.
No,
you can
you're
add
just
acne treatments to the list of widely used consumer products
governor.
found to contain
You're
high
a
levels of
politician.
benzene, a chemical linked to
Like,
cancer.
that's pretty
An independent lab wants the FDA to
I don't
recall
know,
the
man.
products. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
I want to look for a low volume bounce on the 15-minute chart. See if we can't pull this thing back. I want to see if we can't pull this thing back. Low volume bounce on a 15-minute chart, and look to see if we can start getting into some puts. All right, I wanted to get in. I wanted to get in up here on the SPY. I know I'm on the Qs, but I didn't want to just. I didn't want to rush it, right? Let's do it. Look at the volume coming in. What's going on? Is that the Lizinski bombing that Bloomberg just talked about? What the fuck is going on? Hold on. I don't have nothing coming through the wire. Fuck! How did I miss that? I knew I should have taken it up there. I should have taken it up there. I should have taken it up there. I should have taken that short up there. Let me see where an entry's at, and I'll let you guys know how I'm going to play this. Keep it going. Keep it going. Don't stop, can't stop, won't stop. All right, Dow, I think is your kind of your leader. No, it's not. It's actually making a low a day. Let me turn this Bloomberg off for a second. Unless it's not bothering you guys. Okay, nice support level. That's the Dow. QQQ. 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 So the Qs are leading to the upside. SPY. Alright, so I'm going to use the Qs. Alright, I'm going to use the Dow to give me the sign to the up and down. So you guys sense that? You guys see what I'm looking at? You see why I'm doing this? This is telling me what stocks are down the most and which ones are leading. So I can use this and go right to the other sector and get short the SPY off of the Dow, or get short the Qs off of the Dow. Like, you know, that's what we're doing here. That's what I'm doing. And I said it. We ran up, we filled the gap, and that was that. Let's see here. Where are we on the daily? We're down. So it looks like the Dow and everything could get down here. Let's do it. Let's do it. I'm going for it. I'm going to go take a tomorrow. I'm taking a tomorrow put for tomorrow. I want to see. I don't know. I don't know if we're going to get all the way down there. Like the Dow is. I think.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Shares of New York Community Bank Corp, they do remain halted. Last trade down 42%. NYCB said to be trying to raise equity capital to help restore confidence in the beleaguered company. This, according to the Wall Street Journal, citing sources. We'll have a whole lot more on this story coming up with our Herman Chen to discuss NYCB. As of right now, though, the stock is halted. The Dow, the S&P, NASDAQ, they're all rallying.
Reversal.
It is a
That's
Fed
hilarious.
Wednesday, and traders are breathing a sigh of relief.
Guys.
Jay Powell once again signaling that while a strong economy
will
keep officials on hold,
Wow.
he expects the Fed to cut rates this year.
I told you guys.
Up 37, up 0.7%. The Dow up 141, up 0.4%. The NASDAQ Composite Index up 141 points now.
There's your 0.5
just
support.
about 0.9%. 10-year at 4.09% with a 2-year that's now yielding 4.53%. Gold up 1.1%, 21.51 the ounce. West Texas Intermediate crude up 1.6%, 79.39 for a barrel of WTI. Bitcoin up 5.8%. Bitcoin at $67,000.
Oh, they did give
Again,
us the
recapping
pullback
U.S.
on
stocks
Oxy.
higher across the board. S&P right now up 38, up 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. You're watching and listening to an extended edition of
I wonder if I should
Bloomberg
get
Business
long
Week.
Oxy.
Tim Stennebeck along with Carol
Or
Nasser
XOM.
live on
That's
Bloomberg
the other
TV,
one I didn't
Radio,
look at.
YouTube, and on Bloomberg Originals. Well, moving to another big story on this Wednesday, and that, of course, is the aftermath of Super Tuesday. President Joe Biden and Donald Trump prevailing in almost every Super Tuesday nominating contest.
What's everybody watching? What are you guys watching right now? Guys just watching the indexes? What are you watching? Any news? Let's see here. Let me bring So I did try to look up credit spreads for New York Community Bank, and they didn't have any. So I guess they weren't big enough to have stuff like that going on. I hear you. I know, I did too, buddy. I went and had a salad. There was a salad in the fridge I got a couple days ago, and it was still in there. I said, okay, I'll take it. With some grilled chicken Caesar salad. It was pretty good. At least it filled me up. So that's all that matters. I haven't fell asleep this week. Apple's putting in a double bottom. Tesla. So I took a short on Palantir and KRE today. I think those are my only two trades. I want something for the afternoon. I just want something that'll set itself up nicely. That's really it. Like, I feel like I need to go back and delete, like, all these lines off of my chart and be able to kind of like see things clearly. I don't know. I wish I could get rid of these dotted lines that are up and down. Like, I wish I could get these up and down dotted lines to like make them like small circles. Like, I don't need them to be lines. I think it would look a lot better. Like that. Just like this. Just stay like that. But when I zoom in. So look, that's a retest. So Tesla right now is testing 179.98 or 179.97. Oh, you know what? I might call Blue Chew and see if they'll sponsor me. There's been Blue Chew commercials on CNBC now. First month free, Blue Chew. Might have to try them out. Let me see if I can do that. I need to get some views first. But maybe I'll give them a call. See what they say. See what the what is that? What's the not? See, why do I want to say catalyst? What the hell is it called? What's the criteria? What's the criteria to get a sponsorship from Blue Chew? Like, we can put together a funny skit. We could do a short. We could do a live. We could do a live for a week. We could do a live day and night with a couple shorts. Like, what's the criteria here? They'll probably be like, yeah, you need like 30, 40, 50,000 likes. You need like 50,000, 100,000 subscribers. We don't look at anybody past or under 50,000 subscribers. I'm like, damn, I'm gonna be a grandpa by that time, bro. So I appreciate your business, though. I appreciate you taking the time to answer my phone call today. If there was one positive out of this whole conversation, it would be that you took my phone call. All right, let's see. Amazon broke back down inside of its range. Let's see. Let's see here. Feels like it's just, I don't know if there's going to be a trade to be put on today unless they really start doing something. We have initial jobless claims tomorrow. Oh, look, did they reject it again? Bro, I'm so stupid. I'm so stupid. Oh, no. Guys, I literally said that I wanted to see what? I literally said it. I said I wanted to see a bounce back on the 15-minute chart. It bounced back. I got exactly what I wanted. What a fucktard, yo. And you wonder why Blue Chew won't sponsor you. That just really gets me when I say something and I'm like, yeah, this is what I want to see, and I don't, and then I go off. You know, my ADHD is so bad. It's so bad. So KRE here looks like it's getting ready to pull back. I don't know, guys. I got to be honest. I think this situation is a little bit different than the others in that I don't know if we're going to get a big move down with the regionals. Maybe. I don't know what You have to dig in and do the work. You have to do the work, like some of the inside work. You know, I just don't know if this is going to be the catalyst. I think you have one because somebody's running out of deposits and they need to raise money because they have, if they sell the liability, or yeah, if they sell the stuff on their balance sheet. Dude, look at that 15-minute chart. Did that take place right now? It did. Look at that bear flag. 48.50. And now you're getting the pullback. Let's look at the 18th or the 15th. 15. Oh shit! So they want so much more for KRE. Hold up. Hold up. KRE. 48. Yeah, they just went up like a lot, guys. They went up a lot. I'm not sure. Hold on, did they? It's weird because I think my ear just popped or something. If we could we get a few likes, subscribe. Let me know how you're doing today. Let me know what it is you're watching. If you have news, throw the news out. Is anybody here a real estate agent? Just curious if anybody here is a real estate agent. Okay, 47. So 15th. 47. I don't get it.
Diversifying into Bitcoin? Type GBTC into your investment account today, or ask your financial advisor about the world's
As soon as I say, oh, I haven't fallen asleep yet today. As soon as I eat, what happens? Alright, Coinbase. Looks like Coinbase is getting ready to fall. What's Bitcoin doing? Let's see if we got something here. Did we get a fish on the hook? Fish on the hook. Not yet. Not yet. I don't want to fight it. Beige book. Market's telling you beige book. That's exactly what it is. Dude. Alright, where are we here? Dude, it's just been raining and raining and raining. Anybody here from Beverly Hills? Like California, LA, Santa Monica? Anybody from Cali? We got any Cali people in the house? Beige book. The babe book. We call that Playboy. The Fed babe boy. Or Fed beige book. The Fed's beige book. Fed Kardashian. Fed Kashkari Kardashian. Fed Kardashian. Fed Kim K. No, Kashkari, he's, I don't even know if he's a voting member anymore. I don't think he is. Okay, industrial production. What you gonna do, Argentina? With your one little data point today. Look like Argentina a little lazy. They say, yeah, we'll just give you a little industrial production. How's that do? Is that cool? Can we just do the industrial production and we'll say the GDP for next month? Okay, cool, bet. We'll put that out. You know, it might be a few minutes behind. Okay, cool. I appreciate that. Freaking Argentina, bro. Let me tell you. With your one little data. They just finessing the system. We're trying to stay quiet. Trying to go unnoticed. Fly under the radar. That's what I feel like Argentina's doing. But listen, I seen some of the women that's coming out of Argentina. Okay? You ain't gonna be hiding for much longer. Can't hide for much longer. Fed Kardashian. Uh-oh. Okay, good deal. I got it. Fed beige book. Come on. Fed beige book. Let's go. It's stuck. It's stuck. Alright, let's see. I can get it for us. I can get that for us. Hold on.
Let's get right to the big market story of the day, Jay Powell's congressional testimony. Steve Leisman has those details for us. Hi, Steve.
Hey, Courtney, yeah, Fed Chair Jay Powell maintained the economy's in good shape, the labor market's strong, and inflation is
I might have missed it.
more evidence on inflation coming down.
I may have missed it. All right. 12.4. Was that so hard?
That inflation is on a path down to 2% sustainable. We're not looking for better inflation readings than we've had. We're just looking for more of them. And what will happen is,
All right. I'm still looking, guys.
forward, the 12-month inflation will continue to drop because it'll be
Fed's beige book. Now
Here we go. Sorry, guys. Let me.
economic activity increased slightly on balance.
Increase slightly on balance.
With 8 district reporting.
CM.
Modest growth in activity. 3 others reporting no change, and 1 district noting a slight softening. Employment rose at a slight to modest pace in most districts. Outlook for future economic growth remained generally positive, with contacts noting expectations for stronger demand and less restrictive financial conditions over the next 6 to 12 months. Price pressures persisted during reporting period, but several districts reported some degree of moderation in inflation. Consumer spending, particularly on retail goods, inched down in recent weeks. Overall labor market tightness eased further. Wages grew further across districts, although several districts reported indicating a slower pace of increase. Loan demand was stable to down, and credit quality was generally healthy, despite a few reports of rising delinquencies. Businesses found it harder to pass through higher costs to their customers, who became increasingly sensitive to price changes. Ongoing shipping disruptions.
They're always grinding shit lately.
Did not generally have a notable impact on businesses during the reporting period.
Smaller businesses to a bigger degree. So let's pivot then to interest rates and what the
It's weird.
For future economic growth remained generally positive, with
The guy from Benzinga.
restrictive financial conditions over the next 6 to 12 months. That's the Fed's beige book.
I need some hot stocks. Hot stocks. I need hot stocks. Palantir.
to finally a place where Fed has in some way really restored that Fed put. You know, we didn't have
Need some hot stocks, y'all. Need some hot stocks. Alibaba, let's try it out. Alibaba pulling back. Where's that 50-day moving average? Oh, I don't have it on here. That's why I don't like using this one. Go over to the charts. Go over to the charts, and then daily chart. I might go make some coffee real quick, okay? I'm going to go make some coffee so I can focus. It's 2 o'clock. It should only take me 10 minutes to make some coffee, if that. That way we can see what we might want to do for tomorrow. I think it's gonna come down to initial jobless claims tomorrow. The data sets that we have. So you have interest rate decision from the ECB. I expect it'll remain unchanged. I'm sure there'll be nothing to see there. You know, they talk about the curry trade a lot. I'm kind of wondering about Japan, if they're going to raise rates. All right. I'm really curious about that. You agree that it was premature to discuss interest rate cuts despite recent indications of cooling inflationary processes. Okay, cool. We know the deal. Imports, exports, building permits, balance of trade, exports, imports, initial jobless claims 215.
New York Community
Oh, they raised $1 billion. Wow. Dude, they raised $1 billion. But at what price? Hold on 1 second. I wonder if it was Steve Mnuchin, his firm. Halted after some resorts struggling banking on cash. We got that. 1 second. Give me 1 second. Look at KRE. This is why you gotta sell. This is why. See, I'm telling you, I think this is different. Matter of fact, I know it's different. This is not SVB. This is a bank that is struggling because their earnings got murked. They just got, they just got their valuation cut over in half. It's not like they ran out of money and needed to sell assets at a lower price. They're doing an offering. Still halted though. Still halted. So it's got to come back online and see what the market thinks of it. All right, this could be another opportunity short. I'm going to be honest. There's a lot of volume going to the upside. But if NYCB opens up and it's up and then we get like a gap up and then we could get that pullback and get that sell-off on KRE, I'm actually going to look for that. Things aren't okay. This thing is done, bro. It's done. I don't know. Like, because you're going to need to raise money right now, but what about the next time you need to raise money? Oh, look at that volume. That's some huge volume. Coming right into the 50-day moving average.
Regional bank ETF getting a pop here. DPS.
Can anybody see when this is going to open back up? I don't know if they even have a time for it to open back up or not. Come here, Abby. Come on, come here. She's wanting something different for cat food. I gotta go get her some cat food, but I want to wait a little bit. It's pouring its ass off out there, and I wanted to wait until the market closed. It's not like she doesn't have food. She has food. So I want to see where New York Community Bank is at when it opens. I want to. All right, press release, but that's still not open. Press release is shit. Who cares? You can say whatever you want. We know that. So they So Liberty Strategic Capital, Steve Mnuchin, who was your Treasury Secretary during the Trump administration, I guess helped them out with some money, about $1 billion. And did an offering. What happened with CrowdStrike? Does anyone know why it pulled back like it did? Come here, Turkey. Come here. Come here. Wait, she's just looking at me. She's gonna have to wait a minute though. Analyze. Where am I at here? Okay. Can you guys see that? Can you guys see that?
Market reaction to both Chairman Powell's testimony and the beige book just out. Rick Santelli from the trading floor in Chicago. Hi, Rick. Hi, Tyler.
Let me change the Dude, they've been coming out with beige book and stuff so late. It's 2:15 and here they are talking about beige book. Like, what's up with this late data going over stuff, CNBC? What if somebody was at home, like, needing to know what was going on and you waited 15 minutes after? So they're like saying, hey, go ahead, market, price in the move. We won't talk about it on TV until 15 minutes later. It's pretty sick. Volume. I'm just looking for the volume. That's all I'm looking for.
Joseph Otting to become
Alright.
the CEO of New York Community Bank Corp.
Alright, so there's a CEO announcement. There's a new CEO there. So it'll be under new management. That's not the problem. The problem's not management. This is more to do with the systemic risk in New York City saying that you can't charge X amount of rent for your apartment complexes. I think there's a little bit more going on there where people are fighting to make money because of where interest rates are versus where the cap rates are. Okay? And something happens, you know, that's a big loss. If they have to sell it at a loss, if they can't, you know, if they cannot raise rent to pay the bank back the interest and the loan, there's going to be some trouble brewing. And that's when it starts. Oh, breaking news. A half hour later. Oh, breaking news. It's so funny. Look.
been expected. Today's ADP jobs number was pretty much in line. That allows the story of NVIDIA earnings or Meta earnings to sort of dominate market sentiment, dominate market direction. So until Powell says something we don't expect, he's not going to be the catalyst. Something else will.
Now, there were benchmark revisions like there are to many data points. Today, it was about JOLTS. They did take away the 9 million handle of last month. I think that had some influence. What about New York Community Bank? My bond guys say that was the story. That was the big input into the buying spree that we saw just before noon Eastern.
Late spring of last year, we had the Silicon Valley Bank situation that obviously kind of expanded into a number of other regions.
You know what? We have breaking news. Breaking news. We're going to
You know what? You know what? We got breaking news. We got breaking news.
All right, Rick, thank you very much.
20 minutes
Rick.
later.
Yeah, we're going to get back to the latest chapter in the regional banking crisis. Leslie Picker is joining us with breaking
It's a crisis
news on New
now.
York Community
The banking
Bank.
crisis.
It's March again, Leslie. It's kind
You
of
hear
a weird
that?
feeling.
You see them slide that in there?
Definitely a weird feeling, although there
See
has
them
now
slide
been a
in the
press
banking
release from New York
crisis?
Community Bank Corp, saying that they have raised $1 billion from strategic investors. They list Liberty Strategic
What up,
Capital. That's
Leslie?
the firm managed by the former Treasury Secretary Stephen is selling an issue and other institutions that are making that $1 billion commitment in the company. Liberty expected to invest $450 million. Hudson Bay
she's
$250
doing the
and Reverence will invest $200 million.
she's doing the
part of the
what's
transaction.
whatchamacallit.
They're also announcing
Same
a
thing
new
as what
CEO
the
here.
one girl at
They
10,
are saying
11.
that Joseph Otting,
I know her name.
comptroller of the currency,
Something Picker.
will be the CEO of this firm.
Shit, I forget her name.
And Sandro Dinello, who was just named CEO
With
recently,
the eyelashes, the
within
extra
last
long
week or
eyelashes.
So, he will be named non-executive chairman, and as also part of
Looks
this
good on her, though.
transaction.
It's a good look.
We've got some details about the exact price per share of $2.
$2.
per
$2 a share.
NYCB is selling and issuing to investors common stock at a price of $2 per
I still
share.
think.
And there's
what-
a little bit of
when is it-
complexity involving that. They say
Let's
that
see
this
when it's
deal
going to
is
be
supposed close
unhalted.
on or around March 11th,
Huh?
subject to satisfaction of certain closing conditions and
March
the receipt of
11th.
any regulatory approvals required in connection with the rules of Otting and Dinello, although he does have that experience with the OCC. So an interesting kind of twist to this story here, as news and headlines that they were seeking out investors sent that stock price plummeting 42% today before it was halted due to news pending. But now the news out that New York Community Bank Corp has secured investment of $1 billion from a select group of private investors here. Guys, I'll send it back to you.
This is really interesting, Leslie, and I don't mean to put you on the spot, as I know this news just came out. You talked a little bit about Liberty Strategic, but Hudson Bay also with $250 million. That's the company that usually invests in retail real estate. Am I right?
Yeah, no, it's interesting because I had heard earlier today that the discussions involving a capital raise were skewed toward private market investors. That wasn't on my top list of investors to reach out to. I had gone to more of the usual suspects who participate in these types of deals. So it is an interesting kind of turn of events, seeing these investors who are not, as you mentioned, Courtney, known necessarily for investing in regional banks in this kind of manner. So, but given the state of things, $1 billion injection of cash here. You've got a CEO change as part of it. You've got Secretary Mnuchin taking a seat on the board, as well as 3 others, including Otting and some others from Hudson Bay and Reverence taking a board seat as well as part of this. We'll see. I believe that stock is still halted. We'll
All right,
see
maybe
what the investor response is once it resumes trading.
Leslie, we just had a guest on set, more of a market guest, but she was
Just
talking
give me one
about
second, I
the
wanna
action
hear.
What's gone on with New York Community Bank. She
I
feels
could
it's
watch
more of a
these two
crisis
for
of
like
confidence,
all day.
which in a way is a little bit frightening if it's not necessarily based on fundamentals and just sort of people losing confidence in a company. I know you've been very focused on New York Community Bank specifically, but is there something else or other banks or we need to be watching out for, sort of, as this contagion happens sometimes, like we saw just a year ago?
Yeah, the confidence issue is a critical one, especially in the banking world, where you kind of get this.
There was no
cycle
reason
of
that
events
she had to
where
make
you
that
have
face.
Depositors who can look at the stock price. The stock price is declining. They then get concerned, go take their
Did
money
you
out.
did
Then
you
have a
see her
bank
make
run it.
that
It
face?
kind of
Look,
feeds on
look. If you got to
itself.
rewind
That's
it.
not necessarily the case here. We haven't seen, and I don't believe it's in this press release that just
I wish
came
I could
out,
pause it.
but we haven't seen much of an update as to the state of deposits since last month.
She was
but
like,
we have
it was
no
like,
reason
it was
to
so
believe that they
bad.
have been running.
It was
One
so
of the
bad.
benefits that New York Community Bancorp has is that a lot of its branches are under
Like
different brands, like Flagstar, for example.
What I'm trying to say is she throws in the banking crisis, and then the faces, and
that's declining. My money is held at that bank because there is a little bit of brand differentiation there. But that said, confidence. If you're a bank management team, your number one job is to make sure that your depositors feel that they are confident having their money at your bank. It's important for regulators to feel confident.
So the S&Ps are back
here.
down to 510.
And this is a company that just last
consolidating.
week cited material weakness.
So
in
we
their
technically
internal
haven't really
controls,
moved
kind of
much. We
creating
opened up
more
where.
cloudiness surrounding that confidence
Let me
picture that they're trying
bring
to
this
project.
back up.
And so that's
'Cause I
one
know
of the
she's
key
not.
reasons why we are seeing such dramatic declines, more than 80% so far this year.
I forgot about
in
DraftKings.
New York Community Bancorp.
Fascinating
And Disney.
stuff. Leslie, thank you very much for bringing that with us. And I should clarify for the viewers, we now understand it is a different Hudson's Bay, so apologies for that if we made any confusion. But as Leslie, of course, just shared with us, that was breaking news, and the press release just came out, so we had very little details on some of those investors.
Yeah, you better
for that
get it
$1
right.
billion infusion.
Today, the SEC has voted to approve new climate rules requiring.
All right, they're saying that they should start trading again. I want to see what happens with New York Community Bank shares. NYCB. Oh, just so you guys know, Gary Gensler is on CNBC right now.
Is in compliance with regulations and disclosures.
So here is Gary
For
Gensler.
example, to having to raise more capital.
The money show. Gary Gens, the money
your viewers
show.
would understand me not commenting on any one particular company, but if I could just say generally,
Yeah, don't worry, because we
have a
already have
role
our
with regard
opinions
to
about you.
Public companies, and most of the largest banks in the U.S. are public companies, and so it's really our role is about those disclosures they make, and that they're making disclosures and have proper controls around those disclosures. And I know we'll get to climate in a moment, but that which we'll talk about in climate is also disclosure-based. But here, any one bank that's a public company, we have a role.
Guys, I
with
knew
regard
it.
to
Look at
the
Disney.
accounting,
I said
the
it.
disclosures, and
Remember
the
yesterday?
controls
What did the
around
markets do?
those,
The markets went
numbers.
down. Disney traded sideways. That's the second time it's done this, where it waited until the day after and started to sell off.
Take me inside
Look at that.
the SEC and tell
Boom,
me
boom, boom, boom,
what's
boom, boom,
going
boom.
on
And I already know
with
that
you
this
and your
happened because I
employees
thought about
to
getting
make
in
sure
on the
that all
retest
the
of this.
disclosures are what kind of.
I'll let you guys
go into
listen
a
to
kind of
Gary
overdrive
Gensler
here.
if
Do you
that's-
say,
if
well,
that's
we
what
better
y'all
start
want.
looking to see whether they've complied with all the disclosures that are required here, or what? What happens?
Well, again, you'll want to pull me into the news of the day, but if I can step back from the news of the day, we have a division of
The news of the
corporation
day.
finance.
Sound
has
like a-
hundreds of people in it that do disclosure review, and they look at filings. And if a company's going public for the first time, there's a long, more detailed review of it. If the company is already public and they're making filings, then the export staff look at that. And we have an office in that disclosure review team that also looks at the accounting and asks pretty important questions of the issuers about their accounting and their controls. And if you look back, because this is public, I can say, you look back at something like Credit Suisse 2+ years ago, our expert staff was really asking, do you have the proper controls around your accounting? And as it turned out, they did not.
Yeah, well, you've answered my questions. I'm going to move on now to the climate change rules that have just, I gather, been passed within.
Do
the last
you
couple
have
of hours.
proper control of
Straighten me
your
out here as
accounting?
well,
What does that
educate me.
mean?
Are these rules? Do these
Uh-oh, you might get a short squeeze on KRE.
There are literally hundreds of companies that are making information available, and now we'll bring some regularity, but I would say consistency and reliability to those disclosures. And I think it will help limit and guard against greenwashing as well. The companies that are bragging about something that might not actually be valid.
Very interesting. Chair Gensler, always good to see you, sir. Thank you very much. Thank you for taking
Thank you so much, Courtney and Tyler.
Thank you for taking my questions and artfully answering them. Appreciate it.
Well, further ahead on the show, in what was supposed to be a windfall for the U.S. government, American taxpayers are now paying $1 million a month to maintain a Russian yacht. More on that when we return.
Makers.
Welcome back to Power Lunch. Let's get over to Dominic Chu now for a market flash on Pfizer. Dom, what do you have?
All right, so Courtney, Pfizer's in the news today after a federal appeals court ruled in the pharmaceutical giant's favor with regard to a lawsuit brought by a conservative-leaning nonprofit group called Do No Harm that was brought back in 2022. Now, that lawsuit challenged a Pfizer-funded fellowship program designed to help boost the number of Black, Hispanic, and Native American people who could possibly attain leadership positions at the company. The appellate court did rule that the organization lacked legal standing to challenge that fellowship program, due in part to its inability to identify any party in particular that was actually harmed by Pfizer's alleged discriminatory practices. Pfizer did issue a statement praising the ruling and said it is an equal opportunity employer and that it's proud of its commitment to diversity, equity, and inclusion. It's worth noting, though, here that Pfizer shares did not notably react to these particular headlines, but the shares have been bouncing solidly higher after hitting roughly 11-year lows, Courtney, in Monday's trading session. I'll send things back over to you.
Got it. Thank you very much, Dom. Yes, shares up 4%, but perhaps not necessarily on this news of Pfizer. Let's get over to Bertha Coombs now. She has our CNBC News update at this hour. Hi, Bertha.
Hi, Courtney. The Supreme Court will hear former President Donald Trump's presidential immunity argument next month. The High Court says it will consider whether he can be criminally prosecuted for his alleged efforts to overturn the 2020 election.
I'm still here, guys. I just don't know what I'm going to do. I don't think there's much anything, so I'm not forcing it. I made some money on Palantir today. You know, I'm kind of just looking. I might look at the indexes. It's 2 o'clock or 2:30. I forgot to make some coffee. That's what's going on here. The indexes haven't moved. We opened up.
Former UN Ambassador Nikki Haley exited the race.
What is that? 510.55, and we're at 509.75. We've moved 50 cents. So just like yesterday, Disney waited a day after again for the second time. So keep that in mind. If you get a movement and you see Disney flat, not moving, see what it does the day after. It's been acting funny.
Score bottomed out at 686 back in 2009
Tesla
during the housing crisis.
might try to make this area resistance. I know you can't hear me over top of her, so I do apologize. Let me cut that off. This rejection level up here at these like pivot highs from yesterday, this pivot low from yesterday. Let's see. I don't know, guys. I think you might have to wait until tomorrow and see how the afternoon goes. It's not over until it's over, guys. It's not over until it's over. I don't think we've had like a real... Well, yesterday we had a decent day. You have Powell again tomorrow, but I think we pretty much got him out of the way. We have initial jobless claims tomorrow. So what I think I'm going to do is if we just sit here and consolidate... I may try and go for... Let's see. It just feels like this whole week is volatile. Like you could say like here, right? Like you bounced, you came back down, and you kind of just like consolidated there. You had, I guess you could call it an inverse head and shoulders. But look what happened. Boom. I mean, you did test the low of day. The next day, the low hit the low of day, roughly, or the close. The low of day hit the close, but still, like, that's kind of what I'm looking for. What are we going to be? What is the probability of where we're going to be tomorrow? We're above 510. We have not, once again, just like last time, we have not turned 507 into support. I wouldn't mind seeing a bounce right now. Let's see if we could get a bounce, get short, 315, 330. See if we can't carry a short into tomorrow. Even that, I'm not too confident on. I don't know. I may just have no positions opened. I may not have any positions open unless something really starts to unless something starts to show itself. BBAI, I think it was. BBAI, I think. Yeah, Big Bear. I don't know why or what this company does. Let's see. You know what's funny is like this is what I hate. This is where the controlling of the internet comes in, and I don't like it. Just because you agree or disagree with whether AI should be able to, create a photo of an accident.
Kids with guns, demons and
So
monsters
what?
next
What's wrong
to
with kids with
abortion
guns?
rights
Why is that bad?
terminology,
Why is there a negative
sexualized images of
mind
women
frame
in
around
car
that?
accidents, you name it, just stuff you
My
don't wanna
sisters
see
have
from
been
an
able
AI
to
image
use and clean a
So I
gun
guess
since they were little
that sort of goes
girls.
to some of my questions.
Since
I
they
mean,
were
what
kids.
what are users potentially typing in that these images come up? I mean, are they typing exactly those descriptions or something
But
else?
still, it
that
shouldn't be up
generates
to them.
something
Like
that
you
doesn't
should
match
be.
what
I remember when the
It's a
internet
little
was
bit of
like
both, but
early,
what I was surprised about is how
and
simple the prompts can be. So if I just typed
you
car
know,
accident,
I
that's
just
when those
feel
sexualized
like
images of women popped up. Just
whether
the
it's
term
okay
car
or not
accident.
isn't the
So
point.
not
It
asking
is
for
who
it.
are you to say what someone else is going to can
training
make a
data
picture
that
of.
the
You shouldn't. You should not be able to
trained on
decide
to basically be
what
able
someone
to
else
do
makes a
its
picture
job
of.
can be pretty
That's all.
nasty. You know, it's trained on
There
the
could be a
filter
reason
lot of
for
the time,
everything, and
sometimes
the AI won't make it
training
because
these
we told it
tools
not to.
don't cut out toxic
Oh, well, I'm
content
doing a
when it goes
project
into
for the
AI.
paramedics,
So
and yeah,
basically,
we need an
what
image
goes
of
must
somebody
come
in a
out,
car
and we're seeing
accident.
that happen here.
We're trying to show
So
what
I
really
could put
happens,
in
how your
an
shoe gets
what would
flown off,
seem
how
to
when you
be
get
an
thrown out the
innocuous
sunroof,
phrase.
when you land, half your
Children
shirt
at
gets
play,
ripped up,
and I
and
could get back
you have one
a
shoe
child
on, and the one shoe you have on is ripped up, and you
Potentially,
know,
I'm not saying that
like, come on,
Absolutely.
just like,
Absolutely, you could. You know,
I don't
there's
know.
really no rhyme or reason here. Sometimes it happens, sometimes it doesn't. And then also,
Just
even
wanna
if you
know
are
who is
asking
she
for problematic images,
to say
it will
what
return
images
them.
can be
So the
made and
guardrails
what
they have in
images
place, this
cannot be
engineer said
made.
they might be failing.
Who are you, lady?
Even copyright infringement. I saw Snow White on a vape.
Oh my gosh.
And?
So Steve,
So what?
obviously, you know, Google and
Oh my God.
which I have come out and talked about sort of
You
their
guys see what I'm
challenges when
talking
it comes to
about?
Gemini.
It's
What do we
crazy.
know from Microsoft? What are they?
Microsoft's not saying they take it seriously, they're looking into it. But what really stuck out to me here is the engineer that Hayden spoke with, his entire job is to he's on what's called the red team. His entire job is to find problems like this, flag it internally, and say, hey guys, we need to fix this, this is a problem. He allegedly did that. He's saying, I did that, I went through all the proper channels.
Problem
and
for
his
who?
superiors basically
Who's it
shoved
a
him to the
problem
side
for?
and
What
said
is
no,
the
to
problem?
the point where he felt like he had to go to the
What
press,
is the
where he
problem?
felt like he had to write a letter to the FTC, write a letter to Microsoft's board. And this reminds me of where we were, 12 to 15 months ago at the birth of this AI revolution that we're in the middle of. All the companies, not just Microsoft, Google, everyone's saying we're going to do this deliberately, we're going to be safe about it. Even more recently, talking about how they're going to protect election integrity. When they can't even do their own systems and police themselves, why should we trust them when they say that? It creates an immediate lack of trust when you know their internal systems are failing, and also saying, look, we're going to embrace regulation, but regulators have no appetite to do anything about it either. So they kind of get to do whatever they want.
It just seems so wacky to me that Microsoft is coming up across a very similar problem that we've been talking about with Gemini. It clearly sounds like it was flagged. Nothing was done about it. Steve, how hard is it to untrain AI or to retrain it, I guess, in this circumstance?
How do you fix it? But it's also, well, it's not how do you fix it, believe me, that is a problem way above my head, but it's also, you gotta, they're towing this line, because this is very similar to what happened with Google a couple weeks ago, but different in a different way, because Google, you could argue, put too many guardrails on there in order to be, overly cautious, I think is the way they framed it.
Politically solicitous.
Politically solicitous. Some people are calling it woke, whatever you want to call it. This is the opposite. There are no guardrails, or the guardrails are there and they're not working. For example, I tried some of the same things as Hayden did. Sometimes it worked and sometimes it said, I can't do that image for you. So it's working sort of, but imperfectly. And again, if it's being flagged internally and nothing is being done, or these people are being told, basically be quiet, that's not a good look for Microsoft, who, from the very beginning.
Oh,
said,
now
"We're
she
gonna be
says
responsible
near
for this,
car
we're
accidents.
gonna get
That's
this
so
right."
funny. Listen to this,
And
y'all.
if they're not doing it internally, they have to look at their
Oh
own
my
systems
God.
again for reporting.
This is so sick.
And really figure it out. When someone flags these issues, it's an issue.
And there's also a lot of divisions too, right? So maybe this is a bigger problem than just the AI division.
So let me come back to something you said a moment ago. When you did this sort of spot check over the weekend, and you put into the search engine, for lack of a better word, images of car accidents.
You should be able to get whatever image you want.
Created, not actual, but created AI images that include sexualized images of women in car accidents, correct?
Yes, or near car accidents. So sometimes sitting on the hood of the car, kneeling next to the car.
Sometimes sitting next to it, sometimes kneeling on it. Not literally in the car gory how I made you think I thought the picture was supposed to be painted, but just next to it. I am saying you guys should not be allowed to do that. I'm going to take that right away from you to have a picture made, a cartoon, a realistic image of what you want. I want it taken away because I don't like it. So you shouldn't have it. I fucking just want to smack this shit out of everybody that thinks that way. Who are you? Okay? This is not violent. I don't give a shit if it's a kid using it. I don't care if it's a kid, an old lady. I don't care. Type in what you want. You're going to get what you want. That's okay because you know what? Somebody will have it and that'll take money away from Microsoft. And I'm cool with that. If the kid gets in trouble by his mom or his dad for printing out pictures, this, that, the third, then guess what? He gets in trouble by his parents. But guess what? That doesn't mean that a young kid shouldn't live and be able to not have things like South Park and Grand Theft Auto like me. I turned out okay. I'm not a violent person. Tried to join the military. So this thing this idea that cartoons or an image or a game can make you act in such a way is just the most stupidest shit I have ever heard, and you deserve to get smacked. Like seriously. Snap back. Hopefully you get smacked so hard you come back to reality. Because a person's going to turn out how they want. Or how they're going to be. A person's going to be who they are no matter what. At the end of the day. A person's going to be who they are. No matter what. They're going to be a decent human being or they aren't. Plain and simple. I'm not going to say it's because of their parents. I don't think it's because of my parents. I think it's because it's just who I am as a person. You know? You can't force someone to be a certain way. So when people say, I blame their parents. Well, I don't know. My parents were good parents, but I still think that I could have still did a lot of dumb shit, but it still would have turned out the way I was. And that is respectful. I don't steal. I don't lie. Right? You know. I'm not out here causing chaos in this city. I don't know. You know, it's just my opinion. I'm with you. I'm with you, bro. I'm with you. I do too. And they focus on more so. I just, you know what? Maybe I'll have to get my E-Trade account up on here and I'll put it on this desktop because I have it on my other desktop too. Well, not my desktop, but yeah, my desktop, my Apple desktop. So let's see here. NYCB got me fucked up. Well, you shouldn't have been a dumbass, McCall Dixon. Why you a dumbass, bro? Either one, why didn't you take profits? Two, why did you even take the trade? You probably shouldn't have taken it in the first place because you weren't going to take profits because it was too small and because you thought it was going to go to zero. When in relation, you don't know what you're doing, McCall, because you suck. Okay, it's not that you suck. It's because you haven't been educated. We're talking about this guy here. And then number two, like I stated, this is not like SVB. This is not like First Republic. This is different. This is an earnings call that cut their valuation over in half. So it's not like they had fundamental issues where they said, hey, we're losing money. I need to raise money because we're losing money. No, we need to raise money because our market cap is so low. I got bills to pay and I can't pay it. I can't pay these $1 million bills at $100,000 price at $100,000 paycheck. This shit don't add up. What's this? Redditors buying NYCB. I don't know. I think they might have got short because they don't know what they're doing. You know, I don't know. I'm not sure. TSM gonna pump until earnings. I think TSM already had earnings. but it could. It could. But yeah, I don't know. I don't know what they did. I wouldn't mind asking them. I wish I knew. I wish I knew. CB. Did NYCB open up? There we go. I knew it. We should have got the calls. Look, it's capping up and pulling back. Wow. Okay. Shit, dude, this thing's going nuts, bro. Let's go. Let me get my flexible grid on. Let me get my flexible grid on. That just sounds funny. Let me get my flexible grid on. Shit. Come on, bro. Let me get my flexible grid on. Alright, so it's pulling back. Daily chart. Where are we? We are 336. Where did those puts go to? I think this problem is solved. So where are they going to go to, though? That's the question. So if they had $1 billion, here's what we could do. We could look at the market cap, and we could say whatever the market cap is at $1 billion. We could come up with the share price right now. But then again, that's not going to tell you really what the street is going to evaluate this thing at. You know what I mean? You'd have to go see the outstanding shares. Let's see, $5. Yeah, they probably went short, or they tried to go long. I don't know what they did. They definitely did something, and it didn't work. Looks like a bunch of chicken tenders. That look like a damn chicken tender, don't it? Dude, I cannot believe the camera is still on. It's still working. Let's see. Oh, Steve Mnuchin. There he is. There's the guy who, he's the one that gave him some liquidity. Finally closed my NVIDIA 900 call. NVIDIA 950 end of week. Got me some Victoria's Secret calls. Hopefully your wife bought enough of them big draws. Yeah. I eat groceries. That's so funny. Cold like a spring baby. Spy 25 end of week. Where we at? Where we at here? Where we at here? Let's see. Alright. Shit. I don't know why my chart was like this. 15 minute. Okay. I think it's halted again. It is halted again. It halted again, guys, at $3.35. Alright, so what's the plan here? What's the plan for NYCB? There's volatility here. We need to take advantage of it. Volatility is our friend. I just don't know what it's going to do. That's a huge gap up, and they're selling it off. They don't trust it. I think they know. I think they know they're done. Like, you can raise money, but that's not going to stop you from getting back to a, you know, 10, 15, 20 billion dollar company. You're done. Look at the daily chart. This was actually a big bank. You know, and what is that share price? 10.50, and it went down to $1. That's 90%. That's a cut. That's a valuation cut of 90%. I don't know. I don't know. I really don't. I don't know what to make of this. I just think the street's telling you everything you need to know. They come in, they do what they do, they get it figured out. Here we are with a nice huge gap up. Like, it opens up at 440, 450, and then it pulls all the way back. You're having a straight gap down, gap up to a straight, you know, it's just getting halted all over the place, and it's still gapping down. They want to get rid of it. This was a chance to get people out. I wonder if there was like a secret deal that was like, look, do a buyout, let me sell my shares for like $3.50, $4. Like, they're trying to get people to buy by doing an offering, and yet people are ready to sell this thing like a bat out of hell. I think it's doomed. I do. I think New York Community Bank is doomed. I think it's going to take a little bit of time, though. I don't think it's going to go under just like you think. All right, so 45.50 still. Wait, no, yeah, bid. Look, somebody paid 50 cents for these puts. Somebody paid 50 cents for those puts. That sucks. I mean, I guess that's not bad. They were trying to charge them down there at $1, so it doesn't seem that bad. We'll see what happens with this. Let's just keep an eye on it. We'll see what happens.
Use the cash to fund Ukraine's war effort. Well, turns out it wasn't that simple. Oligarchs are masters at hiding their ownership through shell companies and straw owners. Attorneys for Edward
Let's see here. Spy.
Russian billionaire say he in fact is Amadeus' owner. The U.S. says he's a proxy owner that emails from the yacht crew.
I want to look for 505. I wonder if we can see yesterday. You know what's funny about yesterday is the stochastics. We pulled it all the way back in a day, and just that down move we had yesterday on the hourly stochastics, not just like a 5-10 minute. So these have been pretty fierce moves. We got some support here. Maybe, I don't know, 508. It's a huge gap up, double bottom. Huge gap up, double bottom. Sounds like a rap song.
No surprise, are very expensive. Even if it's just sitting there, you have to watch it, you have to clean it, you have to maintain the engines, and that crew of 10, 12, 15 people, which is still a skeleton crew to maintain a 300-plus foot yacht, is necessary to retain its value, because ultimately the U.S. wants that money to give to Ukraine, so they don't want to destroy the value of the yacht. If there's an ownership,
This is ridiculous.
who's got the title to this,
Like,
that could slow any kind of sale. The U.S. wants to sell it now, put the money in kind of.
that's crazy that they think that they can just take the boats of other people's boats.
But at least we won't have to be paying $1 million a month to maintain it. So you're right. The actual proceeds
Like,
take months or years to actually receive.
they're not Putin. Okay, so here it goes. It's pulling back. NYCB pulling back right now. See. Fucking CNBC. Alright, it's 3 o'clock, gang. It's 3 o'clock. What are we going to do? Got 1 more hour left. Don't force it. If the opportunity isn't there, leave it alone. Wait till tomorrow morning. Let the markets close, do your work, and wait for a new day. A new day will present new opportunity. You'll get new news, all that fun stuff. Yo, I want to know how these people come up with 4,000 or 5,000 people on a live stream. How? How do they do it? Like, they just be sitting there talking dumb shit, too. Like, not doing anything. I just gotta get better. Just gotta get better. Alright, so let's scan the markets, guys. Throw me some ideas in chat if you could. Tesla, Coinbase, I don't know, Boeing, Shopify. I haven't looked at Shopify, PayPal, PYPL. Let's see here. Come on. Like, I love how they say those shares are sharply higher, but they're falling. Like, be honest. Say that there's a gap up, and they have since pulled back. Leslie Picker, senior banking reporter. I think just Leslie Picker. She's changed her look. She's pretty damn sexy. She's good looking. That's all I'm gonna say. She doing the damn thing. I'm gonna just say that. Oh, they're not gonna show her now because it's too early. But let's see. What's oh shit, Palantir, guys, too. Palantir. Feeling kind of squeezy. BBAI calls the move right now? Probably the opposite. It's probably the opposite. Well, crypto. Stop talking so long to sell their Bitcoin, messing up your put premiums. UNH lost $40 billion in 5 days. I love that meme. I wish I could have that for YouTube. I love it.
$1 billion investment in this company, subject to finalized regulatory approvals here. And according to the terms of this agreement,
All right, UNH. I know some of you guys don't really trade equities. MSOS. Dude, look at UNH. Remember Peretz? JC Peretz was talking all that stuff about it going higher and higher. Well, look what happened to it. Let's see. I've been seeing a lot of them real quiet lately. The struggle in small cap tech continues. Small cap tech continues. You know what's funny? There for a while, I didn't see any ads on Twitter. The first stock I ever bought. It was MYB back then. Oh, nice. 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 I haven't seen anything from Danielle DiMartino. What's going on here? Civilian month exploded. Jolts 2 riddled with revisions. The total job openings reached modest higher peak. Sorry, I know the chair is loud. Up, Silver Squeeze is back. Let's go. Let's go. SLV. What would you guys play for Silver? Wow, Silver's having a hell of a day. It's actually having a hell of a few days. Look at that. And we said Sunday that I wasn't really moving. Look at that wedge. Look at that wedge, y'all. I think I'm gonna buy it. I think I gotta buy it. Hold up. Let's see here. We're gonna go here.
The stock at $1.70 was probably gambling, or they had inside information, because the fundamentals here are absent a deal. This thing was done.
That is a good idea. $1.75. So Josh is talking about a deposit flight on New York Community Bank. I don't think that that's the case. I don't. Is it a deposit flight? I didn't think it was a deposit flight. I thought.
What's good about this is that this is almost Buffett-esque. This is the former Treasury Secretary of the United States now involved, and not only that, he took stock. In addition, the most powerful hedge fund manager in the world, he's taking stock. In addition, Otting, who's going to be the new CEO, worked with Mnuchin at, I think, Bank West or One West. So there's a history here of these gentlemen working together.
Okay, look here, guys.
This is not something where it's 09, let's throw a dart. This was like a nice lesson for them, and for people who had seen that before, understand that. So
I need some
there were
coffee. I'm
people
craving it.
that I guess won today by buying, $1.70, $2 prior to the halt. But I think what's good about this is that this is almost Buffett-esque. This is the former Treasury Secretary of the United States now involved, and not only that, he took stock. In addition, the most powerful hedge fund manager in the world, he's taking stock. In addition, Otting, who's going to be the new CEO, worked with Mnuchin at, I think, Bank West or One West. So there's a history here of these gentlemen working together at a commercial bank. This is not something where it's like just this, let's throw a dart. I think the equity's okay. The longer-term ramifications of this, though, I think should not be left out of the conversation, which is we're now going to take a second, third, and fourth look at a lot of other regional banks.
You should have already been doing that, Josh. This is what I'm talking about. They put these people on TV. They're so fucking stupid. Just because somebody's on TV, you guys, I say it all the time. Just because they're on TV, I'm telling you. You can be better than them.
But when you have so many banks that each have their own issue pile up, eventually it stops being a one-off
Like, no, I
situation,
think the case is that all you dumbasses forgot, not you guys out there, but the people on CNBC and all the talking heads, I guess you could say, is that they forgot what the real issue at hand was. That issue has not left us. The Fed getting in a room, coming up with a program to backstop these banks still is the issue. That or is still something to be hold of, because that's coming to an end this week. This week. So how long is it if that program is running, some banks are having some issues, they fix it quick, they raise the money, but what happens 6 months from now when they don't have the Fed? What happens 8 months from now, 10 months from now, and rates are still high? And then bang, there's one here. Boom, boom, like banks start popping up all over the place. That's why I'm watching credit spreads or credit default swaps. That's why I'm watching credit default swaps closely, because I'm going to put the trades on early. I've been watching New York Community Bank. I didn't see any for them. I couldn't find it, at least. At least I couldn't find it. All right, pounds here. I just don't know, man. Unless there's a small cap moving, I don't know of anything that's going to move, going into the afternoon, guys. So I would be careful. APM. APM? Wow. Did anybody play this today? Holy. Oh, here they are talking like they know everything again. This is an office problem, not a CRE problem. How do you know what the problem is? How do you know? How do you know?
Real estate, I believe, right now. They wrote him up in the journal. There are a lot of white knights. There aren't enough crises for all of these white knights to fund. So it's a little bit ironic, and it doesn't mean things can't get worse. But right now, when everyone's already launching the rescue fund, it's really hard to start panicking over the potential for systemic risk. But of course,
what is this? Where are we at? APM. I'm looking at the scanner real quick, and just don't think there's much going on, guys. I think I might start on some work here. Man, I have such a migraine. I don't know if it's because I haven't had coffee or what. Coinbase. I need to keep my eyes on that. Analyze, trade. Let's do this. I'm doing this. Dude, look at the SPY. Holy smokes.
There will even probably be some bank failures, but it's a question of how contained it is, and are the regulators, as they say they are, as on top of the issue.
This also falls on the shoulders of banking reporters
AMD.
like Leslie Picker, right, Les? I mean, you've got SVB.
AMD. Let's look at PLTR chart.
Exactly what all of the loan books look like, what the balance sheets look like, and what could be out there that you'll be reporting on in the not too distant future. We hope is not the case.
That's a nice Bible level there. 2540. 2540. Sorry, I don't know. I'm weird. Just trying to wake up a little bit. 2540, or that's a short opportunity. I don't know though, but it got to our target. That is the good thing. We set Palantir up there at that high 26s. Right, $26, $27.
New York Community Bank halted at $3.60.
They halted it again. That's so funny. Boom, double top. That's so funny they halted it again. This might still be screwed, you guys. I still feel like it's not over.
The price increases to the renters.
Wait, I don't know if you guys heard me or not. Google. Somebody from Google. There was news just on Google. It's not moving. Somebody got in trouble for compliance. I guess insider trading. So let's see here. The stock got halted. Google, I'm there. Okay, it's not moving. I was looking. That looks like the girl from CNBC. She hasn't been on today, but yeah, there's a car chase, I think. Sorry, they said New York Community Bank, and I thought that they were coming back online. Man, this sucks, guys. This blows. Come on, man. Let's see here. Amazon. Looks like it's getting ready to turn this level into resistance. I will say this on Apple, guys. Watch out if it breaks that level. If it starts continuing to break lows. Shit. Such a boring day, man. I hate days like this. I think Josh is completely wrong, guys, and this is my opinion. He may be right, but I think what he's saying right now about wages are outpacing inflation, I think that is a lie. Maybe people are working more longer. They have more opportunity with things like Uber, but they're not making more hourly. I don't think.
That's not serendipity. There's a genuine driver there.
The price
the
wage.
The other driver is that wages are now outpacing the growth of inflation. This is so important.
I don't believe it. It's just my opinion. I don't believe it. I don't believe it. I'm about to put on the chase, guys. I'm about to put on the chase. Give me 1 second. Give me 1 second.
yourself, what is the end game? You know, a lot of people say, you know, why do these people just don't give up? I always say, hey, they are trying to extend their last moments of freedom. They know eventually it's a gone conclusion. You're going to get caught, especially when you have so many different cameras on you. And I'm not even talking about the Skyfox camera. I'm not even talking about the cameras that the police have, but also just the cameras that are out and about in everyday life now. They're tracking really your every move. So you know you're going to get caught. This is
I know,
like
right, bro?
A script out of a Hollywood movie where you're going to have some big theatrics.
Dude, the market's not doing anything. At least this guy doing something for us.
And again, we cannot stress the fact, viewer discretion heavily advised. You just don't know what the suspect is going to do next.
Oh, God forbid he might light up a cigarette. But
with you here on Live Now, we were listening to Stu Mundell
parental,
a little bit earlier.
whatever the words are, I can't think because I need coffee or something.
He says that these vehicles can possibly go long.
Look how slow he's going. He's just chilling. He's like, yeah, I'm just going to work. Where I pick up my check. My baby mama bitching at me like she do every morning.
And again, everyone, we are watching with you on Live Now from Fox, all in real time. We like this setup here.
Yo, he's
with,
going so slow.
The graphics on your screen, because you can see exactly.
They should do this every
where they're
day.
At, what the
Just like set up
estimated rate
like
of
a
speed is, and
something that
again,
people
I've been
can
telling
tune
you this
into.
for the last almost hour now. The driver has no quit in him. And we don't know what's going to happen next. A lot of people, when they're watching chases, you maybe catch it in the middle. Anytime you might be there in the beginning, you might see it in the middle. The guarantee is always you see the end because you watch all the way to the end. You're committed.
I just heard a nice
How it
M3
is all going to wrap up,
go
and
by.
that
It
is
definitely had an
exactly
exhaust on it.
what we
May
do
not have
here
been an
for you on
M3, but it was
Live Now
definitely a
from Fox.
3,
We stay
4,
with the
5
shot
series.
as
Definitely a
best we can, as
BMW.
long
You
as
could
the
hear
evidence,
that
we have it.
that
We bring it to you right
that
here on Live Now.
that sound.
Um,
You know, I don't need to see it
There's
to
only
know that
one
that was a
time where I did
BMW
not
for
see a
sure.
conclusion to a chase, and I was talking about that because 3 hours, it was a stolen semi. If you can imagine that, it was a stolen semi in the LA area, and the chopper had to leave. They didn't have any fuel where they can safely go. The driver eventually did give up because they ran out of fuel, but it was one of those surreal moments where you didn't see a stolen vehicle, you didn't see a stolen motorcycle, you didn't see a stolen box truck. It was a stolen semi, an 18-wheeler, going through the streets of the LA area and then went out of
that's
LA.
a Mustang.
Yeah, now we continue on.
That again, not the video, but me in my place.
All right, everyone, we're getting a better location now of where they're at, and this is about an hour north of LA. So the driver continuing to make moves again, but again, about an hour north of LA at this time, and we are continuing to watch along just like you are, and you can see the location on the top of your screen, also the estimated miles per hour. Hoping that eventually the suspect will come to grips, will come to a conclusion here in a safe manner. But, you know, we've seen, you know, at any time, at least in this moment, the suspect does not feel like they have to do drastic movements. And I think that's why you're really not seeing the police heavy on the tail of this suspect. They're not, you know, weaving in and out, going through so many lanes trying to get out. We're looking at more of if you didn't know any better, you maybe wouldn't think that this is a chase. And probably a lot of people out on the roadways at this time, they might not know it's a chase right now. All right, Thousand Oaks area, and now that we are looking at US 101 North, continuing on. Driver continuing to make this chase, evading police at the moment, evading the law enforcement, And again, sometimes these shots go a little bit in and out, but for the most part, it's been really established in the moments. But you can still see that heavy rain on the roadways as the tires continue to kick up that rain water. And we're watching all in real time, just like you are. Thanks again to all our viewers for watching with us on Live Now from Fox. We are your destination for breaking news, top stories, headlines, and you can see just how fast we change topics, change feeds, especially when a situation like this brings it. We're saying, you know what? Oh, we have a police chase going on? Let's go to it. That's what we do here on Live Now as the stolen Lowe's truck, you see it, Lowe's Pro Supply, fast delivery, and yeah, this might not be the fastest delivery that will be going on, unfortunately.
I'm trying to think of this video, and I can't remember what it was. It was years ago.
For some people that in the LA area, and they could be looking at their tracking, and the tracking system could be going haywire. They could have had maybe 3 packages. They're waiting on Lowe's, and well, it's now. It could have looked about 15 minutes close to you, and now it's looking an hour away and more. Not the combo that you'd want to see if you're waiting for some home appliance stuff here. But we continue to carry on right here on Live Now from Fox. Again, the chase continues to happen. We thank our viewers. We thank everyone watching with us here on Live Now from Fox as we wait for more updates. What will happen next? What is this suspect going to do? We're hoping eventually the suspect will just give up. Because there's so many different variables that could happen. And you know what it is like on the roadway when it's slick. It's harder to stop, it's harder to maneuver, and if you have a big box truck like this, things could go south real quick. But again, yeah, you just don't know what's going to happen next here, and you feel for the people that may have had some deliveries today in this Lowe's vehicle. It might not be happening. So again, it looks like the suspect picking up some speed, though. We're watching along just like you are. US 101 right now in Newbury Park area, going about 75 miles per hour and picking up a little bit high rate of speed. Don't know if maybe they see some more police vehicles in the distance there or what it is, but again, the high rate of speed continues at this moment. All right there, just made some adjustments to the lower third there that you see on the screen and updating the area since they're way out of the LA area now, Ventura County, that we are seeing at this moment, and the chase continues on. Sky Fox high up above, you see the police vehicle there picking up the suspect at this moment, so the suspect seeing a clear shot of the police at this moment, and now we're seeing more vehicles coming closer to the suspect. A little bit more heavy traffic coming up here that we're seeing high up above. So we'll see what that suspect is going to do with a little bit of
I can't find it.
pitted against
I
them.
cannot find what it is that I'm looking for. It's going to take a deep search. I know that. Maybe.
Got a couple of big box trucks that are right around. We got more police now coming to the area as well. You
I
are
don't know
watching
if he
all
Dave's
in
Mountain
real
on.
time. Ventura County, California. Wild police chase continuing on as the suspect sees the police vehicles coming, does not want to stop. I've said it from the beginning. This suspect has no quit in them. Oh. Okay, that was real close. That
Things
was
getting a
real
little
close. We
exciting.
had some heavy weaving going on with that big box truck. And like I said, it doesn't take much for this truck
I'm not going
to
to
be
find
on
the
its
video.
side.
I don't think I'm going to find it.
Oh, that was close. Oh. Boy. Sorry for the my volume spiked there. That was a close one where we saw that go left or right, and I thought, okay, he's going to lose it. But you know, it's interesting now. Now we have a truck that's closely following this, Mr. Tire.
I know this is not it.
And it's
This
getting really close.
this
and
car
I don't
was
know if
actually
it's trying
nice.
to scare the suspect, but it's on its tail.
This video, it probably doesn't exist here. They may have
see what
taken the
happens
video
now.
down.
Okay, there's Mr. Tire. Okay, now the suspect going in the switching lanes, left to right. Now making an exit.
Stay on what the hell it
Leaving
is that I
Mr.
want to
Tire.
look at.
And now we're going on side streets here once again, and that's again what we say is the scarier. Ooh, man, just blowing through those areas, and you don't know if it was a red light. It looked like it was a green light. It was green, but again, the distance to stop now has increased because of the rainwater. And there's the police continuing to watch. Suspect just rode right past them. Now police continue to follow behind. But boy, that was a moment there. That was the moment where, oh, okay, here we go. Suspect hitting Mr. Tire. Mr. Tire was back in the action, and the driver just hit him. Mr. Tire got hit. He was back involved. And Mr. Tire now maybe continuing on. This has been a scene that we saw develop in the last 5 minutes. It's a battle of the big box trucks, and now Lowe's continues. Let's see what happens next here as Mr. Tire now following the driver. Okay, this is getting bizarre. Okay, we just saw a collision there, but the pursuit continues on. No damage that we can see at this moment to Mr. Tire. But wow, that was strange, and in a weird way, you could almost think that maybe the Mr. Tire vehicle is now following because they got hit, and is just trying to do their due diligence.
None of this is for me. I don't give
Maybe
a
try
fuck
to get a
about Ashton
license
Merchant gives explosive testimony. I don't care about never flying Spirit Airlines. That ain't for me. That's for you. Dude, I am like on a mission to find this video. It's probably not even on the internet anymore.
Now chasing the suspect
Whose car was
here.
it?
We are getting now.
Trust me.
Viewer discretion heavily advised. We don't know what's going to happen next, and they're going at a high rate of speed now, and there is a heavy rainwater out on the roads here in Ventura County, but the Mr. Tire vehicle is upset. Has the hazards on as well. Let's see what. Oh.
He get ready to flip.
Suspect now.
Look, yo, we got 2 box trucks right now. Stop it.
2 big box trucks.
Oh shit, this is really happening right now.
Well.
This is really happening.
Mr. Tire is trying to stop this vehicle.
Oh my gosh, come on, bro.
Oh, wow.
It's not
Mr.
working.
Tire tried to stop it, but the suspect
My stuff is
continues
froze up.
on. We don't know
This is
why
hilarious.
that person is involved here in this chase, maybe trying to be a good Samaritan and just stop this driver. Wow.
You trying to go hit the block real quick.
But now
He said I need to get wasted
that
before I
suspect
get locked up.
exited. All right, so we're
He gonna be
continuing
too
on.
hot to get
Ventura
served.
County, California, Thousand Oaks area. We're seeing some drama play out in real time here. It is 12:37 local time, and the suspect continues on. We don't know what that situation was about. Good Samaritan maybe trying to pull over themselves, maybe trying to get in a small fender bender. Who knows? Or maybe even trying to flip over the suspect just to try to stop it. But to no avail.
Yeah, I think NYCB is going back
continues
down.
on.
They can try all they want.
Watching with you
That liquidity
online
is
now
only
from
going to be
Fox. Sky
met
Fox doing
with
a great job
risk off.
following
You already
along,
said you needed to raise money.
during this
I don't
very,
care what
very
you do.
long police chase.
I don't care what
Viewer
you do.
discretion advised.
New
We don't know
board,
what's
it ain't going to
happen
make things
next.
okay. Something is wrong. So they're going to take the risk off.
I was saying earlier that we were hoping that the suspect is going to come to terms and just give up, and hopefully no one gets hurt. But oh, look at this. Blows the red light. That's what you don't want to see.
I don't know if he
That is
blew
not
that
what you
thing. I
wanna see,
walk faster
because
than that
That is
sometimes.
how major collisions happen. I was doing a police chase a couple of years ago. Oh, wow, a couple of years ago. It was 4 years ago. It was in the Tempe, Arizona area, and it was a chase like this where you thought, okay, things may never wind down, and then the suspect got off the highway, went onto the side streets area, blew through a red light. There was a driver wanting to do a left turn. Unfortunately, the driver did the left turn, and the other driver smacked right into them. Amazingly, everyone survived, but it could have been a lot worse. Okay, we are in some major side streets right now. We are in a neighborhood in the Thousand Oaks area, and we are watching this suspect try to maybe find its way back to the highway. That could be my only guess. Can you go back? And again, we are in the side roads area
Look,
of LA
she's talking about
County.
selling it now.
We are going
It's
to update
violated.
the,
You
lower
sell it,
third
exactly.
to reflect it as,
Jenny's
this
talking about
continues,
selling it. It's
to go
violated
on.
all the rules.
And, you just don't know what's going to happen next. We hope everyone is going to be safe, though. Viewer discretion heavily advised. Stay right
Got to
here
let the
with
dust
us
settle,
on
see
Live
what
Now
tangible
from
book
Fox.
value is. I agree.
As long as we have the shot, we're
What's a
staying
good
with it.
price for this thing? You don't even know what's going on. So I feel bad for anybody that's going to step in and try to buy this thing. It's foolish. It really is.
About 5 years
You know,
ago,
they may
I
have
was
a
part
good
of
deal
it,
on their
and
hands, but
it was a stolen semi.
that doesn't mean you do. Paying
And
for it
was
at market
surreal
price.
in that fact. But it actually
They could have raised money for like
outlasted
50 cents a
law
share,
enforcement.
$1 a share,
It
and got,
actually
you know,
outlasted,
X amount of dollars.
the police choppers
So,
as well. And Sky Fox.
Tomorrow is going to be bloody. Oh,
The
okay.
suspect eventually gave up, but I mean, it was
Fucking
longer than
dumbass.
3 hours.
We're not going to be bloody if we're
hoping it
above
doesn't come to
507. I'm
this,
just letting
but,
y'all know
you
that
just
right
don't
now.
know. Again, we are in LA County right now. The chase continuing on.
I need Netflix to announce increase in subscription price.
In the side roads of Thousand Oaks.
Okay.
We saw
Bull
a bizarre
trap. Don't
moment
fall
about
for it.
10
Spy
minutes ago
505 by end of the week. Okay, that's the end of the week.
Another vehicle
We're above
similar in
507.
nature, big
Dude,
box
these
truck
people are
trying to
so
stop
not people, but
and
even though
this
they are
Lowe's
people,
truck hit 'em.
I think they just say things and don't
then
think about it.
The other
It's a
box
bull
truck tried
trap.
to
What
get
is
in front
bullish
of the
about what's
vehicle
going
and,
on with this
you know,
with the
do a
markets?
brake check. It was
I mean, I
really
get it.
something. But again, we
not until we
continue on
hold
here on Live Now
505
from Fox.
or
When will it stop?
507.
We don't know. It's
Oh, we are at
almost like,
507, 508.
the
Hold
roulette
on.
wheel is spinning. The ball is around.
I thought
and
507
around. Where
was
is it
our
gonna fall?
middleman.
We don't know.
Yeah, it is. I'm right. Okay, I'm right.
And again, we're watching with you just like you are. Again, if you're watching on your TV, that's how I like to watch Live Now, on my TV. we're on so many different streaming
She's
devices,
talking about the heavy
but,
hitters
you
that
can watch
just
it on your
bought
phone,
some of this
your
bank.
laptop. You can watch us high up above in airplanes, whatever you like. We try to bring you
What's his name from
many
Citadel?
different live feeds and different breaking elements that can come in. And this is one that continues to be a big talker, right?
I still think it's
you don't know
probably
what
at
the
least north of
suspect will do.
$4, hopefully more than that. So I'll just keep getting out of it smartly. But that's where I'll let the dust settle. And I really would consider going back in. I'm extremely enthusiastic about the development of who's investing. I mean, it's Steve Mnuchin, it's Hudson Bay, it's Reverence Capital, which is Milton Berlinski, it's Citadel. Those are real heavy hitters who can actually really affect change at a company. And I think those guys can change the narrative. And the board is impressive. The new CEO is impressive. I like that they're keeping Sandro Danello along because they know that he's the smart one in the thing and knows everything inside that company at this point. So I think they're on the mend. By what magnitude that means, I don't know.
All right, we'll leave it there. I appreciate your time, Jenny, so very much. We'll see you soon. Jenny Harrington, Gilman Hill, joining us up next. We're tracking the biggest movers into the close.
I don't think that's going to happen. So we're hoping just for end of gas now. Because we don't want it to see it on its side. We don't want any other vehicles to be involved. But stay tuned because we don't know if there could be a reoccurrence of Mr. Tire. Speeds continuing to pick up now, 70 miles per hour. Going on the 101 North, and police continue to follow along.
Is California?
They have choppers high above.
LA County?
Sky Fox does, and we are watching just like you are.
Why does it look
right
rainy
here.
there
What
and foggy?
is
It look
gonna
like
happen?
just
How
like
is this
where
gonna
I'm at
end?
right now.
That is the question, and we all continue to watch. That is probably the biggest allure of a police chase. Like I said, it doesn't matter if you've been watching from the beginning, maybe, halfway or 3/4 in. You're committed now. You got to see how this is going to head.
Hey folks, this is John Najarian. On my 60-second video this morning, I talked about New York City Bancorp and how they're down 26% today, and a lot of that's because of their internal controls. Well, guess what? There are things that are beyond the control of many of these banks, and they are the commercial loans that they've already made. So if Letitia James' ruling that some of these banks have valued their assets at too high a valuation and those asset values come down, guess what? A lot of these loans would be underwater. So you need to be aware of that. Always be a proactive investor. Take a look at what's
That's
in
what I
your
was trying to tell
portfolio.
y'all.
Could this be March of
Their loans.
2023 again? Well, what Letitia James did could certainly push us towards that brink that we stared into the abyss last year. So be proactive. Make sure you understand the risks in your portfolio, in particular for some of these small and could this be March of 2023 again? Well, what Letitia James did.
This driver has no quit in them.
This driver's got no quit in him.
We've been on with you for longer than an hour now, bringing you this breaking news element of a driver that just does not want to stop. And I said earlier, I hope, they come to their senses. They're not going to come. If the senses were there, it would have been about 50 minutes ago. I'm just hoping no one innocent is hurt here. Look at that blue car says, you know what, I got to get out of here.
Hello, I'm Lisa Predichrome. I'm the proud owner.
Responsibility to protect the integrity of the marketplace. And for years, Donald Trump engaged in deceptive business practices.
We're getting really
and
hazy
tremendous
conditions
fraud.
here, and it's harder to
Donald
see the
Trump
truck, but we're
falsely,
doing our best. Sky
knowingly
Fox is
inflated his net worth by billions of dollars
staying on
to
it as
unjustly
best as
enrich
they
himself
can and We
his
honor
family,
that,
and to
as
cheat
long as
the
they
system.
stay on it, we're on it, right? I mean,
Donald
we are
Trump
going to
may have
continue to watch
authored
along with
the
you
art of
all
the deal,
in real time
but he
here on
perfected
Live Now from
the art of the
Fox. As,
steal.
this is a moment
This
really,
long-running
that
fraud
really
was
showcases
intentional,
what we're all about on Live
egregious,
Now, bringing you these
illegal.
breaking news
And he did
elements
all of this
as
after
it's
11
happening.
weeks of trial. We showed the staggering extent of his
That
fraud.
blue car, though, got
and
out of
exactly
the
how Donald
area
Trump and the
quick.
other defendants
They said, you know what, we know what
deceived
chase is
banks,
going on. We're out of here.
insurance companies, and other financial institutions for their own personal gain. We
I don't
proved
even
just
see
how
that blue
much
car anymore.
Donald Trump, his family, and his company unjustly benefited from his fraud.
All right,
Today,
rain continues to
the court,
come down
once
here
again,
in the LA
ruled in our
area.
favor, and in favor of every hard-working American who
Stu
plays by the
Mandel, that
rules.
we had the coverage earlier with Fox
Donald
11,
Trump and the
was
other
saying
defendants
that,
were ordered to
sometimes
pay
these trucks have a lot of fuel in them, and can go the
$463.9 million.
distance.
That represents $363.9 million in disgorgement.
So we're getting closer to dinner time out
$100
on the
million
East Coast
in
here,
interest,
and I know
which
we
will
have a lot of people
continue to
watching
increase
from us on the East Coast as
every
well.
single day
And if you have
until it
dinner
is
plans, you
paid.
might want to suspend them.
Donald Trump, the former chief financial officer of the
Stu
Trump
Mandel
Organization,
can't-
it's
Alan
just-
Weisselberg,
Like, I went to
the
know
former
I'm on live
controller
right
of the
now,
Trump
but like, this is
Organization,
sad.
Jeffrey McConney,
This is
are
sad.
each banned
You can tell by the way
from
she's
serving as an
talking.
officer or director
Like, this is sad.
of any New York company
is
for
sad.
3 years.
Almost 70 miles per hour on
Mr.
that turn
Weisselberg
there.
and
Not
Mr.
a good
McConney
combo. I
are
was
also
saying that
banned
earlier.
for life
Says,
from serving in a financial management
you
role
don't want
in
these
any
weather
New
conditions,
York
plus a big
company.
box truck, plus a driver that
Oh,
wants
nobody
to
puts their
leave
company in New York anyway. In any New York company.
Director of any New York company for 2 years.
Almost lost.
She got a
Donald
dick.
Trump
I
and
know
his
she
companies
does.
are banned from
She
applying
does.
for loans.
And she jealous.
New York bank or financial institution for 3 years.
Not only have to worry about the driver,
A new
but you have to worry
independent
about
director of
about the
compliance
I hate the white
drivers that
man.
are
will be
behind this
created
vehicle.
at the Trump
white man
Organization
took it
to
all.
ensure the company establishes internal protocols.
It is me who says what the bank evaluates your company at. It's me, not the bank. It's me. I tell you what your shit is worth. Not the bank, not you, me.
All right, new update, everyone.
Because I
The
know it all.
driver
Look at me, I'm
has,
standing up here in
come
front of the
back
TV,
to
so I know
Ventura
it all.
County.
I don't have any interior
Your
interior
discretion still
motives.
advised here during this moment, but,
None. I'm a
we'll
fair
see the
lady
driver go.
for the
Ventura
hardworking
County, LA
people.
County, Ventura
Because they
County
don't tell you in
cannot
school
make
when you
up
work
the
hard, don't
line
mean you're gonna
as,
make it anywhere. You're still
it
gonna
just
be
wants to
poor and
find a
broken, miserable,
highway.
with your back broken
Right
and
now
your
you're
ankles
seeing
hurting
it,
and your
US
hands hurting
101
from working out in the
North,
cold and in the
thousands
heat
continuing
all them
on,
years and still
all
not
in real
fucking do
time
anything with your life.
On Live Now from Fox, and we saw
For
some
all those
bizarre
people
moments earlier of another big box
Who
truck
didn't make the
trying
choice
to
to said,
stop
"Hey,
this
where's the
chase.
money being made? Let me
Trying to
go.
be the hero.
Let me go
It didn't
where the
work
money is
out.
being made."
The driver was able to maneuver out. But
Do
boy,
I
what a
want to
scene
spend my
that we are
life
seeing all play out in real time.
Giving someone else my time? Am I getting back? Am I being paid for my time? If not, change it. You got to change it. Just because other people do certain things in life doesn't mean that that's,
do the location.
You know, I don't know.
And also the speed estimated.
Some
as
people
well.
just
Gives
don't
our viewers
think.
Just a great insight.
They don't think about
of
it.
What's going on?
They
all
just do
in
it because
real
everyone
time
else
right
does it.
here. And you can just see how the weather is.
It don't mean it's right.
deteriorating.
Never be happy. Never be satisfied. Keep pushing. She a miserable old lady. I could be real nasty, but I'm not. And it ain't got nothing to do about Trump. I just really hate when someone else does something to someone else, and then they come out like that, like they're preaching this good, like they're doing it for good. They're not doing it for good.
And you know,
They're
obviously we
trying
don't
to
have
specifically tear
Could you
down
imagine
someone
if we
and
had in
ruin
real
someone
time a
else's
fuel
life.
gauge of this,
So
and we
you
would
tell
know,
me
okay,
what's good.
Probably have about another 300 miles, 200 miles.
He inflated. He
Maybe
inflated.
50
There
miles,
is
who
no
knows?
inflating. That's what the Fed's for. How much did I make today?
Look at the conditions
I made about
on that
320.
roadway as the tires
Nothing
continue to
big,
flip up the
nothing
water.
major.
And,
Enough to keep
you're
me going.
seeing just this this horrible weather.
A light
right
day.
now play out in Southern California, and the most active police chase that we've seen in a while.
How about you?
Play out.
How about you, Rashid?
Oh boy. boy, looks like Sky
It's coming.
Fox does have to leave.
It's coming. I'm gonna tell you that right now. Oh, it's got to go.
Sky Fox has to leave
show's
right now,
over.
So they are leaving the area, and probably because
Doesn't it look like
of
the
fuel
Ireland?
And
Oh shit. How about you pull out the markets today, Rashid? It might have been more. It might have been more than a little bit, like 320. Might have been like 340, 330, 315. I know it was a little over $300. No, it was not the FOMC today. It was just a political showdown. It was just Jerome Powell sitting down with Congress. You had a few people talk about rates, but really they just sat and talked. Really, a lot of it, like, I don't think any of it got anywhere. Like, they don't conjunctionally come up with this plan. Like, when they do these things, they just sit together. They just invite each other so they have a reason to get dressed up, get in front of the TV, and have lunch together, and talk about how bad the other side's doing. Like, they just talk. Like, really, that's it. Like, there's no actual work. You know, you'll learn that throughout the years. You're bankrupt. I will grow small after. Man, you not bankrupt. You got it all wrong, bro. I mean, Rashid might be bankrupt, but that don't mean that Rashid can't go get a LLC and start a fucking company. So you're not bankrupt. I mean, your name might be bankrupt, but that doesn't mean that you can't have access and be the sole proprietor to a company that is successful. Okay? This is what I'm talking about. This is exactly what I'm talking about. But you're going to do it. You're going to start. You just start somewhere. You start with what you got. You come up with ideas. Who got my money? The markets. You know how much money's in the markets? You know how much, like, I don't really have a goal on how much I can make, or, you know, I have a goal on how much I'm not going to lose, right? I know what I'm not going to lose, but who's to say the market, you know, after a 1% day yesterday, we barely moved today. So hindsight with the S&Ps, you know, we barely moved. Look at where we opened up, and look at where we are, you know, in conjunction, not with the gap up, but where we opened. Right, in conjunction, we opened up at 510.62, and we are literally 510.10. No, well, we just have VWAP, so we've moved 30 cents all day. So this was a nice consolidation day. What does this mean? Let's go look at a daily chart so we can plan for tomorrow real quick. Shit, we got 5 minutes already? Damn. I don't know, man. I really hate that lady from New York. Like, aside from Trump, think about all the other people she did that to, or came out, like, just to have that demeanor, like, look what I did. I took this motherfucker's money. Like, I didn't earn it. I stole it because I said so, because I said what it was worth. So give it to me. Just like Sam Bankman-Fried. Just like Sam Bankman-Fried, right? FTX, they say how they want to give everybody they want to give all the innocent people back their money, right? Okay. Funny how they keep opening up new cases with new lawyers. I get the corporation part for Delaware. I get that. I get the Bahamas. I get the federal case. Why New York? What are you doing, New York? They just out there trying to steal the money. They ain't and the more that goes on, that's more lawyers, that's more judges, that's more trial, that's more money that gets spent. That's less that goes back to the people. So let's get it correct. Okay, they are on this. They're doing this for a reason. They don't set people up. They don't set CEOs up. First off, they don't set the marketplace. They don't tell the bank. The bank says, yeah, this valuation, we could see that because of what multiple and at what interest rate is who to say what is valued at. Is it valued at 2% interest, at 7%, and at what time frame? At what multiple? Is it a multiple of 10, a multiple of 20, 30 times earnings? What is it? Who are you to say what that is? Miss Rashid should be ashamed. Should be ashamed. Because even if it was done to Biden, if it was done to Hillary, or to anyone, this is the point. This is the shit we got to get away from, because we're all equal people here. And this, I'm better than you, or I'm just gonna destroy your life. your kids, your family, all the employees that you have, all the paychecks and pay stubs you got to sign. I'm going to take that all. All those people are going to be without jobs. You're going to be without nothing because you want to try and take America back and get us out of wars and do this and that. Just because you want to be a president that I don't like. It's fucking sick. It's fucking sick. And that is the problem with America. And there could be some real anger out there. She could better watch. You walk in the streets of New York, might get that ass pop. You never know. All right. Do you have any loans? Guess what, Rashid? Right now, I have 0. But I wouldn't mind some. It just depends on what would I use that loan for. As of right now, in this point in time, I have 0. No car payment. Mustang. We got a 2018 Mustang paid off. My Dodge paid off. All right. That doesn't mean that I didn't have any loans, stuff like that. Right now, I don't have. I mean, I guess you could say a cell phone bill is still a loan. That's a contract. All right. It's about contracts. How many contracts can you get signed? That's technically not necessarily a loan, but it's a payment that's got to be paid. You know, you have to make Instagrams. Yeah, I do. I'm getting there. I'm getting there, man. You're right. I do. I'm getting there. It's just, it's just me here, and I say this all the time. There's so much that I want to do, or that I'm trying to do, and it takes a team to do stuff. I have, I have a couple of things in line, and it's just taking me a little bit to get there. Maybe I need to work a little bit harder, but then I wear myself out trying to come up with the watch list, trying to do this and that, like still being able to come up with the watch list, still come up with, still go over like what's going on in the markets. Look at us pulling back here. So I want to see 507, guys. We held this level today, 508 area. We held this yesterday. So we're climbing higher. We are climbing higher. Let's see what non-farm payrolls. Oh, that hurt my ear. Oh, man, that was loud. Sorry about that. Well, that's it. That's it, ladies and gents. I know. I'm excited. I know. Clap it up. Wiz, we were at 219, and it was bugging me. I'm like, oh, my God, 219? Like, just don't do it to me. Put me at 220. Just... like or at 218. Like 219, it was just one away from 220. So we're getting there. I hope you guys had a great day. I hope you guys realized the opportunity we had this morning was a little bit, but after that, if you tried to trade, you were trading just to trade. And that's not what we want to do. We want to trade when there's opportunity. Right? When you start to see that forceful selling, like we saw Monday, those are the days we want to take notice. Okay, because that's institution, right? That's institutions at work, and institutions run markets. Or, I'm sorry, institutions make markets. So right now, just a consolidation. I would look to see if tomorrow we start to get above this 510, 509. Yeah, 510. Got to get above that 510 level. I had a really good day today. I traded Palantir. I ended up not risking as much as I usually do, and I kind of got tossed around on Palantir. PLTR, that was a 100% trade. I traded something else, and I forgot what it was. Oh, I think KRE. I traded KRE, the banks. Right here. This down move here. Right here. So we traded this move here. We said look for that double top up there. We traded that move. You got, you could have got a better entry than me, so you could have got over 100%. I thought about the long today. I came in long-minded, but this level didn't hold. It reversed it, came back down. When we cracked this level, I took half off. That's what kind of messed me up. It didn't mess me up. It saved me. I was able to hold the position. So we traded that. Then I traded KRE, and I just traded the down move on KRE today. Palantir in the morning, KRE. Tomorrow I'm going to be a little bit more prepared because I did that stream last night. So I traded this right here. Right there. I traded that. That was my exit, actually, which was funny enough. That was my exit. So that's all. You're right. I gotta. There's a lot of stuff I need to do. I need to get some ideas going. I assume so that the helicopter left. The helicopter left.
I got to add this to the list now.
Yeah, they're not covering it. They let him go. Into the Matrix. Oh my gosh. I don't know. So what we gonna do? We're not gonna do what some other people do, and that's go after people and put people down and tear people just to, just for whatever motive you have. We're not gonna do that. All right. You guys have a good night. I think I don't know if I'm gonna have a live stream tonight. We could, unless something happens, unless we get some information about New York Bank. Maybe I'll do a quick video, and I'll get it recorded, and I'll get it put out. That's something we could do. I'll have maybe I'll have that later out this afternoon. I got a little bit of work to do. Yeah, it was the helicopter. I guess the truck went into like a place where they couldn't fly or something. So, you guys can look at that on Twitter. If you guys want, follow me on Twitter. If you guys want to get a hold of me, all of my information's in Twitter. If you guys want to donate to the stream, that's on the description. And if you guys need to get a hold of me for anything, go to Twitter right now because I'm trying to get get a website with an email address for you guys. But if you need me, go to Twitter or just let me know on stream. Let me know in the comment section. I'll get back to you. If you comment on one of the videos, you know what it is. All right, guys. Have a great night. You have a few earnings this afternoon, but not much. I think you have Costco tomorrow. So nothing really today, I don't think, other than Victoria's Secret, which I might put up right now just to see. What is going on there. VS, I think. Victoria's Secret. All right, guys. Have a great night. Don't forget about what took place today, right? Palantir with the nice upgrade. They had the Army deal. Semiconductors were strong. Banks have been strong. Everything was strong. I'm also looking at energy for a play. I mentioned that yesterday, and I said let's see where we close at today. And that's kind of going to give us tell on where, if we think we can get a nice like swing trade out of this. I'm looking for a swing trade out of like Oxy Petroleum. All right. Let's see. We held yesterday's high. You guys can see that we're holding yesterday's high. So I'm still a little like hesitant. I'm still a little hesitant here. All right, I'm going to get going. I just wanted to pull this chart up. You can see it's grinding higher, RSI lower, MACD. Not negative, but it's like flat. So, guys, that's all I have. You guys have a great night. I appreciate every single one of you guys. I love you all. If you guys have any questions or need me in any way, please do not hesitate. Comment down below. Hit me up on Twitter. I'll see you guys tonight, or I'll see you guys in the morning. Have a great night. Peace out.